So the most important thing when you start feeling a gambler's high coming on, or, you know, like a rush of hope or any emotions, is just get out, get away from the monitor, go for a run, go meet some friends, do anything, read a boring book. Just get yourself away from the screen and don't click. Some rules that can help you along the way, which Roger started also applying, are the 2 and the 6% rule. Now, you don't have to strictly use these percentages. It's the concepts behind them that are important. So the 2% rule says never risk more than 2% of your account on a single trade. So if you think about it statistically, we're all going to be right sometimes and wrong sometimes. Let's say a good trader will be right more often than they're wrong, but they will be wrong. So the important thing is that when you're wrong, you only lose a small portion of your account on that trade where you're wrong. So if you have an account, for example, funded with $10,000, don't risk more than $200 as your loss. So set your stop loss so that the maximum you lose is 200. Roger used to say, after he learned a bit more about trading, that if he loses $1 more than his traded plan, he considers himself a loser. So he was very strict, and it was a good way to live. The other one is the 6% rule, which says that you should never lose more than 6% of your account balance. If you add up the losses in your account in any given month, together with the amount you're risking on your open trades, they shouldn't exceed 6% of your account equity. Now, let's talk about getting rich quickly. Okay, it's one of the things that people love about Forex, about trading with leverage. You know, it's very exciting. You know, you want to get in, you've heard how much money your friend made, so you want to do the same. Unfortunately, such a thing doesn't really exist. And, you know, if it does happen to some people and they do get rich very quickly, the only reason it happened is because they took a huge risk on a trade and they happen to be on the right side of the market. But if you're risking all of your account on a single trade, the time that you will be wrong, you will get wiped out. It's a bit, it's really important to have realistic expectations about the kind of money that you can make. So what can help you with that is having realistic goals. For example, you can start off by trying to break even. So your goal would simply be not to lose more than the profits that you're taking. Believe it or not, this is a really good goal to have when you're starting out in trading. Once you've mastered this, and for weeks or months, you're able to consistently break even, you can move on to the goal of capital growth. And once you're making stable profits over time, then you can become more aggressive and target larger profits. Einstein said that the definition of insanity is doing the same thing over and over again and expecting different results. What did Roger do after his initial loss? He funded his account again with another $500, and he opened another trade risking $250. And again, some of the times he was right, some of the times he was wrong, and he ended up losing his whole account. So he realized that something needed to change. Actually, we had a chat at that stage, and I told him that learning to trade is like learning anything in life. For example, if you don't know how to drive a car, you wouldn't jump into a car and start driving it on a motorway. You would first take some lessons, start to get comfortable a little bit, maybe on a parking lot, along with a friend watching you. Then you would progress through driving through the streets, and then you would get out onto the highway. So with trading, with learning how to trade, it's exactly the same as learning anything in life. You're going to get back what you put in. So the more work you put in and the more of a solid foundation that you build for yourself at the beginning, the more likely you are to become very good at it and to have success. So back to my friend Roger. He started reflecting about his mistakes, and he wasn't used to failing at anything. Remember, he was a successful self-made shooter. So he started thinking about shooting and his journey in learning how to shoot and what steps he took. And he was wondering if he could apply similar steps to trading. So the first thing he did when he was learning how to shoot was learn about shooting itself. He learned about the different types of guns that exist. He discovered, you know, different shooting ranges around him. He found some clubs. He read books. He watched videos. And he generally tried to immerse himself in the space. So applying this to trading, he started talking more to people. You know, he started asking more questions of his friends who traded. He started watching videos online. He was reading books about trading. He found that actually there were a lot of hidden gems in books, and I would agree with that. It's really worth spending the time. So you want to really get a solid basis of understanding about what the markets are and how they work before you get in. The next thing that he did with shooting was he tried out different guns to see what works for him. He tried shooting at different distances and he figured out what was good and what wasn't. He applied the same logic to trading and he was trying out different trading strategies. If you don't know what strategies are, it's really worth taking the time to learn about how trading works and how you can get different strategies. A strategy is just a trading plan, a way of identifying what trades you're going to place and when you're going to exit. So you need to play around a little bit with find the strategy that works for you. And like with anything in life, you know, explore until you find something that's good. The next thing he did with his shooting was make a plan about when he would shoot, how often he would practice, how many bullets he would use with every single practice session. And he realized that he needs to have a trading plan with the trading as well, especially if for no other reason than to control his emotions. Next thing was keeping a trading journal. He kept a journal when he was learning how to trade. This just like he did it when he was training for shooting. So in this journal, he wrote his reasons for placing trades, like why he would enter it, what his target profit and loss were, his rationale for exiting. He also wrote down in case he changed his mind during an active trade and if he adjusted his stop loss and take profit. And this later helped him reflect on whether he was trading emotionally or not. He learned not to pay attention to his emotions, especially as he was competing in the trading competitions. He would get very excited, he would feel nervous, but he knew that this was only going to work against him. So he did the same with trading. He became aware of his feelings. He had a trading plan, and then he didn't really care what he felt. As long as he was feeling something, he knew that he needed to ignore it, and he stuck to his plan. And obviously the last one being discipline. If you want to succeed at anything, like all professional athletes, you will see that they're disciplined. They keep practicing, they keep trying, they keep working hard towards it. So if you put the same logic into trading, you're going to get good results. Now, obviously, this didn't happen overnight. Like with anything in life, you know, you tend to go backwards and forwards. Even if you look at price charts, you know, they move up a little bit, then they move down, then they continue up. So he was advancing a little bit, then he would make some more mistakes, but keeping a journal helped him to reflect on his mistakes and made him realize where he was going wrong so that he could correct his course. Now, a few important things that any beginner trader should consider when starting out their trading journey are things like which broker you should choose to trade with. And we're exactly in the right place to talk about this here at the Expo because there are loads of brokers here, so you have your opportunity to choose. You want to check out the licenses that a broker has because the more reputable a license a broker has, the more secure, let's say, your funds would be with them, and they need to honor certain higher standards of etiquette when dealing with clients. You might want to check the account types that they have. If you are Muslim, you might want to have an Islamic account on which you're not paying swaps. Next things that are really important are spreads and commissions. Yesterday, we had some people coming to the booth who were asking us what spreads are and what commissions are. So I was planning to explain it, but since you guys seem to mostly understand what it is, it's really important to pick a broker who has tight spreads. The spread is the difference between the price at which you buy and the price at which you sell. As soon as you open your trade, the reason you see it red is because of the spread. So you want this to be as small as possible. The second common charge that brokers impose are commissions. And this one is a bit less in the focus these days, but you really need to look at this as well. So usually commissions are quoted per lot, and good commissions might be something starting from $1 per lot. Expensive commissions might be going $5 per lot. This is each way. So as you open, you'll be charged $1. As you close, you'll be charged $1. Next, you want to look at the swaps, which is what you're paying to keep your trade open overnight in case you get stuck in a trade that you're holding for a long time. You want to go with a broker who's not going to charge you for deposits and withdrawals or where you're going to have minimal fees. Obviously, you want good support. So in case anything goes wrong, you want to be able to reach the broker and say, hey, check this out. What went wrong here? You might also be used to trading on a particular platform. So you can look for a broker who has the platforms that you like. And of course, if you're a beginner, you want a broker that has good learning resources so that you can use that to your advantage and tap into that. I'm happy to say that at FXView, we actually score really well in every single category. True story. And if you have some other categories in mind that I didn't mention, come by our booth number 20, and we can chat about that as well. In fact, if you want to discuss anything that I mentioned today, we would love to meet you in person, and we have loads of giveaways. We have a spin the wheel. So there's cool prizes to be won. Other tips for trading. Opportunities in the markets are always going to be there. You might get excited and feel like, wow, I need to jump in now. This is really, really great. If you still haven't reached where you want to be at in your trading journey, it's better to stay out. You know, if you don't feel quite right about a trade, you know, you think you should be trading that, but you're not quite sure, it's better to stay out. You know, you can always take on a new risk, but you can't get your money back if you place the wrong trade. Next one is having a trading strategy. So this simply means that you have a plan before you enter a trade. As soon as you open that trade, you predetermine what you want to profit, what you want to lose on the trade, and you don't deviate from this plan. Remember, emotions are going to pop up and they're going to tell you like, increase your risk or like take a smaller profit quickly, but this is really dangerous. In fact, one thing that helps is really becoming very, very disciplined and not letting yourself deviate from your plan. It's also important to have realistic expectations. So if you're expecting to double your account within 1 or 2 days, this is simply, you know, it's returns of like 200% within 2 days. This is completely crazy and unrealistic. You wouldn't expect that if you kept your money in a bank. Like if we keep our money in a bank, we might be happy with making 5% a year. So let's get a bit realistic about the expectations that we have. That will reduce the risk that we take. If we want to get rich overnight, then it means there's an extremely high chance that we're going to lose all the money that we're putting into it. It's also very, very important. And in fact, all the good traders that I know, they keep a trading journal and they keep their notes and they write down why they entered a trade, why they didn't, why they hesitated, and they reflect, you know, maybe a month after your trade has closed, go back there, because this is the way you're going to improve. You know, if you never reflect on the mistakes you made, you're never going to learn from them. The money management rules are also very important. So don't risk large chunks of your account on a single trade. Remember, like maximum 1 or 2% on any given trade, and take it easy. You know, if you're not hoping to get rich overnight, you'll be quite happy making smaller profits, but consistently. And if you want to be a long-term trader, consistency is key. It's much more important than, you know, having some amazing, huge, profitable trade, because that's actually super risky. The next one is never ever hope that the trade will end up being profitable. As the moment you start feeling hope, it means that you're emotional. And the best traders that I know are actually completely indifferent. They will place a trade, they will set their target profit, target loss to close automatically, and they will walk away from the computer. And then they might even forget that they're in a trade. So this is what you want to get to, where you want to get to. And you can by actually constantly working on yourself. I've got a very good friend who trades, and she's doing quite well for herself. And she told me that she learned so much about herself when learning how to trade, because she became aware of her emotions and the way that, you know, she feels in different situations. So do take a moment to shine a torch on yourself and like hear your thoughts and understand what it is that you're doing, because this will empower you for future trades. The next one is, usually you really don't want to be going with the crowd. If everybody is talking about how the euro is a really good buy right now, and you know how it's on its way up and how it's going to be rising forever, this is usually the time that good traders start selling it. I'm not saying go against the trend, because that can also be risky, but I'm saying don't be sucked in by mass mentality. You know, if everybody's saying one thing and you've analyzed it and you disagree, this is actually a really good thing. So stick to your opinion. And finally, as with everything in life, you know, the more you practice, the more the more effort you put into something, the better the results you get. So keep at it, you know, even when you've had a bad run, take a time out, reflect on what's gone wrong, and get back in the ring and try again. But as long as you're managing the risk on each trade, you will actually be able to get back in and give yourself another fair chance. So I deliberately didn't tell you too much about Roger. That who is Roger actually? Roger is actually the average person that we see at this expo. He is you and he is me. He was just a normal guy. And if Roger could do it, anybody can do it. It will just take a little bit of adjustment of expectations and a lot of practice, a lot of work. So I wish you all the best in your trading. Hope to see you at the booth. And thank you very much.
That was fantastic. Oh, you forgot your. Thank you so much, Millie from FX View. What a fantastic presentation. I learned so much during that. Emotions, we all get very emotional in the trading. Up next, we're going to be talking trading psychology with George Pavel. He's from CapEx. George, if you'd like to come up to the stage, please. Let's give George a nice welcome. Come on, guys. I'm going to shove some coffee in you. Are you feeling all right today? I think we need to warm them up a bit. Hello, are you all right today? I'm sorry, what? Come on, guys. Thank you. Someone down the front is away.
Okay, try and make sure this, basically.
So forwards, backwards, and that's a laser pointer if you need it.
All right, thank you very much. So the microphone is on, yeah? Hi, everybody. First of all, my name is George, and I represent the company CapEx Abu Dhabi. A few things about us as a company, capex.com. We are a global leading brokerage firm with presence worldwide in almost 4 continents. We started from Europe, and over the last years, we have seen a rapid expansion due to the high quality of our services. We have offices worldwide, including in Europe, South America, Africa, and as well Asia, especially here in MENA region, where we're actually providing our services through a highly regulated environment, offering as well the services in a safe and protected way, as being a company, a brokerage firm licensed by Abu Dhabi Global Markets. And always we strive to offer our customers the best experience in terms of safety and protection of their assets. Now, what I would like to actually talk to you about today is actually the trading psychology. Over the last days, obviously, with this Forex Expo, we have heard many presentations in regards to technical fundamental analysis in terms of different habits, how you can actually become a better and better. However, with the rapid grasp of this business, more and more people actually turning to trading, it's also very important to be aware about an aspect, which is basically the psychology in trading. So therefore, the first thing that I would like to talk to you about, first of all, will be detachment from the live trading. I'm pretty sure that it happened and it actually occurred to many of you, especially that you are a daily trader, to actually get obsessed by charts. Am I right in saying that? All right. So what does it mean basically? We have the tendency, of course, because we are human beings, to become better and better at what we are doing, including also trading. Therefore, obviously, by analyzing the charts on a daily basis, you tend to become obsessed. But obviously, part of becoming better is also to know exactly where and when to stay off of this so-called bad habit. We provide a few tips on how you can do that, possible solutions, of course. And one of the most important part is to stick to your trading plan. I mean, it sets, obviously, some ground rules about what exactly you'd like to achieve from your trading account. And as well, obviously, if you are interested about a certain profit, about a certain risk appetite, then stick to it. Don't move further. On top of that, you also need to see exactly your trading agenda, because the trading experience itself is not only about the successful trades, but also it's about the unsuccessful trades, which helps a trader obviously to identify exactly the mistakes and adjust accordingly. On top of that, you also need to come up with a distraction to avoid the obsession of trading. I mean, nowadays, obviously, if I'm not wrong, I mean, this is actually what is happening with our traders. You see on a daily basis at your jobs that all of them, they have a small tablet aside, a phone, and due to your diligence, of course, of handling the job, spending time with your family, yeah, you are obviously with an eye on the right side or on the left side on the trading charts. Am I right in saying that? All right. So another important aspect about how to manage the trading experience, we spoke about the detachment from the live trading, but also another important aspect would be the developing of an iron discipline. Discipline, like in many obviously way of lives, walks of lives, discipline is the one obviously that would have a direct impact on being a successful trader and as well an average trader. Therefore, the discipline itself can be extremely crucial, especially in trading, because you can actually organize your daily trading according to your risk appetite, according to what exactly you like to achieve out of it. Now, as many people said, and this is actually the first rule of investing, do not start trading without being prepared. That's the most important part. Education, practice is something that we as a company at capex.com, we have a tendency to be a little bit obsessed about it, because we always and always like to inform our clients about the risks, the education and the preparation in terms of trading. And on top of that, you also need to actually have a plan set in terms of risk management orders. Yeah? Now, aside of that, of course, you need to actually try to keep your fear and greed in control. Greed, in my opinion, is one of the most important feelings in the world. Greed, unfortunately, obviously, drives you to ways of how you can become rich or become poor in a split of a second. Greed is the one, obviously, that if you manage to actually keep it in control at all time, you will actually understand a few things about learning yourself, your personality, the type of trader that you are. Stick against your plan and strategies. Once you get confidence about those strategies, only then obviously go try something new. And aside of that, learn to approach your targets and always keep yourself motivated. Now, very, very important aspect, which I didn't hear in too many presentations on this expo, is also about controlling your finances. I mean, sure, yes, we know exactly that the type of traders that always and always will take in consideration the charts, patterns, technical, news, fundamental, and so on. However, one of the most important things is how you manage your funds. Would you agree on me on that? Indeed. So when I say managing your funds, mostly I'm referring to two aspects of that. Is number one, the fear of missing out on opportunity, and number two, the fear of loss, which both of it can have an extremely dramatic outcome, so to speak, a bad combination. And what I'm referring about that, the fear of obviously missing out some opportunities also freezes the investors itself, the trader itself, to miss out some good entry prices and as well some exit points. On top of that, by holding, for example, a small loss, with, of course, the trades that you are handling, can turn easily into a bigger loss. Now, as a remark and as well tips and tricks that we are always and always obviously, and this is why we gathered here to help the trader itself, is also to understand exactly that traders always and always will require a strategy in terms of trading. And as well, one of the aspects that should be taken into consideration will be the failure to set up a risk management. In trading, it's not about how many times you're right. It's also important how many times you're wrong. Why? Because always mistakes should never be taken as a negative way of mentality. It also needs to be taken as a positive reinforcement in learning and learning and learning. Conclusion in terms of the psychological side of trading, a proper mindset can potentially help you to get better at trading. On top of that, the ability to handle pressure can make a big difference when you have a short-term market volatility. Stress itself, it needs to be handled properly. And as well, the more you focus on yourself and control your emotions, the more chances you stand to see your trading experience improved. Now, I also want you to actually take in consideration the following. Successful traders' characteristics. My colleague also mentioned about the implementation of a trading plan. To be decisive, to be serious about it, to be disciplined, and as well, taking into consideration the role of technology. Capex.com is among the very few companies out there that all the time we offer our clients a personalized experience in terms of technology, in terms of our customers' demands and aspirations, in terms of improving their overall experience. And always keep in mind, you need to move how the market moves. Now, my colleague also mentioned about to know when to stop trading. Sometimes, obviously, this can be extremely difficult, especially for beginners, people that don't have any experience whatsoever. For the experienced traders, of course, they know exactly, they analyze themselves, they saw exactly where they actually miss some opportunities, and as well when they gain some excellent profit. However, for the beginners here, an ineffective trading plan can cause a much greater loss into your trading account. What to avoid when trading? First of all, high expectations. We all come across about the situation when we see an ad on the internet, and due to the fact that we as a brokerage firms, we need always and always to actually treat our clients with the respect and always to make him aware about not so fairy tales of how you can actually become rich overnight, because it's not the case. Always and always learning about finances, learning about trading. It's all about, obviously, have real expectations in the market. Because, of course, you enter the market. The worst thing that can happen to you is to enter the market at some point, have a great successful trade, and then, based on that, obviously, you decide to actually trade on a much larger scale because you know that you are in control and you know exactly what you're doing. Unfortunately, that causes a great deal of losses and as well causes the trader to feel undoubtful about himself and about the fact that the overall industry is extremely complicated. So it's a great importance to learn, first of all, the basics of trading, and always keep yourself up to date with market insights. Aside of that, we also know about the lack of knowledge. Yeah, overall, Capex.com, we offer each and every individual, regardless their experience in the markets, we offer the assistance, the support necessary, and also an educational program personalized according to the needs and aspirations in the markets. Another important thing to actually avoid would be the over leveraging. Yeah, sure, leverage can actually show you a great deal of importance. You can make money as well with borrowed money, because obviously this is actually the basic of trading with leverage. However, in the same respect, and this is actually needs to be provided towards the customer, is the fact that leverage not only increases the profit potential, but also the risk potential. You should always and always be aware of leveraging your products might cause, of course, some great successful trades. However, in the same respect, it might also cause some great losses. On top of that, let's not forget about holding too many positions. The whole trading cycle, the emotional trading cycle, starts from the excitement, goes with the thrill, goes with the euphoria. The market goes with you, amazing. Then, of course, the market goes against you. Then you feel doubtful. What am I doing? What is happening? I'm just following some rules that I learned, and it's not working. The next thing you know, obviously, you start opening more and more positions because obviously you had some successful trades. But what you also don't know exactly that holding too many positions can mean, obviously, a great deal of risk exposure in the markets. If you are trading more than 10 trades in a day, you will also have the tendency, most probably, you'll close out your positions. Depending, of course, of your style. If you are a day trader, swing trader, intraday trader, or a long-term trader. Living in the past, of course, don't hold any grudges against you guys. Don't hold any grudges against you because you had the bad experience and unfortunately, you actually ran some losses. No. Learn about yourselves. Learn about exactly your habits. Learn to actually master your emotions because at the end of the day, it's about you and only you. Of course, hoping and wishing. We all hope to actually invest $10,000, $100,000 US, and tomorrow at 30 years of age, we want to actually retire because we've made millions and millions of dollars from trading. Well, it's not the case. The trading obviously itself is a continuous process of learning and understanding the markets, fundamental, the technical, and as well a master of emotions. And on top of that, emotions in the practice account versus the emotions using the live account. Very, very, very important. When you start practicing on the demo account, you have over there $50,000 to $100,000 virtual money. You start opening transaction because, of course, obviously, they are not real money. There's no emotions over there. Become successful, make $500,000, 250,000, maybe loss, of course, minus 15, minus 10,000, of course. You don't care too much. But when you start trading, real money means real emotions because there's no real monetary risk on the demo account. And on top of that, fear does not exist in the demo trade. As a conclusion, guys, you are more than welcome as me and my team with capex.com. Visit our booths. We are next to the conference hall. We have a team prepared to handle and as well explain each and every individual different strategies on how you can actually minimize the risk as much as possible. And also, in the end, how to master your emotion and how to control exactly the outcome of your trading. It was my pleasure to actually be here with you today. I wish you all the best. And you are more than welcome to actually come and visit our booth. Thank you.
Thank you so much, George, for that wonderful presentation. Again, playing on our emotions in trading psychology. It's a minefield. Up next, we've got a fantastic presentation from Tickmill. We've got Joseph Derriere. He is going to talk to you about current inflation and gold forecasts. So, Joseph, would you like to come up? Here we go. So, forwards, backwards, and the green one there, that's your laser pointer if you need it.
All right.
Okay.
Hello, everyone. This is Joseph Dahri, market strategist at Tickmill. I'm a certified financial technician and specialized in Elliott waves. So basically, this will be an interesting session to talk about gold and current inflation prices. Many traders at the moment are hearing about the inflation prices or the inflation percentage is going up. So basically, what's top on mind of the investors right now is to buy gold, because gold prices should go up in correlation or in positive correlation with higher inflation prices, as we all know. So in today's presentation, I will talk about the historical inflation prices when we used to have like high inflation prices in certain brackets of years, and then we will turn into the chart or the MT4 charting to analyze the gold prices and predict what's going to be next, or what's the next projection for the gold price. So if we go back in history and we talk about inflation, we can see that in year 1970 till 1979, we used to have the highest inflation prices, which is near 7.5, 7.6%. 1980, 1989 as well, we have very high percentage of inflation. We're talking about 4 to 5%. We all know that the benchmark for the inflation for the Federal Reserve in the USA is near 2%. So basically, when we talk about inflation 5 to 7%, it's huge. That as well mean that the consumer price index is going up as well, and all the products in real life are getting expensive. So we directly expect that the gold prices will as well go higher in the future. So I took a bracket, or at least I took 3 brackets in which we have the highest inflation prices between 1970 till 1979, the second bar and the third bar. I took the 3 bars over here just to focus on the inflation rates and the high inflation rates, and to check the gold return or the gold yield in these brackets or in these bar charts, to check if gold prices used to have a positive correlation with inflation or with higher inflation. So I took these 3 brackets, all right, and the source is from the CNBC. I took these 3 brackets, 1973, 1975, 1980, 1984, 1988, 1981, in which we have the highest inflation prices. And we can see the gold price is the yellow bar chart, is the yellow chart. We can see that in 2 brackets, 1980, 1984, we had a negative yield or a negative return in gold, as well as in the bracket of 1988, 1991, we have a negative yield or a negative return in gold as well. Only in 1973, 1979, we had the positive yield return. That means 2 out of 3, the gold return was dropping, or gold prices at the end of the day was dropping, while the inflation was going higher. So between gold and inflation, we definitely not have direct or at least short-term positive correlation. So these are the numbers right here. We can see that the first bracket, gold investors lost 10% in their investments in gold, while the inflation was at 6.5%. And in the second bracket, the gold yield negative 7.6%, while the inflation was about 4.6%. However, the gold returns in 1970 till 1979 was positive in return, with the inflation rate was almost high. So 2 out of 3, the gold inflation ratio was not at its best, and the gold was not the best anti-inflationary hedge, if we call it to be true. Here we can see, like, I'm not going into details, I do not have much time, I'm sorry. However, if we can dig into this chart, we can see that the gold return, which is in green, the green dots, yielded positive when we had higher inflation, specifically when we used to have a global financial crisis. So if we go back to the Q4 of 2007 till Q2 of 2008, in which we have the supply mortgage crash in the USA, gold yielded positive returns while inflation was high. So actually, if we look into gold investments on the long term, 5 to 10 years, and we look into gold returns and investments during financial crisis, this is where gold surge or gold price go higher. So at the moment when we hear about the Federal Reserve, about the tapering, about everything, the current inflation prices are going up, inflation is out of the box right now in the numbers. We do not directly run into gold investments. As you can see right now, gold prices, by the way, is going down. So inflation is going up and the gold prices are going down at the moment. We saw a dip at first to 1680, and then we saw a flash crash to 1680 again, so it's a double bottom at the moment. I will show you some technicals, by the way. Can we please put the chart? So we will look into more technicals, let's say. I think the green pointer is better. Okay, so this is gold prices. We can see here that gold topped near $2,073 per ounce, right? Because I'm specialized in Elliott waves, we consider that the rise from 1200s till 2073 was an impulsive wave. When we talk about impulsive waves or emotive wave in Elliott waves, we talk about 5 waves up. Our count was that the top of 2073 was the wave 3. And the current corrective phase in gold was wave 4. I will talk about some predictions and some scenarios about gold. When we talk about corrective cycles and corrective waves, we talk about a simple corrective wave or a complex corrective wave, a zigzag, a double zigzag. So we might have a very complex corrective wave in wave 4. However, the trend is still up. We might see another surge, another upside momentum in gold. However, we do not know exactly the timing when will it go up. So if you're not a risk taker, you're a risk averse, for example, we need to wait for a confirmation, for an activation above the trend line, which is at 1835. 1835 is the activation point. However, the first scenario for gold, if you're a bullish, if you have the sentiment of a bullish trader on gold, I can tell you that gold might and can technically go up from the current levels, because the complex corrective wave can be finished at WXY near the 1680, and we have done like several bottoms on this area. The impulsive wave, we can label it as a wave 1. The corrective pullback and the flash crash that happened, we can label it as a wave 2. And now we are looking into another surge in gold. So technically speaking, we can have a surge in gold, but I do not prefer this scenario. The preferable scenario is that instead of wave 1, we can put another connector for a more complex wave. That means we can have here, instead of one XX, double X, and we can have another corrective cycle, which is an ABC. We can retest 1630, 1640 level before going up. So if you're looking into gold investments, do not hear about inflation, do not focus on inflation, because as I told you and as I showed you in the charts before, if you look into inflations and gold prices and the correlation, you need to look 5 to 10 years investment, not a short-term investment. So if you're looking about investing in gold, you need to buy gold from here. If it goes down to 1630, 1634, you can buy a lot more. So basically, I still see that this fall in gold is corrective. We might see another surge to the missing leg wave 5 in Elliott waves that might target 2,300 and 2,400. However, we do not know the time frame actually when will it happen, or our targets in terms of time frames. So basically, we need to finish this corrective pullback, all right, in order to get the activation again at breaking 1835 level. So if you have any questions, I will be at booth number 18 at Tickmill. I will be ready to answer all your questions. Thank you.
Did anyone get that on camera? My heel getting stuck and me falling over. That's great. It should be on You Being Framed and win myself some money. Thank you so much for that presentation, Tickmill, coming in last minute. We have got a panel session on the way next, so just bear with us while we update the stage here and sort our chairs out for our panelists. And we will be welcoming up to the stage some fantastic speakers, and we're going to be discussing the growth of multi-asset trading in 2021. and of course diversification and having multi-assets, all the big rage and lots to discuss on that. So we hope it's going to be a lively one and an enjoyable one. So just bear with us for a couple of minutes while we sort this out. We have got some amazing presentations coming up throughout the day. We'll also be having the impact of technology on investment, on the investment industry, also the effective techniques for risk management and building ecosystems in the FX and crypto industries, experiences and challenges, all that to come before our lunch break, which is a little bit later on. So lots to come for you this morning. And don't forget, we've got our awards ceremony this evening as well. So just bear with us for a couple of minutes while we set the stage up for our next panel discussion. Can I have the slide? Oh, there we go. If you guys sit your names, that would be great. Thank you. I can see everybody. So good morning, and let's get this panel discussion underway. The topic is growth of multi-asset trading in 2021. And I'd like to welcome with me, we've got Ali Rupani, David DeBrule, and Abdallah Harmouzi. If I could just go down the line and let you all introduce yourselves and tell us what it is exactly that you do. So Ali, we'll start with you, please.
Sure. Morning, all. My name is Ali Rupani. I'm the Chief Sales Officer for Squared Financial. I have an investment banking background. I covered the Middle East for about 10 years for Goldman Sachs. So new experience for me, but very excited to be part of it.
David?
Hi, thank you for having me. My name is David DeBrule. I'm the CEO of JM Trade, JM Financial Brokerage in Kuwait. Been in the region for 17 years now. Also have a diverse financial background from investment banking, capital markets, and online trading.
Abdullah?
My name is Abdallah Harmouzi. I work in DGCX, Dubai Gold and Commodities Exchange, one of the largest government-owned derivatives exchange in the region. Currently, I'm more into Sharia. So I'm into Sharia product development as well as giving lectures to university students and yeah, these kind of things. Thank you.
So education is going to be a big topic here as well, I can see. So first off, post-pandemic, a kind of new shape is evolving in online trading. Brokers are adding different asset classes like CFDs, stocks, indices, crypto as offerings to traders. How do you see this growing need for multiple assets, and how are brokers kind of rising up to meet those needs? Ali, can I start with you?
Obviously, I think from our perspective, we've seen the technological advances, we've seen the sort of adoption of mobile technology across generations as something, we're very excited about. I think it's very interesting for both brokers and investors, where all of a sudden you have multi-generations who are very excited and able to use mobile technology, are confident and able to do their banking, shopping, whatever it may be. So all of a sudden you now have the opportunity to invest and diversify portfolios and incomes by trading. So from our perspective, we're spending a lot of time on building our own capabilities and platforms. The process of democratization of knowledge is allowing a new generation of investors to become financially literate and involved because they can do everything on their mobile phone. So from our perspective, we see the growth and the explosion that we've seen in the past few years, where 5 years ago, multi-asset broker would have 200-300 odd instruments. You're now looking at somewhere between 5,000 and 8,000 instruments. And probably in the next 3 years, that's going to be sort of in the tens of thousands. So from our perspective, we think it's a great opportunity for both brokers and investors to sort of embrace that and make the most of it. So it's a big opportunity.
David, if I can come to you, same question.
No, absolutely. Nobody can deny the advancements of technology and the access to markets for the retail and small corporates alike. Of course, there is always a balance to be maintained with respect to offering way too many products and balancing that lag of education with clients and giving them products they can easily trade and understand. But it's true that the mobile-centric approach allows them to really simplify their access and invest in multi-assets, even bundled assets, in a very simple way, so that they have time to actually catch up on the lag on the education, because each market has its own challenges, its own rules, its own custody issues. And the synthetic approach also removes that, but enables the younger generation to force them to learn a lot about the infrastructure that behind all the financial markets.
And Abdullah?
Yeah. Actually, there's two perspectives to the growth of multi-asset trading. From the trader's perspective, obviously, in today's volatile world economy, I think many traders have adopted new strategies when it comes to online trading. They are actually looking into different asset classes for the sake of diversification, which is a very important topic when it comes to multi-asset trading. And then from the broker's perspective, I think to remain competitive in the market, you need to add, those kind of products or different new asset classes. From what I have seen recently, during the pandemic or after the pandemic, there's a lot of new trading avenues have started online, and the number of those trading avenues have increased significantly. And I think, for those who are only focusing on FX, I don't think they will remain competitive here in the market. That's for sure.
And seeing as you kind of brought it up, how important is it to have a diversified portfolio these days, as opposed to just putting it in one particular asset?
Yeah. Basically, let me just give you a live example of DGCX, where I work in. So basically, during the pandemic, I remember we have traded around 2 tons of physical gold in DGCX. And most of them were actually from the regional countries like Saudi, Kuwait, Qatar as well. And, we understood, we knew that, during those hard times, people that they were actually focusing on certain asset class, they actually went and tried out different asset classes, like gold being a very important one. And it's not only when it comes to commodities with gold as well. They have adopted a more complex trading strategies like hedging. So in DGCX, we do offer future contracts on different asset classes. And we've seen a growth number of volume in DGCX.
David, same to you.
Yeah, the hedging I think is essential, and the diversification, access to the market diversification is very, very important. And that obviously is going to take some time, because with diversification into multiple asset classes, you need to be able to do this correctly. You need to proportion the trade the sizes. You need to be able to understand the rationale of why something is strong, why something is weak, or what asset is strengthening and weakening. However, and that's the problem, is like you can actually, when you have too many products, you think you're diversified, but you don't yet have the knowledge of what a true diversification is in terms of your asset allocation. And then obviously with a lot of different products, you need to see how much it costs you to carry those products for a certain amount of time in order to complete your strategy. And when you're looking at asset diversification, you're not looking at short-term views. You're looking at more swing views, 3 months, 6 months, 9 months cycles, which allows you to complete your alpha return with respect to the market and get the return you want with the risk that you've actually positioned yourself with.
And Ali?
I think I have so my view is slightly different. I mean, I think what we've seen of late is, we've seen a lot of the traditional correlations break down, right? So for example, you're used to having markets where we have equity prices high, you'll have bond yields or bond prices a lot lower and vice versa. But I think what we've seen over the pandemic period is the injection of liquidity from central banks globally has created massive asset bubbles across different asset classes, which also in turn has made it a lot more difficult to for the investor to acknowledge what now looks like a balanced portfolio. And I think what we're now seeing is that as that leverage potentially starts to come out of the market, as central banks look to taper, right, I think we may have a correction in asset classes that we may not anticipate should be the asset classes that are correcting. So I think in that environment where traditional relationships and correlations start to break down, it becomes very hard to say, okay, what does a balanced portfolio look like, right? So, from our perspective at Squared, I mean, the view there is that, if you are going to try and build a balanced portfolio, right, you should average into one, because there will be volatility and volatility shocks that allow you to either average into a better position, or if you've got the wrong view on the market at that point, cut the risk and you haven't lost what you're willing to deploy as capital. So, I think we're all saying the same thing, but I think there is an element that your traditional correlations and what is a portfolio is not what it used to be 3, 5, even 7 years ago. And I think Bitcoin and the rise of crypto is also playing a major impact on that. And as we've just discussed slightly earlier, the fact that you are able to trade crypto, which is a new asset class for everyone.
Visit booth number 6 and enter one of the biggest gold giveaways position. 4 kg of pure gold awaits you. Make sure you visit the stand today. Thank you.
Abdullah, is that your gold? I was about to say something. Nice move.
Before we were so rudely interrupted.
Right. So, I was just saying, obviously, from a crypto perspective, that now is increasingly becoming part of an asset allocation that people are looking at, but we don't know enough about it yet because it's still a fairly new technology. So, how do you throw that into the mix and add that into what a portfolio should look like?
And seeing as you brought it up, crypto, I think, has been, because it's so fascinating as an asset, and there's so many different types in the crypto realm. Have you seen more people come into trading realms because of crypto, because it's kind of piqued their interest a little bit, and they've gone, oh, this seems interesting, let's give it a whirl?
From our perspective, we definitely are seeing an increase in interest in crypto. I think the issue that the industry is having at this point is being able to offer a crypto product where the costs of whether it be the bid offer spread or the actual fees in and out of a transaction are low enough to allow investors to make money on the back of that. If you're paying 6, 7, 8% just to get into and out of a trade, right, that means your break even is significantly higher. So obviously there's a big rush into crypto. A lot of social media, a lot of people think that they can become and do very well in a very short period of time, which is adding to that bubble. But the accessibility yet, I think, for people who want to trade day in, day out, is still something that I think in the coming months and years will be a lot more easy for them to access. But I think at the moment, the costs are high for them to actually trade it, say, for example, compared to euro dollar or dollar yen or, sort of the traditional instruments. But I think it definitely will come.
David, good entry point or not?
Yes, I mean, of course, yes, the cost of crypto were a bit elevated, but again, if you're looking at it from a CFD perspective or just it's challenging. But crypto has brought a multitude of things to the market. One being the speed of capital formation. Two being the simplicity of creating an asset or even synthesizing another asset and being able to make a automated market making for those products. The third thing, which is very interesting to me and which I think will transform a lot of our industry, is that the tools that today the traders are using and they have access to in terms of correlations, arbitrage strategies, execution, AI bots, et cetera, those tools, although they're very young and immature, and although they're applied to a market, which is crypto, which is highly correlated because everything moves kind of together, as you know, in the market so far, we will soon reach a time where we'll have a differential and correlation for the crypto itself. But those tools, what I was talking about, and that attitude to trading has created a fantastic platform to the retail market, which granular analysis and able to act fast into the markets, which has never been seen before. So, having said that, if you're a crypto trader and you have a lot of products, if you just go buy BTC physical, you have no cost of carry unless you actually have it at a custody. And today, BTC, if you're a big trader, is not going to cost you more than 0.5%. 0.5% on the volatility of a product, which is 10 times FX, seems a little bit interesting. Volatility is opportunity at the end of the day, as long as you know how to manage the risk.
Abdullah?
Yeah, I think the social media has played a big role in promoting crypto and other digital assets. But I think, one of the reasons behind becoming really popular recently and during the pandemic, I remember, it's basically easy money or making money or getting rich very fast. We've seen a lot of influencers, a lot of financial gurus, talking about their experience when it comes to crypto and how they made money and how they got rich in such a short time. But I think it's, it's a bubble. They've created a bubble. It's really hyped. And one day this bubble will burst for sure, 100%. And, like what my colleague has mentioned as well, in terms of correlation, it's very hard for you to predict what's going to happen with the crypto market in the future. Like, let's say if you have your normal Bitcoin or Ethereum, you wouldn't know what's going to happen, how you can relate, the performance of the digital asset with the real economy. This is a big challenge as well, where they do not understand. So the way I see it, basically, it's based on speculation. So you just try your luck, you put your money there, and then you just wait. This is the way I see it, to be honest.
I respect that opinion, but I respectfully disagree, because today you're trying to compare a crypto market and the way of analyzing, the way of fundamental quantitative analysis for something, and try to do that with a framework with traditional assets, which is you lose the battle before you even begin, because they're apples and pears. Yes, there is a bubble. ICO was a bubble. Today we're seeing the second, and it popped. We're seeing a second iteration of it, and of course, there's a lot of influencer, a lot of many coins being created, and social media pushing. But the point is, every time there's a new milestone that is reached with the blockchain technology and the crypto market, which solidifies and then transcends and infiltrates, and you're seeing much more infiltration and cross applications now in terms of a centralized and a decentralized world. So, I mean, it's the problem is you try to put a value, when people try to put a value on Bitcoin and Ethereum, they try to put it with a framework that they've been taught for many, many years. And it no longer works like that, because the fundamentals are what drives the value, what drives the usage. It is completely, it's very foreign. It's a very foreign language to even the most professional, seasoned professionals.
Can I just jump in? I think my view is in between both of you, right? And by that, I mean that I think I can see the use case for crypto, right? So the likes of Ethereum in terms of, the scalability of the use of blockchain technology. I think the view that something like Bitcoin will become and supersede fiat currencies, I think was, with what the Central Bank of China did last week, right? I mean, it was only a matter of time before one of the big central banks came out and made a move like that, where all of a sudden cryptocurrencies, right, sort of become persona non grata within the country, right? So it would have been the Fed or the ECB or, the PBOC, right? So, I think cryptocurrency, sure, I don't see it becoming, a major influence from a global currency perspective, but actual adoption of blockchain and crypto technology in other uses, I can definitely see a massive use case for. So I think maybe I'm in between both of you.
No, I mean, I think it's important to be in between because it's a very large granular subject that can go on for days, of course. But I mean, the technology is, for me, personally, I find it fascinating because I can see it being applied in many areas and transforming. But a simple smart contract for me has revolutionized what finance could be, has revolutionized what the average person like me or any trader that can actually have a certain amount in a stable coin and be able to get a 3 or 4% return on that investment instead of sticking into a bank. And on top of that, what we're seeing is that larger and larger players, family offices and banks and large portfolios and corporates, they are no longer selling their crypto. They're keeping a large percentage of their funds in crypto and they're borrowing against it. So you no longer have the cycle of actually having to buy and sell and realize. So the fact that they're holding it long-term and borrowing against it because it's actually cheaper to borrow 2 or 3% Bitcoin and then invest into another asset class, which is giving you a higher yield, is very transformative. And that's all thanks to the smart contract framework and the clarity. And you remove a lot of, just to transfer, buying institutional shares of Google, it's going to cost you X amount of dollars just to transfer custody from one to another. And that cost makes it extremely prohibitive for the retail guy to come in and trade fractional shares that are in a safe way and benefit from the market.
And I'll just say, a lot of those crypto influencers and millionaires have moved to Dubai and are buying 7-figure penthouses and all the rest of it. They're sinking millions into the local economy. We'll take it. It's fine. Not a problem. In capital markets, do you think leverage has played a vital role in increasing trading volumes in other asset classes beyond Forex, Ali?
I mean, obviously, I think, the very simple answer there is yes. I think, where you're in an environment where, rates are at all-time lows, where there's massive amounts of liquidity having been injected into the real economies, right? You do need that money to be put to work somewhere, right? So, whether that be in crypto and the boom in crypto because you can get a return. And obviously, we've seen major asset class bubbles across the board because the money actually does need to be put to work. I think what's going to be interesting is when we start to see central banks taper, what happens at that point in terms of where does the bubble burst, in which asset class. And I think that's going to sort of then determine, given the amount of leverage that's already in the market, right, how that correction sort of, asserts itself. And, obviously, I think it's also quite interesting to see that, we have seen sort of, regulators, look to crack down on the amount of leverage that's been offered to investors and consumers, because it's simply adding to that inflationary bubble.
David?
I mean, when I talk about leverage, I go back to the old saying: there's good debt and there's bad debt, right? So. And then there's good use of leverage and bad use of leverage, right? So you have to look at it from what is the leverage created for. The problem is from the retail perspective, a lot of leverage, unfortunately, sometimes is the rope people hang themselves with. But leverage used correctly is extremely important, because a simple margin or ability to be able to borrow and be able to trade stocks or ETFs, etc. The smaller guy, the small retail guy, he has to go out and buy a stock of $3,000 on Amazon. Right, so he's got $5,000 or $6,000. He cannot diversify properly. So the good use of leverage allows you to have, say, 1 to 10, 1 to 5 on proper stocks, which with proper services, proper liquidity, and proper execution, and proper pricing, price discovery, of course. But at the same time, that same person has benefited from that diversification, because now he can actually, if he's disciplined enough, he can actually trade some volatile markets, but at the same time hold a longer term themed portfolio, because thematic, I feel, is severely underrepresented. Thematic is something that is very foreign to retail investors, but now there's a lot of the big push to be able to create a very one-stop thematic approach where people can actually click and just get exposure to a theme, like a COVID theme or like a social media theme. And the leverage there is extremely important, because without that, you'd be just too skewed, and you would not have enough time to react if the volatility went severely against you.
And Abdullah?
Yeah, I think as what David has mentioned as well, there is the good and the bad side of leverage. So the good side is basically from the perspective of the investor or the trader, they can actually take a greater exposure on the market with lesser capital requirement. And therefore they can actually gain more profit. At the same time as well, leverage could be a bit dangerous. You could increase the risk of losing your shirt overnight. That's the expression they say. I would say, from my opinion, a good trade is the one balance between risk and market volatility. This is the way I see it.
And speaking of volatility, has the recent volatility in global indices and stocks having an impact on the multi-asset trading? And I think we've seen volatility across so many different assets and markets at the moment. How is it affecting everything in the multi-asset trading realms? David, I'll start with you on this.
I mean, for me, volatility is a great thing. It's a great thing for brokers, great thing for clients. Again, it's volatility is the conduit for you to be able to make profit. If there's no volatility, there's no returns. So bearing that in mind, when you start from that mindset, then you start to build around the volatility. And today, one of the simple things that we teach our traders at JM Trade is don't look at the pair by the size or the liquidity. Look at the pair and classify it by volatility and see the opportunity that you can capture based on that pair. So we try to apply that educational narrative across the board. It's a little bit difficult to comprehend because people still see volatility as risk instead of opportunity. That's just a lack of exposure and tools and education, of course, but that will catch up. But I think volatility is great. However, the volatility is very dependent on the market cycle that we're in. If you're in a highly volatile market, and today we have, we've printed 40% of the US dollar, the total supply that was printed in the last 2 years, and everybody thinks this is okay, which I don't, by the way. So having said that, when the volatility, you have high volatility pockets and you have these shocks, those are amplified tremendously, and that's what's very dangerous. But and people have to be wary about that, and a little bit of protection, like physical metals, for example, exposure is very important. I'm helping them out here.
Yeah, and look, I think to add to that, we also alluded to this slightly earlier, where historical correlations have broken down or are less prevalent than they were historically, and where you had, say, volatility acting in accordance, say, during the peak of the pandemic, right, where equity markets were selling off globally in one sort of, in unison, where 2-3 weeks ago, we had the Evergrande situation in China, and the view there was that we'd have a contagion and spillover effect in the rest of the globe, and that didn't happen. But the market was pricing and bracing itself for a knock-on effect, right? And again, where I'm saying the correlations may have broken down, right? I think the market assumed that we'd have a knock-on effect of contagion, but then didn't look at the actual fact that the international bank's exposure to Evergrande wasn't that huge, right? It was a China story, right? But the implication was, well, it's going to impact the whole world, and we're waiting for a sell-off, right? So I think, that's where you sort of, as an investor, educational, or as a broker, where you can speak to your clients and sort of have that informed view that actually it's not necessarily going to be as you think it may be, and this is why.
And Abdullah, what's your feeling on volatility?
Yeah, basically in DGCX, we love volatility, because if the market is volatile, we actually, we get like good volumes. And from the trader's perspective, it really depends. With volatility, you can either make money or you can lose money. So there's two sides of basically the story itself. volatility as well, and indices and stocks has encouraged traders and investors to look into different asset classes just for the sake as well to secure their capital. So, the key word here is a diversification. This is what I've seen. I've been working a lot with hedge funds, with a lot of banks here in the region. And, most of their strategies revolve around that as well. There are some family offices. I remember during the pandemic when our Sharia gold contract, which is our basically physical gold contract, it was trading really high. And the main reason for that was because of the volatile market. And people, they just wanted to secure their capital, to allocate a bit of their funds into gold. And yeah, this is the key, when it comes to volatility. Volatility is nice, but obviously you need to be aware that, with volatility, you can actually, take a huge drawback.
It's yeah, playing the risks, isn't it? And obviously, compared to how we used to do things back in the day, do you see the access to multi-asset trading is far more available and easily accessible to traders these days through the rise of technology and apps and online platforms and things like that? Is it far more easy to get into these realms these days? Ali?
Absolutely, right. I think, the likes of Robinhood, they've really sort of changed the game for a lot of us in this room today, right? The accessibility of technology, the accessibility of knowledge, the accessibility of information, right? The actual ability for, say, for example, the retail traders to come together and overthrow some of the big hedge fund shorts that we saw in Q2 and Q3 this year, right? 5 years ago, that would have been almost unthinkable, right? But now technology has allowed the likes of all of us here in the room, right, to access and to be able to trade. So, and I think that only gets stronger and stronger, right? It only makes, companies like Squared and the other companies in this room want to provide more product for their clients, better technology, to engage with them, to allow them to do the same. So absolutely, 100%.
And David, where do you see it all going as well?
Yeah, technology is key. Even I think most brokers today, I think are considering themselves more as fintech companies than brokers, to be honest. So the access is very, very important. Yes, the Robinhood effect is clearly there, but at the same time, there's a lot of surrounding elements that you need to account for. We've seen Robinhood, people come in, but retail clients don't have the slightest idea of what price discovery is. So when you have a very connected environment with multiple assets, multiple countries, multiple exchanges, everything moves a lot faster. Price discovery happens a lot faster, which also helps manage the volatility risk for institutions, of course. But technology-wise, I'm a little bit worried sometimes because, and I see this also for the crypto side and the trading, is that although we are seeing a little bit of a gamification strategy, which for me is great to attract, but there has to be a follow-on in terms of a push from industry leaders to make sure that gamification is followed by proper cementing education and notional financial literacy, so that you don't fall victim of thinking it's just a game and you're gambling with your future. When you're younger, it's true, you can take a lot of risk. You can actually take the most risk. It's only when you get older you have to start pulling back on the risk. That's the basic financial planning. But and this is the only concern I have. But in terms of technology, it's even us. We just launched our mobile app with 2,000 products, and it's seamless, right? But we work very hard to build, even Arabic-centric education with connection to options, futures, correlations, deltas, trading strategies, the knowledge, so that people don't fall into that trap of volatility plus easy access creates, oh, it's just a game, and then it's when it's all over, they're left with a bad taste in their mouth, and that's not good for anyone. So I just want to make sure that everybody does that.
Abdullah?
Yeah, I think basically in terms of the access to the multi-asset trading has increased significantly. For the past 1-2 years. As I've mentioned before as well, for a broker to remain competitive in today's market, they need to give this access. So today we've seen a lot of trading avenues, online platforms, as well as exchanges. They are basically offering different type of assets in a single platform. I think it will keep growing. I would like also to give an example. As an exchange, we started as a commodities exchange, but now actually we're looking into crypto as well. So in our pipeline, we're trying to enhance our Sharia offerings, at the same time get into the digital asset market. So, that's the thing. The most important thing is for brokers, companies, or online trading avenues and platforms to start offering different type of assets, which is it's the key, to be honest, to remain competitive. And this is today's market.
Fantastic.
May I just add one point? So I just forgot to say it. For the future of tech, I think that we should be able to benefit from a hybrid of a decentralized and a centralized model. The technology, even on the blockchain side, should allow companies to do that bridge. A typical example is Robinhood. Robinhood's fantastic, but when we had that incident, they just locked access to everybody's account, which really created a huge drive toward decentralized exchanges and decentralized, tokenized assets. That part is a bit annoying, and it needs to be properly watched, because if you do a certain action and then you push everybody towards the DEXs, decentralized environments, you might also be putting them at risk, because there's a lack of monitoring. Everything's automated, and we need to have a blended approach on that. And they need to find the gap. Regulation and decentralized needs to find a way for these institutions and the decentralized technologies to collaborate seamlessly.
And I'll just add one more point to that, and I completely agree with David there. When everyone is trying to exit a trade, the door becomes very, very small, right? So, us in this room here, we have an obligation to our clients, our customers, to ensure that, we provide them with the liquidity at that point, right? It's
I so wish we had more time, because there are so many questions that I have to ask and so many follow-ons, but we have unfortunately run out of time. But fantastic to have you here, gentlemen. Thank you so much for this panel discussion. It's been amazingly interesting, and I'm sure if you have any questions for our lovely panelists, you can find them at our booth. Thank you so much. It's been a brilliant insight. Thank you.
Thank you. Thank you very much.
And just bear with us a few minutes while we do have to reset the stage for our next speaker. We're going to come back, and our next session will be on the impact of technology on the investment industry. That's coming up in just a couple of minutes' time. Thank you so much. And our next speaker session is going to be from Omar Onat, and he is from XTB, and the session is going to be on an impact of technology on investment and industry. We'll get straight into that in just a couple of minutes' time, so do stay with us. So welcome back, ladies and gentlemen. We will get our next session underway just now. And from XTB, I'd like to welcome up to the stage Omar Arnud, and he's going to be discussing the impact of technology on the investment industry. It's going to be a fantastic session. So please do come along to Hall 1. We will get this session underway for you just now.
Slides. How can I
So the big green one forward, backwards, and this one is a
Perfect.
laser pointer.
All
if
right.
you need it.
Thank you.
Okay, thank you.
Thank you very much. Okay, let us begin then. Guys, my name is Omar Arnaout. I am the global CEO at XTB. And today I'm going to be talking about the impact of technology in the financial industry, in the investment industry as a whole as well. Because basically speaking, I truly believe that our rise in the last 15 years, over 15 years, would have never been possible if we wouldn't have decided to become a technological company. Currently, the company employs close to 200 IT developers, and I see this number rising year after year after year, and I'm practically sure that we will continue to grow in this aspect significantly more than in other aspects. But let's start. First of all, just a few words about who we are, because later, obviously, I would like to tell you how technology has helped us grow. XTB is a company that was established around 2005. It is a publicly listed company, and we try to see ourselves as a one-stop shop. Currently in Dubai, we started our activity, I would say quite recently, and what we offer in Dubai at this given moment are CFDs for currencies, commodities, and indices. But we are a global company with a very big presence in Europe, in most of the biggest European countries, including Spain, Germany, the United Kingdom, and many, many others. We also have a very, very developed activity in Latin America, and this is our start in Dubai. So hopefully the success that we have achieved in other countries is only a question of time in Dubai. In other countries, we also provide the possibility of trading on CFDs, on cryptocurrencies, as well as real stocks and ETFs. And I really hope it's also a question of time before this comes to Dubai itself. But let us continue. What is important is that XTB is actually divided into two parts. XTB offers its services to retail clients, whereas XOpen Hub is our institutional arm. So if there is any startup in the world, if there is any financial institution that would like to use our liquidity, our technology, our know-how, then we provide these services to some of the world's biggest financial companies all over the world. But coming back to technology, when we look at our headquarters, then at this given moment, we are close to employing 60% of IT specialists, excluding obviously our sales and customer support team. So excluding those two teams, headquarters is close to 60% in IT. So now let's see how, because what does this actually mean to the client? At the end of the day, it's not for us. The client is supposed to feel it on an everyday basis. But where does the client journey start with every single broker, excluding marketing, obviously? The journey starts with opening a real account. And now when we look at the journey from the real account perspective, we know that as a company within Europe, we are one of the quickest growing companies in the world. And now taking into consideration that we are onboarding more and more clients, we have a few cases to solve. We have to understand what's important to the client, but we have to also understand what's important to us and how we can achieve this. Obviously, you as a client, what is most important to you is you want to be onboarded as soon as possible. Because looking at any industry in the world, whether we're talking about television, buying a washing machine, anything in the world, what is key is I want it immediately. I want it right now. We are more and more impatient. I know by myself that if I am not able to use an application or get something within a few minutes, I'm not going to get it. I may get it from a different company, or I may completely forget about it. So onboarding, whether we're talking about our industry or any industry in the world, is a key aspect. And now, is everything important here from the client perspective? Very often, yes, but not always. And what is important? I have worked in this industry since probably about 2007. So I have seen the goods, the bads, I have seen the manual and automated work. But I know that when we started in 2007, let's say I started in 2007, the company started in 2005, everything was done manually. So the verification of the client documentation, checking client complaints, making deposits, making withdrawals, seeing whether the name on the documents is exactly the same as, for example, in the trading platform. Is it the same also in our systems? One of the most important aspects in the industry is automation. Every possible element of the onboarding process has to be automated. The reason for that is because if you're going to get an influx of, I don't know, 5,000, 10,000 clients a month, checking everything manually will mean that you're going to probably need a few hundred or possibly 1,000 people working for your customer support team. Is it doable? Obviously, it's doable. We're able to hire many people. You know, we have the world is actually a very populated place, so we're able to hire. But does it really make sense for the let's say, long-term perspective? Completely not. You have to automate as many processes. And I assure you, because I have been in this industry for a long time, most companies do as much manual work as possible, which is not the case, obviously. From the perspective of the client, he's maybe not going to see the back end, but he's going to get frustrated that he opens an account today and he has it open within 2-3 days, sometimes even a week. With some brokers, when the COVID situation started last year and volatility was huge, some brokers would have even informed you that you have to wait a week or two to have your account open. So automation, whatever you are talking about. And now, but from the client perspective, how can you make life easier other than the speed? Video verification is one of the things that many companies are doing. Again, whether we're talking about our industry or any other industry, meaning you do not have to provide a proof of address. You do not have to provide additional documentation, and you do not have to have it checked by anyone because video verification systems do this for you. But let's say you have already become a client, because that is only the first step of everything. Then you go to the trading platform. And this is when things start becoming interesting for a client, because that is going to be his main tool when investing. And one of the most important aspects, whether we're talking about Netflix, Amazon, or any industry in the world, there is nothing more important than user experience. If any application, if any tool that you are using is overcomplicated, then it doesn't, I would probably not waste my time, and I would have the company closed if I knew that we're not going into the direction of user experience. 5-10 years ago, no one even knew what UX was. Everything was just, everyone was just doing everything as they wished. So if you do not have access to your own technology, you're not going to be able to focus on user experience. We as a broker have still been using MetaTrader for many years, but let's be honest, even though it's a good trading platform, but as brokers, and many brokers over here are still using the MT4. We are still using MT4, so I'm not going to say it's a bad program, but us as a company and me as a manager of the company, I have zero influence over MT4. I only have complete control over my own trading platform. And I truly believe that it is the only way to achieve success on the market if we are to satisfy the growing needs of our clients. Currently, maybe not currently, because you see the statistics from 2020, which is a year that has finished, even though we have a choice of MT4 and X Station in our real account opening form, over 80% of our clients are choosing X Station. And there are many reasons for doing so. But what should the trading platform ensure? Obviously, if you look at any platform in the world, it should guarantee you very quick execution. It should guarantee you a wide array of market, a wide array of technical analysis tools. And those are probably the basics. And to some extent, probably adaptability. But remember that, I don't know, when I even look back historically, and I think of myself, because how did I join XTB? I was interested into trading. So obviously my first trading platform was MT4. Whenever I was waiting for the non-farm payrolls on a Friday, I would go to Forex Factory. Whenever I wanted to find education, I would try to find the trading school. Whenever I wanted to try more enhanced, let's say, stock-related tools, especially stock-related tools, I would go to specific websites. And that is probably one of the biggest mistakes that many brokers do nowadays. They allow you as an investor to leave the trading platform to have multiple windows open. So one of the things that obviously these are, to us, they are basics, but you know probably as traders what you have in your own platform. So you have to answer this yourself. Do I have access to this in my own platform? And is it a standard? You have to answer. I'm not going to tell you that. What we try to provide is added value in the platform, whether we're talking about simple things such as the macroeconomic calendar, heat maps for both CFDs, but also stock scanners, ETF scanners based on industries, based on other things that are typically connected with stocks, or basic things such as news. We do everything we can to make sure that you as investors stay exactly in the same platform, not seeking the necessity to go elsewhere to seek information. If we know that you need something, then we're going to do everything we can to obviously provide that. Additionally, one of the most important aspects, other than the added value, because added value, some people have a typical clean, let's say, technical analysis approach, which means that they don't need these aspects because they are highly connected with fundamental analysis, with stocks, for example, with fundamental data. Some people don't trade on fundamental data, but some people want access to education. And unfortunately, you guys also know, education is often paid for. Education is, well, not as difficult as it was in 2005, 6, 7, because at those times it was really difficult to get. But what's important to us, that irrelevant of your level of knowledge, you have access to education of the highest level. Highest level, and I'm not going to tell you that the highest level is what we prepare for you, because that would be silly. That would be, I would say, not only silly, but quite arrogant to tell you that I know what you need. So what we try to provide our clients, and I believe it's going to come sooner rather than later also in Dubai, is to provide hundreds of hours of videos, not only prepared by us as a company, but also by some of the world's most popular traders. Hedge fund traders such as Lex Van Dam, which maybe you know, Kathy Lien, Jack Schwager, etc., etc. So some of the world's most popular authors, traders, etc., etc. We try to focus obviously not only on video education, but if I'm talking about technology, then this is what you have access to. So when we just started in Dubai a few weeks ago, and this is one of our priorities right now, to make sure that the library of education that is found in our platform is as strong as it is in the United Kingdom, in Spain, in Poland, in Latin America, and every other country where we have our successful offices. And obviously the materials, like I mentioned, are adjusted based on your experience. So whether you're a beginner or whether you're an advanced trader, we truly hope that you'll find something for yourself. And then obviously you do not have to leave the platform to practice. But I know that this is about technology, but if there are many people who are not really acquainted with us, especially here, I assure you that we will also put high focus on physical education. We want to meet you. We want to hear your feedback. We want to hear your criticism. We are extremely critical towards each other. We're happy with success probably for a few hours, but then we think about what we need to do to continue growing. Because we do not aspire to be one of many brokers. We want to be the Amazon of trading. We want to be the Netflix of trading. And by obviously ensuring this kind of education, we want to assure you that this is the highest level of knowledge. But continuing, additionally, sometimes you may want to withdraw money. Sometimes you may want to file a complaint because you're not happy with us. And again, what we try to do to make sure that everything is exactly in the same platform. So you do not need to contact someone, try to find a special client office on the website where you may withdraw or deposit money. If you're not happy with us, you don't have to look for a telephone number that someone may never answer. Everything is possible through the platform itself. So basically speaking, what we try to do is to make sure that the whole trading environment, irrelevant whether it's connected with the investment decisions or it's connected with you wanting to do something additional, withdrawing, depositing, talking to someone, filing a complaint, checking your account status, or even statistics of how your trading journey is going, everything is also available. So that was just, obviously I would be able to provide you with more and more information why I believe our platform is, I don't want to say better because again, that may sound arrogant. I want you to decide. So obviously you're more than welcome to always come to our stand. Our team is always waiting for you there to show you the platform, but we are also waiting for your feedback if you need anything additional. One of the more important aspects I'm going to come to right here. In our development team, we have a team called the data warehouse team, and obviously data scientists. Many companies have not even heard of data scientists and data warehouse teams. The people who have been with us in Dubai, maybe not for long because we've been here, let's say physically for a few months, but one of our strengths is our data warehouse. And what does that mean? Whether we're making marketing decisions or whether we're making decisions based on how our website should look like for you, what changes should we make in the platform, everything is based, well, not everything because everything is the ultimate goal, but as much as possible is based on data. Heat maps, where if you're looking for a certain piece of information on our website, how many clicks does it get you to take you there? What you are looking for, is it shown enough? Let's say what parts of the platform are you using most? Which parts of the platform are you ignoring most? What should we add? What should we get rid of? Basically speaking, at this given moment, there is not much space for subjective decisions. About 10 years ago, it was about me saying, I believe we should do this. Someone else would say, I believe we should do that. And probably the person who was, let's say, at a higher position, we would do that what that person said. Right now, it's not about that. Everything is about only numbers, numbers, and numbers. And data scientists continue helping us on a daily basis to analyze what clients may want in the future, what investors may need in the future. Me personally, every single day that I start coming to the office, I start my day by going to the dashboard of reports to understand your needs. And you know, what differentiates a fintech from a normal trading company, because there are fintechs in the world. We're not the only fintech, obviously, in the investment industry. But I assure you that probably most companies are not fintechs. When I see companies coming up with news that they added a payment provider and they go into PR being so proud of it, or saying that, you know, last year we changed our website, these are not changes. You know, let's not even fool around. What we try to do is not release things that are interesting for our clients, I don't know, every half a year or every year. You as investors have the opportunity to see changes on a monthly basis. There is no chance in the world that there are changes not introduced in our client offering from month to month. We have a week, usually it is this week, but unfortunately I'm not there, but unfortunately as well we see a presentation by our IT team, what each team within the IT team has developed and how it can help us grow our business and increase client satisfaction. If we are not happy with one of those sub-teams, we make changes, not necessarily immediately human changes, obviously, because we're not that brutal, but we try to talk to the team to anticipate what clients within their area may be interested in. So we have special teams, including you are responsible only for the website, 15, 20 people. You are responsible only for payment providers. You are only responsible for the speed of execution. So there are 10 people and their only role is to make sure that the speed of execution is not only quicker and quicker, but in comparison to other platforms, it is beyond comparison. So these are things that we work with on a monthly basis. But taking into consideration that the world is a different place and we have to communicate with you as clients, the world is completely different. And we have to understand how to smartly communicate with you. Because there are places in the world, as an example, Germany. In Germany, when our team wants to call a client to introduce our offer, Germans do not like to talk too much on the telephone. Do not bother me right now. On the other hand, if you go to Spain, they want to talk to you. They want to touch you. They want to meet you. They want to be with you and interact with you. And we have to make sure that we understand not only the fact that the world has changed and talking to clients and communicating with you as investors are not only meetings, phones, and emails, but we also have to find the right time to do so. So notifications to our teams. If there is something wrong, if you filed a complaint, we want to contact you immediately. If this complaint is not answered very quickly, then obviously our customer support will, for example, not receive bonuses. Everything is based on numbers. If cases are not solved quickly, if the chat is not answered quickly, if you rate our team badly, we make changes. Everything is based on numbers, whether we're talking about chatbots, notifications, pop-ups, widgets, etc. We try to understand your needs. So if there's anything wrong, we want to do it We want to obviously enhance your journey. Because why is it so? Think about your user experience of Netflix. Netflix does obviously advertise, but me personally, when I started using Netflix, I started using it because someone told me. When I started using it, I told probably 10 other friends. I want our clients, our investors to be our ambassadors. If you're happy, amazing, recommend us. If you're not happy, not only do we want you to tell us, but I want you to tell 100 people not to come to us. We will learn from that way. I don't want everyone, if you're not happy, just change a broker. Make negative noise about us. That's the only way that we are about to change. And the most important thing is what I mentioned before. Every single month, we try to improve our offering from every possible perspective. And again, I really do hope, I know that we are rather new on this market, but hopefully, like mentioned before, I really hope that we're going to achieve similar success like we did globally. And again, I don't mean to sound arrogant, but I am extremely confident that it's a question of time before we do. And if there's anything you need ever, our team is always here for you. Today at our XTB stand, in the future, we have an office obviously in Dubai. We are fully regulated, where you are always more than welcome to come. So thank you guys. And if there's anything you need from me or the team, we will be at our stand very soon. Thank you very much. Thank you very much.
Thank you, Omar, for that wonderful presentation. And we're going to get straight on. We are a little bit over time. Up next, our next presentation is going to be on the effective techniques for risk management. And we'd like to welcome up to the stage from Noor Capital, Sheikh Mohammed Jabri. So forward, backwards, and that one is a laser pointer.
I need the forward one. Which one is that?
Just a big green one. There you go.
Thank you so much. Good afternoon, ladies and gentlemen. Myself, Mohammed Jabri. I'm from Noor Capital. Today, I want to share my practical experience of my career with 2 decades of experience with one of the most, you can say, international financial companies. So I've been into this industry from 1996. We used to place orders through telex for the clients, and we don't know at the back end what is happening with the banks, what quotes we are doing, what bid offer we are getting. Now the technology has improved, so we know what is going on in the financial market in our hand. As we say, trade as you go. So you know the bid offer prices by yourself. Nobody is behind the screen to change the prices. So you just click on trade. Today, I would like to give you a small brief of my experience. Like I've seen a matrix of people playing in Forex, making money and losing money. Well, for every business, you require dedications. So with our business, of course, you require commitment, dedication, for any investment you make in Forex, whether it is a small investment or if you're making a high amount of investment. Without dedication, if you are doing any investment, that means you are just gambling with your money. So you need to focus what you are trading on. Basically, there are a lot of instruments to trade on, and there are a lot of instruments which moves very frequently. In a second, you can see your account is in plus. In a second, you can see your account is in minus. So for that, the risk management is more important. To have such thing, dedication is most extremely important thing to have it. So when you are dedicated to something, you will learn more on a day-by-day basis how you get your experience on it. There are many companies where you can invest with. The most important point is how they are regulated with. How is your capital is safe? That is the most important thing. Making profit is a different thing, but what is your capital? What's the capital guarantee? How the capital is safe with you? Those things, you need to remember first before you do any investment with any of the companies. And always don't focus on making money. Focus on how your capital is safe first. Okay, what you have, how you can save that. That is most important. Without that, if you are doing it, that means you are just playing around with your money. You don't like your money to be with you. You want the money to be loose. So especially what I would like to say today is like, don't be a transit person over here. Like people come on transit over here, just play around for 2-3 days, lose your money and go away. Play with your capital very safely, follow your techniques. $1 profit is more better than $2,000 loss. So whenever you are trading, don't think that, okay, this is a long-term market and where you want to play around with the money. Think, because market is very volatile these days. You can see what is happening in GBP. Yesterday, GBP has crashed 200 points. Somebody is on the correct direction, definitely he would have made money. But somebody on the wrong direction, definitely he would have lost money. But to follow that, like instead of waiting that 400 points crash, you can have your risk management in place, like what profit and loss you want to make on such trades. So you need to decide that before you put any investment in place. Basically what happens, like any investor, whether it is a new investor or whether it is a smart investor, he has been doing it for so long, whoever it is, but nobody can, predict that where the market can go. It is nothing in their hand. We follow fundamentals, we follow technicals, we do many things. But at the end, on one row, we go wrong. We can have 5 trades correct in a day, but on one trade, whatever you have achieved in the 5 trades will go away. That is called overconfidence, like over trading. Okay, fine. Like a new trader, if he's a beginner, what he does, he start trading in the account. Okay, 1 trade went as a winning trade, 2 trades, 3 trades, 4 trades. At the end, he go for the 5th trade. When he go for the 5th trade, that means he going for the 5th trade, it went in loss. That means whatever he has made from the beginning, from the day one, starting of the day when the UK opens at 11 o'clock, let us suppose he started to trade. He started to trade 1, 2, 3, 5 trades he made. And suddenly at the 6th trade, he lose everything what he have achieved. That means he don't follow the risk management because he's saying, okay, plus. That means I'm into this business. Okay, I started to make money and I'll make money at the end of the day. You have to focus on risk management. Risk management comes with we have a different orders to place on. Okay, you are very much greedy, try to put your trailing stop, trailing profit stop. There are a lot of options which has been given to each and every platform where you can utilize those options to protect your account. When you're saying that, okay, fine, I have invested like $100,000. Okay, I have a huge amount of money of $100,000. But what do you do with the $100,000? If you are taking $100,000 into consideration and you are doing the same trading of $100,000, that means you are gambling yourself. So you need to follow the risk management by giving out in a way that whenever you do the risk management thing, like, okay, I will use only 10% of my capital to trade in, 90% I will leave it to the market. But if I am capable enough to lose 10,000 as well. But suppose if I am not capable enough to lose the 10%, that means I should not enter into this market. And people, those who have got excess amount of money should enter into this market. If we don't have any excess amount of money, that means he's putting his earnings, hard-earned earnings into the account and just to take advantage to make money. And those people are carried away with all emotions. There is an emotion involved. People lose money with emotions and extra experience in this market. Like I say, okay, fine. Today, pound is crashed 100 points. Okay, fine, no problem. It will come back. It will never come back. It will go down. So there, if you can stop yourself, if you can place this orders, which is based like limit orders or stop orders, if you are getting into profit, like I said, trailing stop loss or trading profit orders, both can be placed together. So when you are making money, at least make some money. Don't wait for the long term, like, okay, fine, if the market goes there, I'll book my profit over there. But try to book the profit in a way, whatever you get in. Don't wait for the market, to go give you like 200 points profit. Maybe it can give you 100 points and it can come back to the normal price. Then what will happen? Whatever the profit, like some things, you have a profit of $10,000 in the account. Suddenly you see a $10,000 profit. As a human being, your mind goes somewhere. Okay, with this 10,000, if it makes 20,000, I will go there. I'll buy something. I'll do something. All those imaginations comes into picture. But for those imagination to be practical, book the profit. Every industry has risk and rewards. Here also you have risk and rewards. So both you need to follow yours. If somebody is not booking the profit, that means he is not a trader. He's just thinking that fine, I'll put $10,000, I'll make 1 million tomorrow. Those are dreams which never come true. It comes true only sometimes, for 100 out of 0.1%. For those people, if the market goes in right direction. So you need to do your risk management by placing stop loss orders. Every industry, every company, they have their tools that you have a trailing stop, you have a profit trailing stop, you have stop loss, you have limit orders. So what will happen? The big investors, how they make money? They try to keep the risk management in safe. What the capital they are investing, they trade only in a small amount so that they keep the rest of the money for the market to evaluate. So if the market is going down 200 points today, maybe a chance to recover back 200 points. If you are not keeping your risk orders and if you're waiting for the market to get 200 points, then you are out of it. So you always need to put stop loss orders to secure your funds. So market will be there today, tomorrow, day after tomorrow. If you have the funds, you are a trader for tomorrow. If you don't have the funds, you are not an investor for tomorrow. So like I said, don't be a transit person. Be there, stay there. Market will be staying with you for your whole life. Nothing is going to change. On the pricing will be changed. So your capital should be safe whenever you make a trade. Like I said, $1 profit is more than the $2,000 loss. So when you're making some profit, try to book your profit and wait for the next entry to come in. You have fundamentals, you have technicals, you can use your fundamentals, you can use your technicals all in place. But sometimes what happens, even though you follow all, you go wrong. So it's better to have it a secure stop loss whenever you trade in. Put a stop loss, calculate your risk. Okay, fine. I am going to take this much of risk on any of the trade. So that means, okay, fine. Suppose if I buy GBP today at 134.50, I feel like, okay, it might come down to yesterday's low of 134.05 and it can fly back. So what I will do, I'll calculate my risk at 134.00, maybe a 10 pips or 15 pips below the price. I keep a stop loss and I leave the market. So I don't have to worry about it. I put if you're seeing that, okay, market has crashed from 1.36, it might go down to 1.34. So what I will do, I'll put a profit order on the high of yesterday and the stop loss order below the low of yesterday. So that means I'm okay. If I'm losing this much of amount. I don't have to worry about anything. And I can do my work very peacefully. But if you are doing with the emotions, whatever you have put in, whatever earnings you have put into this business, then at the end, your emotions will carry you. What will happen each and every trade, you will be concentrating more and more, doing nothing and just watching the account. In that way, you will lose more and more. You will think that, okay, market will recover now, market will recover now, market will give me a benefit now. No, nothing happens as such. No emotions in this business. You have money, you are in the business. If you don't have money, you're not in the business. Whether you are a big trader or you are a small trader, you need to have a proper cushion in your account to have, faith that, okay, fine, if I'm doing this investment, definitely I'm going to make something out of it. Thus, positiveness should always be there. If you overtrade, like we say, now the best thing is the leverage, the tempting one. What people do, okay, I want 1:500 leverage. Why you want 1:500 leverage? When you have money, trade with the small leverage. What happens is people don't go greedy with the leverage. No, I want to average. Okay, you want to average, trade with lower leverage, like 1:200, 1:100. What people does, okay, I want 1:500. Some people say, no leverage, you can trade as much as you can. There are a lot of offers which is going on. But the thing is, think about your investment. If you are a real trader, you will never look for leverage. Leverage is the one where you lose money because people ask you to trade more and more. When you start trading more and more, definitely one trade will give you benefit. If it's trading against, okay, I will add one more with 10, like 15 points market went against, okay, let me average. What will happen if market goes in one direction, you will lose in a second. You never know what happens. So this leverage, you need to do in a proper calculation way. Fine, if I have this leverage, I will not take the full leverage into consideration, even though the company offers a higher leverage. So you need to decide like what amount of money you are going to take a risk of each and every trade. Once you decide this risk on each and every trade, even though if you average, like suppose if I have a trade at 134.00 as a buy trade, okay, if market comes down, I'll buy again at 133.80. Okay, with 133.80, I will try to put a stop loss in place so that, I have only one position in place, but I'm just trying to, add up one more position so that if the market comes into my direction, I can make on the two positions and I can average and I can come out. Not like adding up the positions, just not doing your proper calculation of risk. That means you end up your whole capital. And then the next day you will be saying that, okay, I should have done this, I should have done this. You know, these are all emotions and dreams which never comes true. Only if you are on the right direction, if if the things are going in correct way with you, this will give you the benefit of it. Otherwise, there is no benefit in that. So what you need to do whenever you do any investment, because normally what happens in FX, people think that, this is the only way where we can gamble around like a casino, put your money, start one trade and you finish off the trade. No, it's not that way. If you are doing some investment, try to analyze it, what you are doing, whom you are investing with, what is my capital security, even though profits are there tomorrow, profits are not there tomorrow. But what is my capital guarantee, whether I'm putting the money with the right people. So these things you need to do. And secondly, the age factor. Sometimes, people at the age of 50, they have done their full life of job. They have got their hard-earned money with them. And what they need to do, they get retired. And what they try to do is, okay, I will do such investments where I can get free amount of money. So what they will do, they'll try to put in some money into their account and they start trading it. I have seen in my career, there are so many people, they started doing this. Once they start doing this, whatever the hard money, whatever they have on, it's all gone. At the end, then they need to, they need to support their family. They have their family, they have their children educations and everything. For those people, those who are into this business, they should not come onto this with the risk amount of money what they have. So if they have an extra capital of money, okay, fine, go ahead with it. Then you can try to make money. Once your mind is free with everything, definitely whenever you trade in, if you don't know the fundamental, if you don't even know the technical analysis, when you hear from here and here, sometimes you make money as well. I have came across many clients in my career and all of them, they do the same thing, because what they do, okay, fine, I will make a trade. Let's make a trade, but make a trade with the stop loss, make a trade with the profit order. So what will happen, even though you go around, you go to the washroom, you go anywhere, at least you have, you have something in your hand. Okay, I have protected with my stop loss and with my profit order. At least I am being protected. Most of the people, what they do, they don't care about it. No problem, I have only one position. Let's go and come back. Once he go around and come back, he see that, okay, his account is already gone, or he has a huge losses in the account. These things you need to analyze when you do your investment. And there are certain people who says that, okay, I will do only small amount of investment. They have big amount of money, but they don't want to use that money. So that means it's a calculated risk on my earnings. Okay, fine, I take only calculated risk on my earnings. I'll invest only a small amount, portion of my income to this business, and I'll see how does it goes. Finally, what will happen? Definitely this guy will make money. He follow technicals, he follow fundamentals, he follows all the world, whatever the companies who's giving technical analysis, whatever they are getting it. Because see, everybody is working on the same technical analysis. One analysis, if he's technical analysis person, if you give the levels, the second one will have the same level. There is no change. There is the change only in the language. If this breaks, this will happen. If that breaks, this will happen. The only thing is where you enter, where you exit, and what is your risk, what you are going to take on it. If you decide your risk, definitely any investor who do this investment in Forex, they will make money. In my career, I have seen people making money in millions. They are losing money as well. But those who are done with the calculated risk, with their amount in the account, definitely they have made money in this business. This is not a gambling business. This is just how you analyze the market and how you trade in. Every day there is an opportunity in the market. Market will never end. Every day it will give you the opportunity to trade in this market. Every instrument will have an opportunity. They are gold traders, they are euro traders, they are GBP traders, they are cross trading as well. But when you have funds, you are there on the second day to trade in the account. If you don't have the money, you are not there to the second day. Market is there, you will be just sitting quiet. Oh, I should have done this. I made this mistake. So to repent on your mistakes, it would be better that if you start doing it from the day you start your trading. Okay, if you have any your analysis, if you have your strategies, practice on the demo account. You have a demo account in place, practice on the demo account, apply the same thing on the demo account, then get into the live account. Once you get into the live account, you feel the real money. There are a lot of people who made money in $100 account, $100,000 account, people made $500,000 in demo. But at the end, if you put in the live account your own hard-earned money, then for every pip you will count, okay, I'm losing this, I'm gaining this. This is my profit. This is my loss. What is happening? So you are totally concerned of it. So when you are totally concerned on your investment, so what will happen is you need to put your strategies in place, follow the fundamentals, follow the technicals. What is the news which is going to be released? You have your economic calendar from different companies. Follow that. What news is going to impact the dollar? Follow those technicals. Then put the trade in, put the stop loss, put the take profit, calculate your risk according to your capital, and then you trade on. This is how people make money in FX. If you put $1 million, nobody is going to trade in $1 million. They will trade only for $100,000 unless he wants to gamble and make money out of it. Don't think this is as a gamble. Trade as an investment. Trade, secure your investment. So this is how, what you can do is when you try to make any trade, at the same time, try to put your risk orders in place. Try to put your profit order in place. What will happen, even though you are not seeing the market, you are still there in the market. That means I know if I lose 30 pips, I lose $300. If I gain 30 pips, I gain $300. That is more than enough. You can make 10 trades in a day. At the end, follow the next day. Because the day is gone, you have calculated profit in your account, then you look for the next day. This is how people get into it. Yeah. So the bottom line is try to, when you do some investment, try in a way that you take your risk into consideration, what amount of risk you are going to leave out from your pocket, then accordingly you do your investment. And we at Noor Capital, we have our Noor Academy. We train our clients, we train our investors who wants to get into fundamental and technical knowledge. We train them as a Noor Academy. You can visit our booth number 46 as Noor Capital. Visit there, they will give you more information. If you want to register as a Noor Academy for a nano diploma, where you get a diploma in financial services, get in technical and fundamental analysis, try to learn over there, get the diploma, you will be like, authorized traders, like, where to invest, what to invest, how much to invest, where to quit and where to enter. So try, register there. We have our barcode for registering the nano diploma, and we have some giveaways from Noor Capital. Please have it. Thank you very much.
Hang on. Thank you so much, Mohammed Jabri, for that fantastic talk. Up next, we have Ivinia Milkuliak. She is from B2B Broker, I should say, sorry. And she's going to be talking to you about building ecosystems in the FX and crypto industries, experience and challenges. Ivinia, if you'd like to come up.
This one is. Yeah, hello everybody, and thank you for having me here. My name is Evgenia. I'm a Chief Operating Officer of B2 Broker Group of companies. We are liquidity and technology provider for both Forex and crypto industry, and we have been building our ecosystem since 2014. So today I'm going to share our experience, the challenges that we have faced in this, and hope you will enjoy it. Yeah, so I will start my presentation with a quote made by Financial Stability Board. That is, sooner or later, demand for the most financial services will be met solely by an ever-evolving ecosystem of financial institutions. You know, this governmental institutions always like to give this very complex and smart quotes, but let me ask you one question. Like how frequently you started to hear the mentioning of ecosystem in conjunction of business in general or Forex or crypto business in particular? Personally, I started to hear this word so frequently last time from our partners, from our clients, from our leads. And this word became so trendy recently. But I got the feelings that many people, they just confuse the meaning of infrastructure with an ecosystem. So let's figure out what is ecosystem first. Ecosystem is the ability to connect different services within one infrastructure. And usually ecosystems can be divided into different parts. In general, it's at least 4 or more. So it's finance, e-commerce, lifestyle, and IT. And of course, this term became so trendy because of the reason and because it gives certain advantages for both businesses and clients. So the core advantages of the ecosystem accessibility means that, of course, for the user, it is much more useful to buy everything from a one-stop shop, from a one source, rather than buy different services from 2+ service providers. It's synergy effects. It means that people tend to buy more services if they can get some complementary services. The better user experience and transaction pace means basically the same, because when you buy everything from one single provider, you reduce times that you spend on transactions, etc. So what type of ecosystem usually we have? Here I put those ecosystems and those examples that I use personally in everyday life. It's a Google, it's Apple, it's Amazon. And usually it can be divided by several types of ecosystems, meaning open, closed, and hybrid. So open model of ecosystem means that competent suppliers of goods and services have access to the platform. We usually see it in e-commerce because we know that in App Store, in Google, there are several suppliers, and both businesses, like an ecosystem and the customers, they benefit from it. And because of the level of security must be higher in IT and in finance, actually that's why here we have a closed model. So a closed model means that supplier of goods and services is a platform, is an ecosystem itself. And in lifestyle, we usually have a hybrid. And very interesting fact that McKinsey made their own research, and they expect by 2025, so only in 4 years, to have 12 major ecosystems that will account $60 trillion till that time. So even right now, here I put those ecosystems that we have now. In 4 years, it will be like 12, but a major one. So if we will speak about our industry, about fintech in general and Forex and crypto industry in particular, here we also can distinguish 3 different types of ecosystem. And the first ones that I put here is a service provider, or let's say trading technology provider. Second one is a Forex broker, and third one is a crypto exchange. So if we will speak about trading platform and B2B technology provider, so it is understandable that the main basis of this kind of ecosystem is IT. Because if you will not provide the high level of IT services, basically your customers will not meet their needs. So a good example of this kind of ecosystem is very well known to all of you, a company called MetaQuotes. In addition to their main services, which are trading platforms and trading terminals, they also provide several other services that their customers can use within their ecosystem. So they also provide DNS connection, they have their own programming languages, and they provide many services to in terms of business. Like they have a very good system of task management called Teambox. They have a marketing in-depth analytic tool called Fintasm, and few of other, and they also have good service as for educating of employees of the brokerages who buy the terminals. In terms of Forex brokerages, actually I can bring you many examples, but here I would like to tell about the company called eToro, because they're on the market for a very long time and they have their own IT infrastructure made by their own. So in addition to the trading platforms, they also have a money management system. And in terms of communities, they do a great job because they give their customers, their traders, ability to merge into some private clubs, and that is how they grow the community. In terms of crypto exchange, I think that the amazing example of ecosystem of cryptocurrency exchange is a company called Binance. So in addition to the services that they provide for their traders, such as cryptocurrency exchange itself, they also have the infrastructure, but they also do a lot for grow blockchain industry as a whole. For example, they have this analytical lab where they analyze blockchain transactions and blockchain as a whole. And they also have this like blockchain academy for the education. And one thing that I will mention a little bit later is about M&A. So what they do, they also have a kind of accelerator for the blockchain startups, and they grow these blockchain startups that in future can be addition to their ecosystem. Here I would like to tell a little bit about ways of you to grow to build your ecosystem. So there are several ways of doing it. And first one is organic. So organic, it means that you build your products on your own. You mean everything in-house. This is one of the most costly and one of the most time-consuming ways of doing it. Why? Because when we were speaking about the meaning of ecosystem, we figured out that this is the combination of the products in one infrastructure. So to build even one product, you have to have a bench of developers, you have to have project manager, product manager, testers, QAs, etc. And of course, the salaries in this industry is one of the highest, and the level of competition between the companies for the developers and for IT people is also very high. So you cannot expect that today you are posting a job position and tomorrow you will get this IT guys, right? And for each and every product, you have to have a separate team and then to integrate it. So it's costly, it's time consuming, but it has one big advantage. You will not be independent from the service provider. Of course, we can think about this from the other hand. If you really trust your service provider, if it's company with a good level of trust, then that's not a disadvantage at all. And second way of building your own ecosystem is boosted. So boosted means opposite. It's when you do not build your products on your own. It's when you buy these products from service providers. So it also has its own disadvantages and advantages. And the big advantages is that the price and the time that you will spend on building this kind of ecosystem on a boosted model is very low. It means that you can buy a ready-made product that will be set it up for you just in a few weeks or few months on the price of, let's say, salary of one developer, but you will have a ready-made product. And disadvantage is that the level of autonomy is low because you will be independent from a service provider, which is, again, can be good, but can be not. But what I would like to tell is that if you're speaking about market, you understand that, let's say, right now we have some market demand for one product, and the demand is right now. So if you will start to build it on your own, it means that you will spend some time on that. And you cannot predict that in time when this product will be built, there still will be demand for the market. So sometimes it is much more easier just to buy this product and start to make some money. M&A is very interesting way of doing of building your ecosystem, but this is way that is usually used by the big companies, because if to compare it to boosted, we just buy one product from a service provider. Here we buy the whole team, or we buy the whole company with a ready-made product and with a team that is going to maintain and support this product. So M&A usually are used by the companies such as Binance, let's say. And hybrid is basically a combination of one or few. And here I would like to tell you about our own experience, because it took us 7 years to be where we are now. So from the very beginning, we used hybrid model of building our own ecosystem. Like 70% of our ecosystem, or maybe even more, was made by organic model, but we also used boosted model to accelerate our growth a little bit. And right now, our own ecosystem can be divided into a few parts. It's technology. In terms of technology, we have our several trading platforms. And one of the major platforms that we built is B2Trader. It's a platform on the basis of which you can build your own cryptocurrency exchange. The other product that I would like you to tell, it's B2Core. It's a core system for the brokerage business. It's basically the system for both broker and its users, personal area or traders room. You can call it as you wish. But what is more important, that was the first product that we built in 2014, but we never stopped development of this product. And every single month we add some features. B2Copy, it's a money management system. It's a system that you can use to boost your business model. Basically, that's a copy trading system when you are focusing on both beginners and experienced traders. So beginners can copy the transaction of the more experienced traders. Marksman Hub, it's spot liquidity hub. It's if you have your own cryptocurrency exchange, you can basically connect this liquidity hub, and through it you can connect to different liquidity sources and took liquidity for both, let's say, Binance, B2BX, or any other exchanges. In terms of liquidity, we provide more than 700 trading instruments, and just recently we added 15 new crypto CFD pairs. And in general, right now we have 115 crypto CFD. We usually provide liquidity from different regulated entities. In terms of payment, we cover both fiat and cryptocurrency payments. And our European regulated company B2B and Pay right now is in top 3 of cryptocurrency payments. We also added some value in terms of business. We started to provide some marketing services, but not advertisement. We just built a website. An example of websites that we can build for you, you can see on our own website, because it also was made by B2Broker. And usually I can tell that all of our products we first test on ourselves, and only after that we started to provide for other businesses, for brokerages and for exchanges. One also interesting fact, and the things that I'm personally very proud about, is B2Broker Venture Capital Fund. So I told you that we first developed and built our ecosystem on the organic and boosted models. And right now we already reached that level when we also can do it by merchant acquisition. So what we do, we founded the venture capital fund, and right now we're in the process of looking for blockchain companies or Forex companies that have their ready-made product and that would like or tend to solve it. So if you also have something to offer to us and that can be added to our ecosystem, we will be glad to review your applications and see how we can collaborate. Yeah, how to build an ecosystem working with vendors. That's basically the boosted model. And I can tell one more important thing is that when you're looking for a service provider, you have always be aware about one thing, that you can ask them, do they stop develop their products and sell it as a ready-made solutions, or you also will going to receive this update? Because we in B2Broker, what we do, and this can be confirmed by the clients who were working with us from the very beginning. The products that they bought, let's say in 2014, and the same products that they have right now, that's completely 2 different products. Because every single month we release some new features. We're always in time with the market, and we understand the requirements of our clients. So if the requirement is something, then we will do this something. Yeah, I see that I'm running out of time. So what I would like to tell, we will be glad to to answer your questions and give you some ideas of how to build your ecosystem. And we are here on booth number 3. You can come, we are diamond sponsor here. And thank you so much for your attention. And I really hope that this information was useful for you. Thank you.
Thank you, Avinia, for that wonderful presentation there. And we'll move on quite swiftly. Our next topic of discussion is how central banks' policies in 2022 would affect market trends. And I'd like to welcome up to the stage from Orbex, Asim Mansour. Wakey, guys. We need to get some coffee out here.
Forwards? Okay. Okay, thank you. السلام عليكم. طبعا احنا كلنا بص انا هحاول في المحاضرة دي اختصر لكم كل اللي ممكن يحصل بالنسبة للذهب والدولار خلال الربع الأخير 10 دقائق أو ربع ساعة، أوكي؟ فبس أنا عايز أعرف في الأول كده موجود هنا باع أو اشترى الذهب كام واحد؟ How many people buy gold or sell it? Okay, not so many of us. Okay. خلينا نتكلم بشكل سريع على الفترة اللي فاتت بالنسبة لقرارات البنوك المركزية وازاي الفيدرالي الأمريكي هيأثر على أسعار الذهب خلال الفترة اللي جاية. بعد أزمة كورونا شفنا إن ازاي البنوك المركزية خفضت معدلات الفايدة وعملت الترا لوزنج مونيتاري بوليسي بسبب ان الاسعار الحاليه للذهب مدعومه بخفض الفايده معدلات الفايده المنخفضه الصفريه. طيب عايز اقول لكم على حاجه معينه. البنوك المركزيه حاليا احنا عندنا اغلب البنوك المركزيه this is the interest rate path عندنا هنا مستويات صفريه لمعدلات الفايده. قبل ازمه كورونا كان الاقتصاد الامريكي محقق اطول فتره انتعاش من 2009 ل 2020 128 شهر من الانتعاش بالنسبه للاقتصاد الامريكي. طيب حاليا بعد ما حصل الفيدرال ريزيرف بالانس طلعت من حوالي ماينس هنا في الريسيشن اللي حصل بعد ازمه كورونا كوفيد 19 بعد كده ارتفع الذهب للتعافي الاقتصادي وصل لمؤشرات 12.2. طيب الجراف ده بيمثل معدلات الفايده كانت في محاضره في يوليو 2019. طب ايه هنا اللي احنا ممكن ناخد بالنا من معدلات الفايده في المنطقه دي؟ خدوا بالكم كده ايه اللي حصل. ده مسار معدلات الفايده في امريكا من 1975 لحد 2015. الجراف ده قديم. ايه اللي حصل هنا واخدين بالنا منه؟ معدلات الفايده كل ما بيحصل رفع او التايتنينج سايكل بيحصل ارتفاع لمعدلات الفايده وبعد كده بنشوف استقرار وبعد كده بنشوف معدلات فايده رفع ليها واستقرار بعد كده ريسيشن مره ثانيه. طب هنا في محاضره يوليو 2019 قبل ازمه كورونا شفنا مره ثانيه الفيدرالي مع بدايه 2015 بيرفع معدلات الفايده وشفنا في 2019 و2018 تثبيت لمعدلات الفايده. احنا في الريسيرش تيم في اوربكس توقعنا ان هيحصل خفض لمعدلات الفايده حتى قبل ازمه كورونا، كان بسبب ان الاقتصاد الامريكي مسجل اطول فتره انتعاش وعندنا نفس تكرار السيناريو للتايتنينج سايكل بالنسبه للفيدرالي الامريكي. طيب خليني ابص برضو هنا على التضخم الوقت الحالي. اغلب دلوقتي الفيدرالي الامريكي بيركز على التيبرنج اللي احنا متوقعينه في شهر نوفمبر اللي جاي. طيب في الوقت ده ايه اللي هيحصل بالنسبه للتضخم؟ التيبرنج بيعمل ايه في الذهب؟ معروف ان هو بيضغط على اسعار الذهب. فاحنا متوقعين حاليا في نوفمبر 2021 هيحصل البدء في تقليص عمليات شراء الاصول اللي ادت في الاساس لارتفاع اسعار الذهب. بالنسبه للتضخم هيدي فرصه للفيدرالي الامريكي ان هو يسرع وتيره خفض برنامج مشتريات الاصول. ليه؟ لان احنا عندنا التضخم مرتفع فالريل ييلدز مختلفه عن الفتره ما بين 2015 2014 2015. فبالتالي ان احنا متوقعين ان هيحصل فيه تيبرنج في شهر نوفمبر اللي جاي، ممكن يؤدي لانخفاض اسعار الذهب لتحت ال 1700 وتوصل ل 1680. انا عارف دلوقتي مش مهم، انا بالنسبه لي الذهب الانخفاضات اللي بتحصل حاليا دلوقتي اتغير من الاتجاه الحالي بالنسبه لتاثير الفدرالي الامريكي على الذهب. الفتره الحاليه اللي احنا فيها دي هنشوف احنا من اول الشهر بنبيع في الذهب، من اول الشهر حاليا الذهب 1730. هيروح فين؟ الوقت الحالي ده تسعير للسوق للتبرنج في شهر نوفمبر. ال 1680 ال 1700 نطاق مستهدف على المدى القصير. هنشوف بعديه حاله من الانخفاضات في خلال الربع الاخير من السنه دي بسبب قوه تعافي في سوق العمل. في امريكا شفنا في تعافي قوي بالنسبه لسوق العمل، شفنا هنا معدل اضافه الوظائف تم فقد 20 مليون وظيفه، استعاد الاقتصاد الامريكي حوالي 15 مليون وظيفه، فاضل لنا 5 مليون وظيفه ونعود لمستويات قبل ازمه كورونا. مره ثانيه شفنا ارتفاع لمعدلات البطاله بعد ازمه كورونا، انخفاض قريب من المستويات اللي حصلت قبل ازمه كورونا. الويج جروث لسه الحلقه المفقوده بالنسبه للاقتصاد الامريكي. فخلينا هنا نشوف التضخم بالنسبه للاقتصاد الامريكي. عندنا حاليا التضخم طبعا اعلى وتيره ارتفاع من 2008. ده هيسمح زي ما قلت ان احنا نشوف فيه تباطؤ مره ثانيه في التضخم زي ما حصل في الفتره ما بين 2005 و2008. شفنا ارتفاع في التضخم لمستويات 6%، هنشوفها مره ثانيه بعد كده هبوط مره ثانيه. فده هيسمح مره ثانيه للفدرالي الامريكي ان هو يقلل وتيره الخفض، ومع ده هنشوف فيه ارتفاع مره ثانيه للذهب من المستويات اللي احنا قلنا عليها ال 1680 وال 1700. طبعا هنا دي توقعات الفدرالي بالنسبه لمعدلات الفائده. انا شخصيا اتوقع ان الفدرالي الامريكي هيرفع الفائده في اخر 2022، وده بالتالي ممكن يؤدي ل يعني مره ثانيه هبوط اسعار الذهب ولكن في نهايه 2022. هنا بشكل عام ده زي ما بنقول التكنيكال برسبكتيف بالنسبه للدولار الامريكي. عندنا هنا دبل بوتوم بالنسبه للدولار الامريكي، كسر النيك لاين هنا هيؤدي لارتفاع الدولار الامريكي. ممكن نشوف مره ثانيه مستويات ال 103 على الميديوم تيرم. مره ثانيه احنا هنا عندنا برضو على الشورت تيرم استقرار هنا في الذهب. عندنا مره ثانيه هنشوف فيه هبوط على زي ما قلت خلال الربع الاخير، مره ثانيه بعد كده هنشوف فيه ارتفاع بعد كده في اسعار الذهب. خلينا برضو نشوف اليورو طبعا كسر مستويات ال 1.17. هنشوف هنا في هبوط بالنسبه لليورو بسبب استقرار الاسعار تحت الموفينج افريج 200. بالنسبه للذهب عايزكم تركزوا مهم جدا في الرسم البياني ده. الرسم البياني هنا حصل في 2011 مستوى الذهب وصل 1920 وعمل تصحيح 20% لقرب مستويات ال 1500. مره ثانيه بنشوف 2075 نفس التصحيح اللي حصل 20% مره ثانيه وصل ل 1682. نفس الحركه الحاليه الموجوده في ما بين 2011 و2014 هي نفس الحركه اللي حصل في 2020 و2021. مستويات ال 1680 فشل في الذهب في كسر مستويات ال 1680. هنشوف في ارتفاع مره ثانيه لمستويات ال 1900 مع تكرار السيناريو اللي حصل. لازم الذهب يسجل ارتفاع مره ثانيه تصحيح 20% بنفس اللي حصل في الفتره ما بين 2011 و2014. فده كان بشكل سريع. احنا عندنا دي الوقت بسبب ان احنا عندنا طبعا في ايفنتس تحضير للسيرموني بتاع الفوركس اكسبو. ولكن عايز اقول لكم برضو في نهايه المحاضره اوربكس عامله جولد رش، في عندنا سحب على فرص الفوز ان انتم ممكن تكسبوا كيلو ذهب افري كوارتر. اتوجهوا للبوث رقم 6 عشان تعرفوا المزيد من التفاصيل. فرصه ان انتم في الاكسبو ده يكون عندكم فرصه ان انتم تدخلوا السحب، اتوجهوا عشان تعرفوا المزيد من التفاصيل بالنسبه للجولد رش اللي اوربكس عاملاه. شكرا لوقتكم ونتناقش اكتر في البوث. شكرا. ثانك يو.
Thank you so much to Asa Mansour for that wonderful presentation, how central bank policies in 2022 would affect market trends. And we're going to continue with our next session, which is going to be on the alpha trading strategy given to you by Naga. And we're going to welcome up to the stage Andreas Thalasinos. Andreas, if you'd like to come up, thank you so much. So forwards, backwards, and that's a laser pointer if you need
Forward, backward. Okay, thank you so much. Hello, everyone. How do you feel today? I cannot hear you guys. Let me hear you, please. How do you feel? That's better. All right, my name is Andreas Salasinos. I'm the Director of Education at NAGA, and my job is to travel around the world and teach people how to trade the alpha trading strategy. Do you like that? Yes? All right, I will give you a preview of the alpha trading strategy now, because unfortunately they just informed me that it's going to be only 15 minutes. So I started trading the markets more than 2 decades ago. I was full of energy and enthusiasm to make money. Okay, I'm lying. To make a lot of money. Actually, to become a millionaire. Does it ring a bell, guys? Maybe? Do you share my dream? Yes, I know, guys. Thank you. So the only problem that I faced is that I didn't have any prior knowledge how to trade the markets. You see, I mingled with a lot of guys who studied economics and finance. So whenever we used to go for lunch, they used to say, look, guys, I made $5,000 today, $10,000. They were bragging. They have shiny branded suits, shiny shoes, red, fast cars. You get the picture? And I had a small blue Mazda. Anyway, but I had that dream in me that I wanted to succeed in trading. So I started trading without knowledge, the stock market. And I was making as well $5,000 per day, $10,000 per day, unrealized profit. Do you understand what I'm saying, guys? Unrealized profit. I was so happy. You know, I would walk in the street of my town like that. Very proud, you know. I am a smart guy. I make a lot of money. And then after a while, I realized that I was just lucky. Why? Because the market was in a strong uptrend, and no, I'm not going to say the word, maybe I'm not allowed. Anyone could make money, including myself, right? There was no way to lose. Remember, in the stock market, you cannot short in an uptrend, correct? You get the picture. So I was very lucky, and I realized that, and I said to myself, I have to take control of my money, and I have to learn and control my decision making. So I said, I have to learn. Unfortunately, there was no many resources, reliable guys, this is a key word, reliable resources to learn many years ago. And just to let you know, they told me, or I Googled it until today, and I challenge all of you to look up these three next definitions that I will tell you. They told me that bid price is the price to buy, the ask price is the price to sell, and the spread is the difference between the bid and the ask price. I challenge you, Google them. This is what they still say on the internet. Bid to buy? I don't think so. Bid is to sell. Do you agree with me, guys? And ask is to buy. Is that correct? And the spread is the difference not between the bid and the ask. Otherwise, you have a negative spread. Who is the broker who offers a negative spread? Let us know so we go trade with them. So the spread is the difference between the ask and the bid price. I challenge you, when you leave, Google them. This is what they say. Nevertheless, it was very difficult for me to trade and learn And of course, they told me, trade the NFP, non-farm payroll report, high volatility, you will make money. And I tried it. And what happened? I lost everything. NFP, try to trade the NFP is suicidal. Do you agree, guys, with me? Yes? Let me see your hands. Do you agree with me? Thank you. And then they told me, oh, okay, NFP is for professionals. Yeah, right. So you have to trade the range. So I started trading the range. And then I realized that it was false information. It's a scam. You cannot trade the range because until you realize, recognize the range is gone. Are you following me, guys? Yes? So I tried to learn on my own. I Googled, I followed webinars, seminars. I paid a lot of money, $20,000 for a 1 week seminar. And what they taught me all the mathematical formulas behind the oscillators. This is what they taught me. So I searched and searched again, and my background in computer science, in programming, allowed me to test all the ideas that I was having. And then I discovered, guys, the Holy Grail. Do you understand what I'm talking about? This one important indicator that will give you a lot of money and no losses. Isn't this what everybody's looking for? Guys, let me hear you. Yes? Do you want to know this indicator? Let me see your hands, please. All right. This indicator, anybody knows, by the way? No? The best indicator in the markets is price. Price is the boss. Price is king. Follow the price and you will be in the right direction. Anything else is secondary. How much time I have, by the way? 10 minutes, thank you. So I discovered that it was a breakthrough. Guys, it was a breakthrough. Price is the boss. Then I started constructing my expert advisor, my robot, my automated software based on price. And I started testing it. And back testing it for 5 years, I made $15,000 profit on demo account. $15,000 back test. Is it good? Guys, is it good results? I think it's good, right? So I said, if I put more money in my account, yes, I will become millionaire. That my dream will come true. My wife is filming me. She's waiting for the millions, you know? And then I said, what if I add an indicator in my robot? So I added 2 of my favorite and the best indicators that everybody's talking about, the books are talking about, all the gurus in the world are talking about. I added the moving average and the RSI. Do you agree with me, guys? So from $15,000, I became minus. I started losing. So I added Ichimoku Kinko Hayo. Are you familiar with this one? Yes. I added Ichimoku Kinko Hayo. I added stochastics. I added a MACD. And then what? I lost $20,000 now. Something is wrong. And then I realized that it's better to trade naked. Come on, guys. Yeah, I know. Yes, naked charts, I mean. No indicators, no oscillators, no noise, no biases. Follow the price chart. And I came up with my trading strategy, the alpha trading strategy, but then I needed another important information, how to identify the trend. Because I started learning now, and I realized this, yes, of course, the trend is your friend. Do you agree with me? Yes? Very good. So how do you identify the trend in the markets? This is very important because you have to go with the trend. If you go against the trend, what is going to happen, guys? Let me hear you. You're going to lose, right? Exactly. So I found that as well. I read Mr. Charles Dow's letters to the Wall Street Journal. Have you done that? I can explain it to you in my November 20th seminar. Don't worry about that. And also I read many books about Elliott wave theory, 1, 2, 3, 4, 5, A, B, C. I read that as well. And then I read many other theories, including the Bill Williams theory, Dr. Bill Williams, the chaos theory, alligator and stuff like that, or some oscillator. I know, maybe it doesn't ring a bell, but I read all the respectable and reliable books in the industry. And I came up with my strategy, and I want to share with you very fast how much time I have, by the way. 5 minutes only. Oh my God, how can I do that? Let me see. So I will skip all these things. I will go to the juice of the strategy. Very good. So the most important thing is to identify the trend. So what is trend? Do you know, guys? Let me hear you. If you give me the correct answer, I will give you a gift back now. Anyone? Yes, what is it? Say it loud. I cannot hear you. Can we have a microphone, please? What is trend? Define me uptrend, please. And what is uptrend?
When moving, sorry.
All right, next one. Next to you.
It's the general direction of the movement.
General direction. Next one more chance. I'm running out of time.
It's making higher lows and higher lows.
What is that?
It's making higher lows.
Higher lows? No. No highs, no lows. Higher tops and higher bottoms, guys. I will explain everything November 20th on my seminar. So this is a beautiful uptrend. Do you agree with me, guys? Yes? Yes. Very good. And also, you see, it doesn't work here. Now, you need at least 2 higher tops and 2 higher bottoms to identify an uptrend. Very good. So I learned that. And then I learned that to identify a downtrend, you need at least 2 successively lower tops and lower bottoms. Yes, that's right. And now we are in business. We have the definition of the trend. Let's go on. And of course, I learned that when you have equal tops and equal bottoms, what do you have? You have a range. I call it killing fields, because when you try to trade the range, you are going to lose your money, guaranteed. Try it, or better, don't try it. So now the next step for my strategy was when to buy, when to sell, when to take your profit. So logically, I should have bought right here after the second top when the trend, the uptrend has been established, correct? And similarly, after the second lower bottom, it would be a good idea to sell, short sell, and enter the market. How much time I have, by the way? 3 minutes? Oh. Okay. Let's hurry up then. And now, when are we going to buy? Guys, this is it. This is what I discovered after I put together all these theories and concepts that I learned in all these books in my life. I said that after a beautiful downtrend, when you identify, guys, follow me, please. You see, this bottom fails to go lower than the previous bottom, because in a downtrend, you need to have lower tops and lower bottoms. Do you agree with me? So when you see this lower bottom here, it means that something is going on in the markets. What is going on? I do not really care. I am a technical analyst. I'm not in this business to ask why. I'm in this business to make money. Thank you. So after this failed bottom, and when prices go above the last top, what do? You buy, correct? Very good. Excellent. And then so this is our buy entry. And then when you have a beautiful uptrend, and then you have a failed top. Do you see the failed top? And price drops below the bottom, then what do? You sell. Very good. Thank you. Now, the next thing, of course, is where do you take your money or where do you place your stop loss? We're talking about the technical stop loss always. So here you have a beautiful uptrend. This is a failed bottom. This is our buy entry. And before we do anything else, place your stop loss right there. You never know what is going to happen next, guys, just to protect your capital. And I'm running out of time. So this is your sell. This is your protected stop loss. Now, just to show you the take profit levels and put everything together. So you see, we have the beautiful downtrend. We have our entry. Do you agree with me, guys? Is it clear that this is our buy entry? And then you place your stop loss and you ride the trend. Until what? Until you see another reversal to the downside. And this is where you are going to take profit. And if that wasn't enough, you can also open here a short sell position. Okay, guys? Is it clear? I invite all of you to booth 65. I will give you my book. I will sign it for you. I will take pictures with you, and I will talk to you about my free seminar. My colleagues can give you free gift bags, and God bless. See you in a while. Thank you so much.
Wow, what a ball of energy. That was awesome. I need those tips and tricks, that's for sure. So up next, we're going to be talking about financial forecasting using AI. And from ACT Trader, we've got the founder and CEO, Ilya Sorokin, to welcome up on stage. Keep the energy going, guys. That was cool.
All right.
So forwards, backwards, and that's a laser sight if you need it.
Oh, okay, got it. Oops. Okay. Okay. Well, basically, a few words about the company. Act Trader, originally Act Forex, started in 2000. Back then, the new technology was internet. And retail Forex, interestingly enough, did not exist. At the time, there was just an interbank Forex. So we not only had to invent a new technology, but also invent a new market. Fortunately for us, FXCM was one of our first customers. And from that, the whole retail Forex took off and became an industry. So we started as an innovative company from the very beginning. We're always on the lookout for new things, new technologies, new trends. So one of the, very much a major trends that's emerging today, is AI, artificial intelligence. So we first talk a little bit about financial analysis. Obviously, everybody here is involved in the financial analysis in some form or shape. Just walk around the show and you'll see charts and trends, and just a gentleman talking before me. How do we trade? So unfortunately, it never works, even though, just this gentleman just claimed he invented a silver bullet. Over the 20 years we've been in business, there are many, many silver bullets that never work. So we almost there, but never truly there. And so, the technical analysis financial analysis always has issues. And their issues is that in order to do financial forecasting, everything is interconnected. So there's always some kind of parameters or trends or events that you don't take into consideration. So it seems like you're making money, everything is going well, and all of a sudden something happens that you did not foresee, did not expect, and you trip, and your results are not what you expected. The criteria for good forecasting model, it's very much common. So accuracy is by far the most dominating factor, because if you cannot have an accurate prediction, your model doesn't work. The data becomes very important, because depending on what kind of data you're analyzing, you're going to get different results. So depending if the data is skewed, then your results will get skewed. So the data you analyze for your forecasting becomes a very, very important factor in your forecasting model. The time horizons, are you actually doing short-term forecasting or long-term forecasting, will affect what kind of model you're going to be using. The ease of application is always the case, because if it's too complex, then you're not going to use it. It becomes cumbersome. It's hard to use. The transactional costs are always a factor. And the last one, ability to learn and evolve, is becoming a very, very important factor, where AI actually becomes a very strong technology. If you go on Amazon and you do, technical analysis search, you're going to come up in the book sections. You're going to come up with over 3,000 books on technical analysis. If you're going to go and search for EIAs that have been written, there are thousands of EAs that people have spent money writing. So everybody is trying to teach us, or trying to come up with their own strategy or method that would work. And everyone actually honestly believes that what they just invented or what they're preaching is the silver bullet, and it will work and it will solve the financial issues. However, the fact that we have 3,000 books that teaching everybody technical analysis means that it doesn't work. Because if you go back 20 years, you probably also had the 3,000 books at that time that were teaching you technical analysis. So when we move forward today, we get more and more data. The data becomes a real issue today, because in order to make proper decisions, you have to analyze data. And today we have 2.5 quintillion bytes of data coming at us. I don't even know how many zeros are in quintillion, but it's a huge amount of data. And if you listen to experts like from IBM and other major institutions, they tell you that we're drowning in data, because the amount of data is growing exponentially and we process it linearly. So there's more and more data that we don't know about and cannot analyze. Why do we care about this? Because if you look at all this data that's coming at us, if you have, if you're actually a data-driven organization, you have 23 times more chances to acquire new customers. You have 6 times more chances to retain customers. And what's even more important, you have a 19 times more chances to be profitable, right? So your ability to process data becomes very critical, not only to your success, but to your profitability. But how do we deal with all this data? Well, today there's a new solution that comes in, that is artificial intelligence. Why do we use artificial intelligence? What is artificial intelligence? The artificial intelligence is essentially, it's either a computer system or a computer controlled robot that imitates a human intelligence. So we're trying to kind of build our own version of ourselves using the machines. And it's not an easy task, because believe it or not, we're very, very smart. In our brain, in our small head, we have over 100 billion neurons. And those 100 billion neurons, even though it's a staggering number by itself, actually has 15,000 connections each, that creates an extremely complex network within our head. So when we try to replicate it using the machines, it's not a very simple task. So what do? You'll hear the terms AI, artificial neural networks, machine learning, deep learning. So those are the attempts by us to actually make it a subset of information and drive it down so we can process it, because the machines today are not as smart as humans. So we actually have to isolate specific problems for machines to tackle. And artificial neural networks are not easy. If you look at the most popular algorithm, a backpropagation algorithm, I don't think anybody would actually read this kind of stuff in their spare time, right? So it's not easy. It's very complicated. It's very tough. So besides the algorithms, there's also a concept of modeling, because for every problem where you try to solve it with artificial intelligence, you actually have to create a model to solve. And this, for example, the model on this screen, it only has like 4 levels of neurons. I just mentioned to you that in our brain, we have 100 billion neurons. So now you have here maybe 15, 16, 20 neurons, and it's already a relatively complicated network. Now, when the problems are complex, then you get into a very, very complicated models. So you might have hundreds or even thousands of layers within the model. And today, it's more of an art than a science. You have very highly paid scientists. You have people called data scientists who analyze the data, who build this elaborate models. Sometimes it takes months or years to come up with a model before you can actually apply artificial intelligence. Why do we use AI? Why do we care? Because essentially we know that over the years that as we train machines, they become better than humans. We just have to learn how to train them and give them a specific tasks to train. So in 1962, when IBM PC actually have won against the checkers master, it was a tremendous excitement in the marketplace about artificial intelligence. The IBM stock went up 15% overnight when that happened. Then when Garry Kasparov was, grandmaster of chess, lost to Big Blue, another IBM machine in 1997, there was another, explosion of interest in artificial intelligence. But you'll notice there's a 35-year difference between the event when the IBM machine won from checkers and from chess. And the reason is because the humans have realized that it's very hard to teach the machines. It's very hard. It takes a long time to learn. And then we know as humans, we actually learn from the time we're born, probably until mid-20s, until we graduate from college. We learn all our life, of course, but people are not willing to wait for 20 years for a machine to learn something. So we're trying to say, how can I push the learning process? So for 30 years, the artificial intelligence was pretty much in hibernation because we realized we couldn't commercialize it. It was too slow. It was taking too much time to learn. And so when in 97, when Big Blue won against the Grandmaster, that kind of revamped the interest in artificial intelligence. And what happened was we realized that at that point, the computer systems, the actual hardware became much stronger. So what did we do? We take the same algorithms that were existing in the 60s and early 70s, and we threw it against the much more powerful computers that did not exist in the 60s. So that now brings us to the modern revolution in AI. Now, looking at the Go, you'll see another 20 years pass by from the chess to Go. The company called DeepMind, which Google owns, actually created a system that won against the Grandmaster in Go. Interestingly enough, that the people who built that machine that won against the Grandmaster in Go, none of them were masters in Go. So the machine learned itself how to play the game and became sufficient enough to become stronger than the best player in the world. Now, of course, the chess and checkers and the Go is one thing, but now we're looking at AI, which is applied in all aspects of business. This is just one of the examples where JP Morgan have used machine learning, and they do it now in seconds, which took thousands and thousands of hours of legal work. Obviously, it's not only tremendous financial benefits because you don't have to pay all these lawyers, but also it's tremendous opportunity benefit because now you can do it so much faster. Now it gets us to fintech, because now the fintech is always looking for the next big things. In 2019, over $138 billion, or about that amount, was invested in fintech. So fintech is always interested in what's new. How can we push the envelope in terms of technology? And today, AI is that technology where fintech is very much looking into it. Now we come back to financial forecasting. And again, the gentleman before me was talking about the silver bullet. Now with AI, you don't need to make all of these mistakes yourself. You don't have to, make decisions very shortly. So you actually, the process automated for you. So it's not only that it goes beyond human abilities to analyze and make decisions. It's much more accurate, it's much faster, and it eliminates human errors. And one of the things that it also does, which we don't realize, we have the inherent limitations in our infrastructure. So for example, if you use an Excel spreadsheet to do your math, whatever the limitations of Excel spreadsheet is, that's your limitation because you cannot go beyond it. So when you switch to AI, it actually eliminates all of the software components or components in your environment that are slowing you down. Now, using AI in trading is almost a no-brainer. There's a bunch of stuff listed here that actually tells you why using AI in trading makes sense. Now, the question is always, how do I get to the AI? Because it's too expensive to embark on AI. You don't know how to start, what to do with it. So, but yet the reasons to go there are obviously there. So at Actrader, we have been looking at these opportunities in artificial intelligence and how to address it. So we partnered with a company that specializes in artificial intelligence and kind of have developed their own algorithms, which are different from what existed up to now. And we embarked on a project to create Act NeuroTrader, which is basically an intelligent trading robot, if you want to think of it, or an avatar. The company invented it's still a form of artificial neural network, but they call it intelligent neural network because it's much faster and much more accurate than exists today. We're on a benchmark against TensorFlow, which is the mainstream Google neural network, artificial intelligent neural network, and we came up with absolutely mind-boggling results. So the results were 30 times more accurate than TensorFlow, and what was more staggering is that it was 80,000 times faster. So we threw some problems at this new algorithms, and we got results in seconds versus days on the Google side. So the forecasting problem has always been, how much data can I throw at forecasting so I don't miss something? So, and forecasting, if you don't have accurate forecasting, you're most likely not going to have a truly accurate, profitable trading because forecasting is actually a foundation for profitable trading. So with this technology, now we can do a much more massive data analysis to get profitable results. This is kind of just an example of the system learning, learning the data for forecasting. So initially it's all over the place, and as it learns itself, it gets better and better and better. So this is just a sample of a 20-minute forecast as we were making the system learn predict the markets. So Act NeuroTrader is a kind of a new brave world. Because why? Because it's actually it's a pipe dream, right? How can I replicate myself and have somebody who's going to trade 24/7, 365 days a year, and for me and do it profitably? So in our Act NeuroTrader, those are goals and objectives that we put in front of us. And we found out that you eliminate human errors because a lot of times people cannot trade profitably because they get emotional, they count on intuition, they don't take into consideration certain events. So the system actually is much more accurate and it's much more profitable in the end. And the very important part is that based on the new algorithm, it's actually self-learning and self-correcting. So it's analyzes its own mistake. It's constantly analyzes what it's doing, what data is coming in, and so it makes decisions that are smarter and smarter and smarter. And that's a unique feature of that. This is just an architecture of the NeuroTrader. I'm going to skip through it because of time limitations. It's a relatively simple architecture, but at the same time, it's not that simple. Every component takes a lot of work. Let me get through this. So where do we go with this right now? So we build this trading avatars, and we said, okay, so we build the trading avatars. How do we introduce it to the marketplace? Because we're a technology provider. We provide a trading platform. How do our users get advantage of it? So as a result, we're building, by the end of this year, we're releasing a O-Social, which is an intelligent social trading platform where we're going to have not only your traditional expert traders who are going to be in that social network where you can follow them, but we're actually going to have AI-driven avatars, so you can see their track records, you can see how they're doing, and you can actually pick and subscribe to a specific avatar that you want to follow. And that way, you can, it's traditional copy trading sort of, but you'll be able to take advantage of the intelligence of a specific avatar or group of them, which they can trade a certain instrument or a certain portfolio and take advantage of that artificial intelligence that's built into it. So our goal today is to make ActTrader as the most intelligent platform in the market. And the social platform is just the beginning, because essentially we can also add intelligent forecasting service where if you don't want to use the trading, we'll provide, you can subscribe to a forecasting service for a specific instrument and we'll provide it for you. Well, actually risk management is a huge thing because we have a fully functional dealing desk with an ActTrader. So you can actually have a intelligent, artificially intelligent chief dealer who will make decision what's your risk exposure, what kind of risk you offload, where do you offload it, which risk do you accept. The customer service, of course, we all know that's already all over the place. When you call somebody, you get a robot answering or a system answering you. It's just a lot of times it's very frustrating because they don't know what you're saying and what you're trying to do. So you're just waiting to get off the phone and get to a real person. So what we're counting on to build a much more intelligent customer service bots that can actually have a conversation with you, understand what you're looking for. The things like intelligent KYC and payment processing are no-brainers. And the last thing is very interesting. We developed our own exchange product. Right now, one of our customers is doing a pilot project with it. So an intelligent multi-instrument exchange is a very, very interesting project that, we're kind of very interested to see the results of it. And on the Intelligent Neural Networks Inc. company, they're actually not only develop new algorithms that we're using, but also they're working on a totally new optical processor, which will change the hardware components as well. So that will totally change the game once again. But that's the environment that we're in right now. And AI is definitely front and center, a technology that we want to use in all of the activity that ActTrader is doing. And if you're in the marketplace and you listen about AI, there's a lot of talks about concerns about AI, that it's not ethical enough, that it might be anti-human. So this is kind of a lighthearted answer to that question. So thank you very much and hope to see you all using AI at some point in time.
Ilya, just before you go, as someone that does voiceovers for banks and does on-hold messaging and the IVR systems, are you trying to do me out of a job here? Sorry if you're a Mashreq Bank customer or a Standard Chartered customer. That's me. So up next, we've got a little bit of a change in schedule. So on the stage next, we'll be hearing from XM Global, Avramis Despotis, and on an alternative way to consider risk. If you'd like to come up to the stage, please. Thank you. Forward, backwards, and laser pointer.
Okay, excellent. Okay, so that's not me. Hi, everyone. How are you today? Oh, I see the previous speech was very exciting. Okay, so when everyone is ready with the correct slides. Okay, so until they fix the correct slides, let me talk to you about my favorite thing in the world, which is talking about me. So my name is Avramis, and I am a certified technical analyst from the International Federation of Technical Analysts. I have a bachelor's in economics, a master's in finance and banking. I'm a portfolio manager. I have a fund, blah, 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 and all these nice things, yes? But before we start, I would like to know how many of you are actually trading? How many of you are trading? Hands up, please. Okay, so I see most of you are trading. That's good. And let me ask you the million-dollar question. How many of you are making money from trading? Wait. Let me get my picture on. So hands up. How many of you are making money from trading? Oh, wow, excellent. I see you guys should be up here. Yes? All right. So how long have you been trading, by the way? More than 1 year, anyone? Okay, so most of you are relatively new traders, right? Okay, excellent. So I see most of you are making money. So let's see what's going to happen with my slides. Hello back there. Can I have my slides? All right. Okay, good. So the first slide I was going to show was why are you here? So can you guys tell me why you are here attending this expo? Most of you are making money. So why are you here? Can anyone come with the mic around so someone can tell me why they are here until my friends back there fix my slides? I think they got upset because they asked me to do it shorter and I told them I refused to do it shorter. So, so they are making it difficult for me. Okay, so technical issues, hello. Do we have the slides or not? What do we know? 2 minutes? Okay, so let's get some presents. I guess one of the reasons you guys are here is for the presents, right? So I was here for the presents as well. And let's see what's gonna happen. Okay, so I look good. All right, so short break. Hello, back there. Where are my slides? Anyone?
Avramis, we're working on it at a moment. Just bear with us. If you'd like to do a Q&A with some of our audience members, maybe if anyone has any questions from the audience that you'd like to ask, we could get something going here.
Yeah, that would be nice. So let's, what I would like to ask is, what method do you guys use to trade? What is your favorite method to trade? Anyone using technical analysis? Hands up. Yeah, okay. And who is using fundamental analysis? Fundamental analysis, anyone? Okay, good. That's why most of you are making money, because you are not using fundamentals. That's good. Who is using market rumors? Market rumors, anyone? No? Okay. And what's the favorite of them all? Gut feeling. Who is using gut feeling? I have a feeling the euro is going to go up today, right? Yeah, I thought so. This is our favorite method in the whole wide world. Now, until they sort out the problem, I'm going to tell you my favorite method in the whole wide world, yes? Okay. So I'm not going to talk about the fund that we have, but I will tell you my favorite method. So my favorite method is like this. Every time I go to my office in the morning, my assistant brings me my coffee. And in my office in DIFC, I have a big window. And every morning, I look outside this window and I see a tree that I have just there, yes? So if I see 2 white birds on that tree, I buy. If I see 2 black birds on that tree, I go short, yes? Now, if I see no birds or I see 1 white and 1 black, I do nothing. Is it clear? Yeah? This is my favorite method. Okay, so listen, what if I told you that I've used this method with the birds 10,000 times, yes? And it was correct 2,000 out of these 10,000 times. Is this a good method? It's correct 2,000, wrong 8,000. And to keep it simple, every time I win one. Every time I lose one. So what do you think? Is it a good method? It's 20% accurate, right? Definitely not a good method, the bird method. I should change it, right? Yeah, okay. So who can help me fix this method? How can I fix the method I have with the birds? How can I fix it? Anyone? How can you fix this method? It's a very easy way to fix it. Yeah, that's right. We change it. We do the opposite, right? So if every time I see two white birds, I buy Nabil, yes, then, sorry, if every time I see two white birds, I sell, and every time I see two black birds, I buy, then automatically I have flipped the method, right? I'm 80% correct, 20% wrong, which means that I have a winning method, isn't it? Yeah? So why am I telling you? Of course, I don't use the birds, but why am I telling you this? Because the most important thing is to actually have a method, right? If you have a method, you can measure its accuracy, you can measure how much money it's making, and most importantly, you can decide if you're going to use it or not and fix it, right? Is it clear? So this is why I'm talking about the two-bird story, as we like to call it. So this is method, right? Okay, so do you guys want a USB back there? I have one. Did you find one? What's the story? Hello, back there? 2 more minutes. Okay, I can't talk for a long time. It's not a problem. All right, so we have the method out of the way, right? So what is the other ingredient that you need for successful trading? We need a method, right? We need to have a way to tell us if we are going to buy or sell today, yes? Okay? Apart from the gut feeling that we like a lot, right? So we have that. And then we need money management, as they say, right? So what is money management? What is money management? Who is using, do you know what a stop loss is? Stop loss? Yes? Okay. $1 million question. How many of you are using stop losses? Hands up. Okay, all the time. So let me ask the question again. How many of you are using a stop loss? You know what a stop loss is, yes? You buy and then you put a level where if it goes, you will close the position. So you lose, say, 2%, 3%, 5%, and not all your money, right? Which basically means you were wrong, yes? Your method is not 100% accurate. So definitely you will need to use stop losses, correct? Okay, so let me ask the question again. How many of you are using a stop loss every single time that you trade? Every single time. Hands up. Okay, excellent, very good. And what is the problem with stop losses? What is the problem with stop losses? Huh? You know, you buy, you put your stop loss, right? And then the market comes down, comes down, comes down, comes down, hits your stop loss, and then goes up, right? Does it happen to you? All the time, right? And then you say, oh, it was the broker. It was the broker's fault. He may hit my stop loss and then the market went up, right? Well, actually, it wasn't the broker's fault. It was you putting it at the wrong place. Okay? So if we had my slides, we would be able to see exactly where to put the correct stop loss. Okay, so I guess we are solving that as we go along. Now, let's talk about the human mind while we are at it. So the psychology of the trader. I think some of my colleagues thought about psychology, right? So when we talk about psychology, what do we mean? So the human mind is made up of 2 parts, right? It's the computer, the calculator, the analytical mind, and on the other hand, we have the emotional, the crazy, the subconscious mind, yes? So what is the correct thing to do every time you trade? Every time you trade, you should use a stop loss, right? Yes or no? Okay, so every time you trade, you should use a stop loss. We all agree on this? Yes? Anyone who disagrees? All right, good. So we all agree that every time we trade, we show finally, excellent. So we all agree that every time we have, so we'll skip this, the ingredients of success, the human mind, here it is. So we have the calculator and we have the emotional or the crazy mind, right? So the computer is saying, always use a stop loss. Yeah? What's the other guy saying? This guy here, what's he saying? Do you remember that one time that you put a stop loss, the market hit the stop loss and then it went up? Do you remember? Do you remember? Don't use a stop loss. Don't use a stop loss, okay? And unfortunately, this crazy guy is 10 times stronger than the analytical one, yes? Okay? So you have to learn to control it, but unfortunately to do that, I would have to wear my white robe and you would have to lie on a couch and we would talk for hours about your childhood, yes? So no time to do that. So let's focus today on money management, right? So psychology is to control your fear, to control your greed and so on. Method we've already talked about. This is my two-bird story, okay? And what do we have here? Okay, so methods, there are many, right? We, especially with XM, who they paid me a lot of money to be here talking. Thank you very much, XM. We have created an educational method and an educational system that you can go and learn many methods, because there are many methods, right? So we have gathered everything you need to know about trading and method primarily, and we have put them here. So we have a live education where many instructors are giving you various methods and information from 6 in the morning to 5 in the afternoon. Yes, you can join whenever you want daily. We have video guides. So before you start to trade, I strongly recommend, even if you are trading, I strongly recommend you go through all this because it's a series, yes? It's from A to Z. It's not a piece from here and a piece from there. So we have also money management there and trader psychology, and we have trading systems, yes? We have developed a lot of toys that you can use to analyze the markets, okay? Now, in the old days, many years ago in a galaxy far away when I was a young trader, to analyze one instrument, I needed half an hour, yes? Okay, to properly analyze it. Today, we use indicators and algorithms to speed up that process. So today I can analyze 1,000 instruments with the click of the button, right? I can scan all the instruments and it will find for me the best opportunities according to the method. You can use Bollinger Bands, you can use ADX, you can use the analyzer indicator, which is a very fancy indicator that we have created for MT5 with XM. So basically, this is a very simple, I would say, indicator. It's analyzing moving averages, MACD, Shimoku, RSI, ROG, finds overbought, oversold, finds pivots, and tells you if there is a potential trade there. Okay, so, and it will analyze not only the instruments I have here, but all the instruments on the MetaTrader platform to tell you which are good to trade now. Yes, isn't that nice? And we have many tools to fit every pocket and every style. This is my favorite one. It's based on price action, and I chose to put here a reversal that is happening as we speak, yesterday at least, on the US 100, yes? So this is telling us that the entry level is at 14,800, the first target is at 14,471, 1380, and 13,000 are the targets for this trade. Take a picture because this can make a lot of money for you, yes? Okay, with me inside, of course. Okay, thank you. So, and we have more tools. This is my favorite latest one. We have created an indicator specifically for gold on the 5 minutes, yes? I know everyone loves to trade gold, right? Who trades gold? Hands up. Ooh, nice. So, and it's actually doing pretty well. We've been testing it for the last few months. So it's giving you a nice arrow, entry, target 1, target 2, target 3, and so on. It can also analyze multiple time frames. It can scan all the things here to give you signals on other instruments as well, but it's optimized for gold on the 5 minutes, yes? Is it clear? Because I know everyone likes to have fun. So, of course, it's not 100% accurate, okay? So here it gave a buy signal and then it hit a stop loss. This is the reason why we should always use stop losses, right? Okay? But overall, well, let me see how I go back. Overall, if you see some statistics on it, it's not doing bad. This is the profit and loss. This is the 5-minute trades in the last 60 days. Depending on the amount you trade, it doubled the money in 2 months. It's not bad at all, is it? Yes? Okay, and look at this. It's only 56% accurate. What does that mean? What does that mean? Almost 1 out of 2, you are going to lose, yes? Is it clear? But why does it make money? Because the average winning trade is 3 times as big as the average losing trade, right? You got it? So the method doesn't have to be 80 and 90% accurate to make money, right? I know most of you like the 99% accurate methods, and you know which one it is. I have a method that is 99% accurate, by the way, yes? And I will sell it to you. And I am so confident it's 99% accurate, I will do this agreement with you. You will pay me 1 million for the method, and I will guarantee with 2 million that if the method is not 99% accurate, you get 2 million. Any bank in the world you want. You want to play? You want to do it? Okay, I'll talk to you later outside. So, by the way, you have bought a method that is 99% accurate, but the problem of this method is what? It loses money. I didn't promise you it makes money, by the way, yes? I told you it's 99% accurate. So how can a 99% accurate method lose money? How? Well, it's simple, isn't it? The 99 times it's correct, it makes a profit of $1 every time, right? And the 1 time that it's wrong, it loses 10,000. So overall, it's losing. And actually, this method has a name, and I'm telling you to avoid it. It's called martingale method, yes? Okay? So those of you that are flirting with martingale or modified martingale or a powdered nose martingale or whatever, yes? It's a nice method because it's 99% accurate, but I promise you, you will lose all your money. Okay, so what is money management at the end of the day, since they are telling me I should be finishing? So let's very quickly compare these two traders. You open an account with XM, you put 10,000 euros in, and using your method, whatever method it is, you decide to buy the euro, right? So you buy the euro at 120, and trader A is using 20 times leverage, which means he borrows from the broker and trades 20 times his money. So he will trade 200,000. Trader B He's a chicken. Sorry, he's more conservative. So he will trade only 5 times leverage, right? So 50,000. So the first day, the price comes down to 118.80, and the first guy loses 2,000, right? How about this guy? Well, which is 20%, by the way, of his 10,000. This guy is losing only 500 because he traded 50,000 only. Now, you remember the discussion we had about the stop losses? Trader A is the best trader in the world, right? No stop loss needed, correct? It will go up for sure. I know it. I believe in it. Yes? Okay. Trader B says, okay, I bought because it was going to go up and it's coming down, right? Which means I was wrong. And no matter how difficult it is, he has to accept his loss. So he accepts his loss and goes home. Now, the next day, the price goes to 116.40. How much is the first trader losing? He's losing 6,000 or 60% of his money, yes? Right? Okay. And how about this guy? How much is he losing? Well, he's only losing the original 5% that he lost, isn't it? And let's take my selfie now. Everyone pretend you are enjoying it. Okay, so, and day 3 at 114, he lost all his money, yes? And this guy is still out of the market, right? So you always have to use stop losses. Now, very quickly, watch this video while I find some water from someone to drink. So this is a trader, right? Like all of us. It's in his penthouse. He bought, and the market is going against him, right? Does it remind you of anyone? Okay. I think the position is going worse and worse and worse, right? But luckily, he used a stop loss, right? So he didn't, but look, well, a stop loss can't protect you from everything, right? Okay, so always use a stop loss. So the elements of money management is basically a stop loss, guys, yes? If you don't have a stop loss, you don't have anything. And it's a specific amount of money to risk on every trade. And it's basically the amount you are going to risk, right? Now, you all know the saying, how much should you risk on your trades? What do they all say? 1%, 2%, 3% per trade, correct? This is the normal wisdom. So you say, okay, how much? 1 to 3% on any trade, correct? Yes, okay. So basically the general wisdom is that one trade should not matter. 3% is nothing on your total portfolio. And definitely you should follow this, but the problem is, what do traders actually do? What do traders actually do? Okay, look at this. Here we have a classical technical analysis pattern, which is a double bottom, yes? Remember, if you don't know what it is, go to the XM website, see the videos, we explain it very nicely there. So if you buy there, the stop loss should be at the bottom. So entry 115, stop loss 113, right? Correct? Very good. But, and the target is up there. But traders say, no, it's too big, 200 pips stop loss. How can I put 200 pips stop loss? It's too big, right? So what do you do? What do you do? Sorry? Bravo, you change the stop loss. Instead of there, you say, okay, 50 pips is a good stop loss, right? I will put it there. Okay? And then you know what happens, right? The market gets you in, hits the stop loss, and then reaches the target. story of our lives. Yes, not to say yours and be nasty. Okay, clear? So this is what traders actually do. So there is no big or small stop loss, okay? Or you have total control on the amount you are going to trade. So for example, let's go to the Forex example. Here, if I am going to sell at 113 and the stop loss is 25 points, then how much should I trade? Well, first you need to decide how much you want to risk on this. You said 2%, 3%, 5%, $500. So the position size should be 500 divided by your loss. And the thing you change is not the stop loss level, it's the actual amount that you are trading. Is it clear? So you make sure that you will lose 3%, 5% and still be technically correct. But that's not, so this you learn, it's easy, but now comes the bigger problem. The bigger problem is, we know that your risk should be 1 to 5%. We all agreed on that, right? Yes, 1 to 5% per trade. You know how to do the calculation, tralala, tralala. Everyone is happy, yes? You use your method. You say the euro or the US 100, I'm going to short it, right? And you take the trade. Bravo, kudos, well done. Everything is nice until here. We all agree. And then what happens? You open another 50 trades, risking 3%. So what does that mean? 50 trades, each trade risking 3% means you are risking 150% of your capital, yes? And this is also known as a margin call waiting to happen, okay? You know what a margin call is, right? Yeah, you are very familiar with it, yes? Okay, good. So a margin call is when the broker automatically closes all your open positions so you don't go negative and you lose more than the money you deposit in the account, just to clarify. So the main thing I want you to go, and I think it's time for me to stop or I can continue. No, I'm good. Excellent. Okay. So the most important thing that you have to do is manage the total portfolio risk, right? Not the individual trade. Okay, the individual trade is easy. 3%, 2%, 1%. Do the calculation. I have a tool, it can do the calculation automatically for you, right? But the most important thing is to manage the total risk of all your open positions, yes? Okay, because this is what's causing the nice margin calls. So look at this. So basically, again, this is one of my favorite tools, if not the most favorite tool that I have. And we are launching it with XM next month. Let's zoom in. So basically here, what you can do is, remember that calculation we spoke about? You put your entry level, you put your stop loss level, and then you tell it, I want to risk 2% of my account, yes? And it will tell you how many lots you should take on this position, right? So this is easy, makes the calculation for you, and tralala, tralala. But the most important thing is the risk. So this account, on the open trades it has a balance of 10,720, and it's risking $431. It's good, right? It's risking 4% or something like that. It's there. The risk is 4% of your total account. Very good. And this guy also has pending orders, risking 37% of his account. Is that a good idea? So together, he's risking 40% of his account, right? Well, as pending orders is okay because you don't know which is going to be activated and which not, right? But when they become active, what I have created for me and you is the trailing, but you are doing a trailing on the total portfolio of the account, not on the specific trades, yes? So for example, you can say here, this account has 11,000. My minimum equity is 7,000, okay? And I will trail it by 10% every time this goes up by 5%. So for this to go 5%, I'm wrapping up. So we have 600, but they are kicking me off the stage. If you need to learn more about this and the other tools we have with XM, please join us in the XM booth, and we can give you more information about the education we have, the tools, and tralala, tralala, yes? Okay, so thank you very much, and apologies for the beginning that we had the issue, okay? And now let's see you clapping me on selfie. Excellent. Thank you very much, everyone. Thank you. Thank you.
Thank you so much. Right, we've got quite a lot of presentations to get through, so let's crack on. Up next from Exclusive Capital, we're going to be looking at what to look for in a liquidity provider. Please welcome onto the stage, Peter Leonardo. Oh, come on, guys, wake up. We need some energy in here. Backwards, and that's a laser pointer if you need it.
Forward, backwards.
Forward, back. Big green one, backwards, and laser pointer.
Okay. Hello, everybody. My name is Peter, as you heard. So today, what I'm going to talk about is liquidity for institutions in today's market, right? So at Exclusive Capital, what we're doing in this aspect, we're going to look at two aspects. We're going to look about the liquidity side of it and the technology side of it, right? So to get started, forward, we're going to look at 6 different aspects of liquidity, or 6 different aspects of when you're looking for a liquidity provider, what to look for and how they intertwine with one another. And at the end of the day, we all strive for one result, is to satisfy our clients and multiple clients within the industry. The first one, as you can see here, is regulation. Now, I've been speaking to a lot of people here that are looking for liquidity, they're looking for white labels and so forth. The first thing they ask me is, what regulation do you have? We have EU regulation with SISIC, and we have now the FSA license in Dubai. So, but what does that mean? EU regulation means it offers my clients negative balance protection, segregation of funds, okay, and best execution practice. Now, best execution practice for me and to my clients is very important. We're going to see that as we move along. What that means in a nutshell is that I'm obligated to my regulators and to my clients that I give best execution practices to my end clients being institutional clients, okay? And we're going to see how this works all together and intertwines. Multi-assets. Now, if you're a broker or an institution that's going to open a brokerage or a white label or an existing broker, you need a lot of tools in your toolbox, right? What I mean by that, you need basically multi-assets, your traditional FX, your CFDs, your indices, your commodities, but you need stocks, okay? We have fractional stocks. For example, not everybody has the money to basically buy a 1-for-1 stock. So what we do is offer a fraction of it, where you actually own a 0.01% of DELT, for example, or 0.2 or 0.4, whatever it is that you want to do. This is good for our retail clients, retail institutions, because their retail clients see this as an alternative investment, right? Whereas the other hedge funds or money managers, they will basically trade more of the traditional stocks because they're more, they're more conservative. Now, this is important because every time I mention an asset class, you're also opening up new avenues and new client potential, right? Now, to do all this, for me to get multi-assets, I do what is called aggressive aggregation, right? So within my pool of liquidity, we have 13 plus LPs, right? One question someone may ask is, why do you have so many LPs if you only need 2 or 3? You only need 2 or 3 if you're a broker. right? But if you're a liquidity provider, you need more. Why? Because some LPs, believe it or not, may have a good month, 1 month, and not so good in their liquidity for another month. But what I have to do is keep pushing forward and making my LPs compete with one another to give me better pricing. Now, of course, this is a higher cost on my side, but we inherit the cost because at the end of the day, it gives us better results. So we look in the long run, not the short run. So the more LPs I have, the better I am in giving my clients a better solution so they can offer to their clients, right? Now, moving forward and going back and forth on this aspect is, okay, digital assets, right? It's part of the liquidity. So on digital assets, we're talking about crypto CFDs and swap-free crypto. So last quarter, we released the fractional stocks, and then after that, we released also the crypto, the swap-free crypto. And what's the difference? The crypto CFD is your crypto CFD, which is a leveraged product, right? Every broker wants that, okay, and exchange. The swap-free crypto is, if you look at the digital market, over the years, it's changed. You know, one they're centralized, one they're decentralized. They have a matching engine. They have to basically have makers and takers and so forth. But the market switches all the time and changes. It evolves. I see it getting a little bit more centralized. Now they're taking liquidity to have top of book and so forth, so they have big order ticket sizes and so forth. But a swap free allows clients of brokers to actually hold the crypto without paying any swaps to hedge their position. Because let's face it, crypto traders, they're fanatics in the sense that I want to buy a crypto, it doesn't matter what price I buy it at, I'm going to hold it because they believe in it, which is good, fair enough. But what is a broker going to do or a trader going to do when the crypto is so volatile and it may start dropping and going in one direction for 1 month, 2 months, and so forth? He needs to hedge his position. He needs to minimize his losses or break even on his losses or on his investment. So this is why we have the swap-free crypto. And you're not paying swaps over the period of time because let's face it, swaps is a killer. It can kill you basically throughout your trades, especially on the crypto. Now, keep in mind, when I offer liquidity to institutions, I'm offering it at institutional pricing. Now, the broker on the other side, he has to mark up on that, right? When I do aggressive aggregation, we do not mark up on the spreads. So we're giving market spreads. How we make our money basically is on the commissions. We charge a commission for it. And why do we do that? Because even with speaking with brokers, but it kind of makes common sense, is that when I'm giving liquidity and I'm showing it on my broker front page, you know, either being any broker out there, retail broker, the first thing people see is what? Anybody? Spread, right? If I see spread, my clients see spread, they're going to want to trade with me because the first thing a retail client will see is the broker spread. The second thing he'll see, but it comes secondly, is the execution, which is still very important, right? So, and also top of book. How many clicks or how many lots can I trade at one time? Now, this is a problem with a lot of liquidity providers. That's why I need to aggregate multiple LPs so I can fill up my top of book. So when a broker comes to me and says, Peter, can I do 50 lot clicks, 100 lot clicks, 200? Yes, you can. Okay, because I can aggregate that and basically give you top of book, which is very important. That means falling back to the retail client, when he sees that spread and he trades, you know, you're talking about 10, 20,000 traders, right? You know, they're not going to really sweep top of the book because it refreshes really quickly. But if you have that one trader that's going to make those big clicks, you want an LP to support it. Because if he doesn't, you're going to get slippage, right? You're going to get the next best available price, as they say, right? So that's why you need a strong, good LP. We also did a study with another broker, you know, asking me, because as he comes to client, he goes, Peter, explain to me and my board why it's better to go with 1 or 2 LPs. 2 reasons. One, if you're EU regulated entity, okay, you need at least 2 LPs. One as your main and then as a backup, and you switch back and forth, right? The other part is it's costly for a broker, a standard broker, to have many, many LPs because you need to basically fund the account as margin. You need to pass flow for volumes to keep consistently and getting pricing, right? And basically in this industry, it's all about relationship building. If you onboard more LPs than your business can handle, then the problem is you're not going to handle that business or that relationship very well. So when you're entering our ecosystem, you're having access to all those LPs within one single account of trading, right? And accessing it to redistribute via API and so forth. Now, how much time do I have? Because I want to talk about certain things about on the multi-asset aspect. When we talk about stocks, we got 5 minutes? All right, we'll talk about stocks later at my booth. All right, the next thing you want to look at, okay, how do you connect all this? So I'm giving you regulation, which gives you security, okay, best execution, multi-assets, more tools for you to trade. So you have a wider range of an audience, digital assets, a new product, a new market. And now, how do I connect this? So it's either fixed API via the bridges. We work with PrimeXM, 1.0, FX Cubic, tools for brokers, and we'll keep adding more. Like, we're a firm believer, if you build it, they will come, meaning that we already onboarded all these bridge providers, even if we didn't have a client on it, right? The reason is because when you have it, you save time when a client does want to come on board. So if someone comes to me and says, I'm using 1.0 or tools for brokers or FX Cubic, I can connect them hub to hub, instant, fast connection. And that gives me access to different data centers, LD4, TY3, and NY3. Now, the platforms we use. Okay, so we have multiple platforms, traditional MT4, MT5 platforms. We have our own CRM that we're also launching in Q1 of next year. PAM, social platforms. So these are tools we give our clients when they want to expand their business or have different needs for different clients that they want, right? So even if you're not using MT4, MT5, or using your own proprietary software, or you're in exchange, we still can connect our liquidity via fix to your platform or to your exchange. The second thing is white labeling, okay? On this aspect for technology is that all you see here within this ecosystem, okay, because this is how we work and how our clients come into a journey in regards to what they will get. By doing a white label, you have access to all this, right? So you have access to, not regulation, you have to get your own regulation. Multi-asset, digital assets, multiple bridge connections, platforms, CRM, risk management, and many, many more things to help you grow in your business. So we look at each and every client as a partner, right? That's why I like saying partner instead of client, but I want to distinguish so you understand. Because we grow with them, right? The more they grow, the better it is for them, the better it is for us. And it's not just onboarding a client and just, you know, from the start, it's the after service. So you have to give good service to your clients. You have to be able to answer any questions they have in the system as much as you can. So by doing all this as an institution and as a broker, the type of clients we look for, you know, as an example, is this tier 1 and tier 3 brokers, right? A tier 1 broker is an advanced broker, like, you know, 5-6 years in the market. Now, to me, you know, how I see it, I've been doing this for 40 years in the business. I'm old, okay? But everybody needs liquidity, right? They always have to offset their risk. The bigger you are, the more liquidity you're going to need because you have to sustain your risk. If you're a beginner client, you still have to get liquidity because you still have to offset your risk. If you're a broker, for example, that has $500,000 and you have a trader coming in and he makes 2 million, how are you going to sustain that, right? So you need to offset. So you need to also do risk management, right? A tier 3 broker is a white label. So he needs all the tools of the trade. By having this, we can support, right? Banks and private institutions. So where would I put him in this category? Banks are traditional. So they mostly look at equities, ETFs, bonds, okay, futures. All right, so this is how we attract banks. Global hedge funds as well, diversification. I don't believe a broker now can really sustain himself by just doing FX and CFDs and commodities, right? He has to have multi-assets. Multi-assets may not generate as much money, is the question to them, right? As FX, for example, as I get, but it opens up your avenues in how to invest and to get new clients, right? Asset managers and family office. Kind of the same thing with hedge funds. A lot of asset managers that we speak with and we work with, they're kind of tired of going to a broker directly. What they want to do is they come into an institution where they take professional clients and get real trading rates, right? Good execution and pricing and practices. Other financial institutions, corporate accounts that want to hedge their position, other corporate accounts that deal with crypto and look for hedging and so forth. These are the kind of associations that we have. Partnerships and associates is next, is like legal firms, people who regulate entities, you know, bridge providers, other technology providers. Because in this industry, you got to partner with everybody. I don't look at it as a competition with my other tech providers because we're technology and a liquidity provider. We partner up with them because I remove the ceiling, right? I'm not capped at anything that we can do. We have different bridge providers and we work as partners. We work with them in introducing their bridge. They work in introducing liquidity to us. And they do that because they can introduce it basically to anybody. But because of the multi-assets we have, the services and the products that we offer. And last but not least, high net worth individuals. You know, these are individuals who put in $1 million plus that want to trade and get fair trading conditions like an institutional partner. Because basically they don't want to trade with banks because banks are too expensive. They may not want to go with brokers because they're not comfortable with it, but they want to go basically to an LP that offers this service because we do have a regulated European fund, a hedge fund that we manage as well. Okay, I see that I'm out of time. I don't know if anybody wants to ask any questions and if I have time for someone to ask questions. But if not, we're at booth 80 and you can come and see us. We have a great team. Something to succeed in life basically cannot be done on its own. You got to have a great team within. You got to have great partners globally, from my experience. And that's how I see a winning solution and winning formula. Thank you.
Thank you so much, Peter. I love your corporate image there. It's like an advert for Suits. What a fantastic picture. Love it. So thank you very much to Peter there for that wonderful presentation on what to look for in a liquidity provider. Up next, we're going to welcome up to the stage Ahmed Zaman Abdel Sahab. He is from TNFX, and he's going to be talking to you about risk management is the secret to the success of the financial markets. If we'd like to welcome up Ahmed, please. Are you coming from that side? You chose to surprise me today. It's backwards, and that's a laser pointer if you need it.
Okay, okay, yeah. Hi, this is Ahmed Zaman, CEO of TNFX company. Today we pick up the risk management subject. So why risk management? Why we keep or we choose risk management topic today? Shall we talk about the strategies? How many strategies do we have? Give me numbers. 100, 1,000 strategies do we have? Can you guys give me one strategy which accurate 100%? 90%? Anybody knows any strategy accurate 70%? So, all of us in this market for a long time. Some of you are new, some of them for 1 year or 2 years or 3 years. And we have been seeing a lot of strategies.
and we have a trade on a lot of strategies. But before we touch any strategy, before we talk and start to trading on any strategy or any school, we have something to know. Because we know most of the traders, when they need to make a profit, they need to make easy and quick profits, which everybody loves that. And when my friends comes and talk to me in Facebook, in Telegram, it is the main subject. How can I make quick money? How can I make fast money, easy money? It's something which I have tried before, and I didn't success. I lose my money. I tried 2 times, 3 times, 4 times, but stop. It's not the things which I'm doing. I was finding a name of the strategy. Wow, it sounds good. And then start to learning how that strategy going on, learning the concept of that strategy, and then I come and apply it. One trade success, second success, third one, fourth, and then with one trade only, my account get washed. And I know most of you had that experience. Am I right? Am I right, guys? Okay. What we have to know before I go deep to any strategy. First question I ask, which strategy is the best? For me, all the strategies are correct. All the strategies are based on some fundamental. So if you keep any strategy and you work on it correctly, so you will get results. So there is nothing we can say this strategy is bad, that one is good. All of them are good. But you need to do your risk management. The risk management is something to do with your mentality. Before we go to the calculations, lot size, before we go deeply to the numbers, it's something to do to our mentality. And we should take out this from our mind that I need to make a profit today. I need to make a 10% profit by today. No, forget about it. Let's think about how I should not lose my money. Okay? I don't need to be a millionaire within 1 week or 1 month or 2 months. Okay. So just keep in mind, getting money quickly and fast and easy is something impossible. So you can get money, you can make a profit in these markets, but not fast and easy. You should do it step by step. You need to have your notes, note down everything. And if you take any strategy and you are trading on that, you should keep working on that for 1 month, and then you back what's happened, what was the wrong, what was the mistake. 90% of the mistake is because of risk management. Because of the risk management. Basically, risk management is based on number 1, the lot size. The lot size, because in my unconscious mind is, I want to make a profit 10% today. Within a week, I want to do it 100%. So you go to the YouTube, you see some strategy, you see some video on risk management. Okay, for 1,000, you need to do 0.01 trade. You do it 1 time, 2nd time, 3rd time, and you see it's interesting. Then you press 1 lot. You may get a profit again 1 time, 2 times, but you will lose it. So again, I'm going to repeat that. There is here, you cannot do fast and quick money. If you do it, it will end up by liquidation. So our time is tight because, as the organization told us, I'm going to list down the main points on what we have to do. Number 1, forget about getting money easy and fast. Number 2, you need to manage your lot size. So there is a calculation, PIP calculations, or sorry, a lot size calculation. You can get it for free. You can get it for a free in a lot of websites. They provide that. Even you can find in our website, there is a loot calculation. It will tell you if you want to open a trade right now. Question number one, which you should think about it. I'm not talking about the strategy. When I want to do a trade, question number one, how much I should lose in this trade? For example, if you have an account of $10,000 and I open in a trade, Dow Jones, gold, whatever. Question number one, how much I may lose in this position? How many of you think like this? Very few. Because when I enter a position, I think how much I get a profit. No, we have to change it. How much I may lose. Okay, $10,000. I'm okay. This 10,000 is for fun. I may lose 10% with this trade. But for other guy, no. This $10,000 is all what I have. So this guy cannot lose 10% on this trade. So everybody has his own different risk policy. Somebody, he can lose 1%. Other guy, 5%. So in your notes, you should know how much you are going to take a risk of this position. Let's say 2%. The principal risk percentage on each trade goes between 1 to 2%. And then it depends to other things. If we say it is 2%, so my account is $10,000. If that trade hits stop loss, I should lose how much? Only $200. So simply you go to any website, loot calculation. My risk is $200. I'm going to trade short gold. How much loot size I should open? So you will see you have $10,000 and you need to open only 0.04 and your balance is $10,000. So to make it very simple, it's all about controlling your loot size and using a stop loss. The stop loss is the main things which can divide who are the best traders and making profit, who are not. So stop loss, loot size, and we have leverage. The leverage, it's sometimes good. It's help you to make a fast and quick profit. Am I right? The leverage will help you to make a fast and quick profit. But we said, don't think about fast and quick. So I don't need to have 1 to 500 leverage. Even I don't need to have 1 to 100 leverage. So if your risk per position is 1 or 2%, and once you hit a stop loss, you need to open 0.05 loot size per $10,000 account. So why I need to have 1 to 100 leverage? 1 to 10 is enough. So as much as you reduce your leverage, it will cover your account, it will save your account. Is number one. Why? Okay. I have my notes and I know what I'm doing. And I have my loot calculations. I have everything and I have my strategy, everything done. I will start now. So leverage is nothing. I can get as much as big. But you will do it correctly for first trade, second trade, third trade, and then one moment, when you see some big candle goes up or goes down, okay, let me take the advantage. At that moment, you will forget totally of whatever you studied for that long period. So at this time, once you have a big leverage, you are able to hit very big lot size. But if there is something tiding you, is, for example, if you have a leverage of 1 to 10, and even you want to press very big lot size, it will give you rejection. No, man, not enough money. So if we talk in personal with all of you, I know you are traders, you are doing good, and you know very well the strategy, you know risk management. But let's say 60% of you guys, for example, these numbers are roughly losing money. Okay, you know everything, you know trade strategies, you know risk management, you know why you are losing money. If you back and you see his trading history, you will see there is a moment which he was out of his mind. He wanted just take a risk, take an advantage. There is a news, okay, the gold jumped $300, oh, sorry, $30. I can sell right now, one lot. But based on his note, he should open 0.05. He has a big leverage, he proceed, but you don't know it's a news. It's a federal news, or it's a Friday, first Friday of each month. You know, we have very important news. So you will see, again, go up, up. He can, no option, and he don't have the mind to close loses trade. If you give me 3 minutes, 2 minutes, okay, guys. Okay, guys, thank you very much. It was very short. I would like to have a long presentation, but there is a tight time. Okay, thank you very much.
Thank you so much, Ahmed, for that from TNFX. Up next, from Multibank, please welcome to the stage, Danny Salman, and he's going to be talking, is Bitcoin the new gold? Oh, the question on everybody's lips, that's for sure. Forwards, backwards, and that's a laser pointer.
Show me where the backwards is here.
The red one, yeah, the big green one.
Good afternoon, everyone. My name is Danny Salman, Senior Market Analyst for Multibank Group. We pride ourselves in being one of the largest online financial derivatives providers. We service over 320,000 active clients. We provide also over 20,000 financial products across 6 different asset classes. We also provide some of the lowest spreads on gold CFDs, starting from 7 cents, and also highly competitive spreads on crypto CFDs as well. We have 25 offices globally, and we are regulated across 5 continents with over 11 financial regulators. So, is Bitcoin the new gold? That's the topic for today. And we'll be looking at the unique characteristics between the two, their fundamental drivers of return, and also the correlation of both assets. And so, there's been a lot of debate and ongoing rivalry between the two. And some may argue that cryptos such as Bitcoin aren't even assets, simply due to the fact that assets have some form of cash flow or function that can be used to determine its fundamental value. And so when looking at shares, for example, they provide cash flow in the form of dividends. And so many analysts believe that cryptos are trading in a bubble. And as you may know, bubbles are formed when the price of something is trading way above its fundamental value. So we must wonder why many financial institutions and investors are still buying into Bitcoin, and what makes Bitcoin, which is highly volatile and speculative, to be considered a good store of value like gold. Well, to answer that, it's simply because the world has voted that they believe it is, and its potential for widespread social adoption, and more importantly, its strong and unique brand properties, such as the blockchain technology, which provides security, privacy, transferability, and the fact that it's digital, which makes it acceptable for future generations to use as a means of exchange. So, but in order for us to understand Bitcoin, we must also look at gold. And so we'll highlight some of the similarities and differences between the two. And so one clear similarity between gold and Bitcoin, they are both scarce in supply, and they both share popular uses as an inflation hedge and diversifiers in trading portfolios. And as for the differences, well, of course, one is physical and the other is digital. And one's been around for nearly 2,500 years and more, and Bitcoin's been around for nearly 11 years. Now, these characteristics alone are not enough to truly understand what drives both markets. So when we look at gold, for example, it has been always viewed as a stable store of value against a variety of risks, such as inflation, currency devaluation, financial crisis, and political and geopolitical risk. And we can see that gold's performance versus the S&P 500, especially outperforming the equity markets during depressed markets, specifically during the 70s recession, 08 financial crisis, and more recently during the global pandemic, where gold reached all-time highs. And again, signifying gold's safe haven status and qualities against a variety of risks. And also, if we look at gold's gold versus 10-year real yields, which account for inflation, we can see a strong negative relationship. All right, again, showing gold's inflation hedge purposes. And this is from early 2000 up until more recently. And now when looking at the drivers of return for Bitcoin, we must know that Bitcoin's prices are highly sensitive to the market's perception of future adoption. And we also must know that cryptos as a whole are still in its infancy. So it's better to think of today's prices as some probability that it could achieve greater future adoption. And so any changes in those probabilities would result in large price swings and high volatility. And so we can see that if we look at Bitcoin's timeline, a key critical ingredient behind Bitcoin's success is in its widespread social adoption. And this has been correlated with massive surges, especially when PayPal, a fintech company with over 294 million users, began to accept BTC as a means of exchange. Then Square adding $50 million worth of Bitcoin onto their balance sheet. And of course, Tesla, the sixth largest company in the S&P 500, to add $1.5 billion worth of Bitcoin in investment. And so another key fundamental driver for Bitcoin is in its scarcity. We must understand that artificial scarcity is programmed into the Bitcoin market. It is also known as halving. And halving occurs when the rate of newly mined Bitcoins are halved. And that occurs every 210,000 blocks are mined. And to put that in terms of timeframes, it's nearly every 4 years. Now, why is this significant? Because it shows a further reduction in Bitcoin's circulating supply, and it has been correlated with massive surges 12 to 18 months after the halving had begun. So, as you can see from the first phase, 2012, we shot up from $12 to $1,150, representing nearly a 9,500% increase. Second phase from 2016, from $650 to $20,000, representing nearly a 3,000% increase. And third and most recent phase in 2020, we went from $8,500 to its most recent all-time high, nearly $65,000, representing a 664% increase. Now, traders have to keep in mind that there was a sharp correction after each all-time high. However, the new low was always significantly higher than before. So reassuring traders and investors how resilient Bitcoin is. And so If we look at Bitcoin's volatility in comparison to that of gold, on a 5-year volatility in percentage terms, Bitcoin stands at around 85.4%. Compared that to gold, which is at 13.2%. So it's extremely, the difference is extremely significant volatility. So we cannot say that Bitcoin is a safe haven, and we cannot view it just yet as a stable store of value. And if we look at the correlation of Bitcoin with gold and other markets, we can see a very weak correlation between other markets, especially with gold, S&P 500, and crude oil. And now, it's important to remember that correlation is not fixed, and it changes and diverges over time. And this is where we start to see something more interesting, where gold and Bitcoin start to behave similarly. And this was specifically during the March FOMC meeting, when Federal Reserve Chairman Powell came up with a clear dovish stance on Fed tapering and interest rate policies, which sent the dollar index falling and yields to fall along with it. And gold shot up nearly 1%, whereas Bitcoin shot up nearly 4%. So representing nearly 4x the volatility. So to conclude, Bitcoin is not the new gold, and investors and traders should not pick one over the other. In this new age of investing, it is important to hold both assets because they show little to weak correlation to equity markets, and that would be crucial in order to generate outsized returns in times of uncertainty. I hope you guys like the presentation. You can come meet me at booth 28, and we can have a more personalized discussion and talk about trading strategies moving forward. Thank you. Huh? Okay.
So thank you, Danny, on that. Bitcoin is the new gold. Well, we're just waiting for our next speaker to come up. I just want to ask you a couple of things. You know, if you got into Bitcoin when it was first launched, you'd be pretty much laughing now.
Yes, I would definitely. But the real question is, who would have known, you know, the potential of Bitcoin and what it could achieve?
Yeah.
So, you know, in hindsight, everything, you know, everything seems quite easy. But yeah, definitely, you know, the percentage increases that we've witnessed with Bitcoin and it becoming a mega trend for the future. Not a lot, I would say not a lot of people would have, you know, even expected it, but, you know, it's definitely a mega trend that will revolutionize, you know, the way we conduct business moving forward in the future. So, yes.
And a lot of people say it has, Bitcoin is so, you know, there are so many nations that are on the fence about
Correct.
Bitcoin regulatory
Correct.
wise, and, you know, because it's decentralized and all the rest of it,
Yeah.
bringing regulations. How much of an effect is that having on its value?
Yeah, that's, so again, what we covered basically was saying that the key ingredient to its success isn't its widespread social adoption. So if we get regulatory crackdowns, that definitely will, you know, impact Bitcoin's prices. And so, you know, the faster we are in, you know, adopting cryptocurrencies would definitely, you know, have a very positive impact on Bitcoin's prices. And so, you know, changes in those, you know, regulations and, you know, big companies accepting BTC definitely will impact Bitcoin's prices. And it's definitely a key ingredient, you know, for its success.
Well, El Salvador's adopted it as national currency.
Yes, of course.
So,
Yes.
which is it. We'd like to see other countries do that.
Yes.
And I'm going to ask you, if not Bitcoin, what other coin do you like? Do you fancy?
Well, me
I like a bit of Ether.
Ether, yeah, Ether is interesting. They're coming out with their 2.0, but we have to wait and see, you know, when that will be launched. But also, you can, you know, keep your eyes out on Cardano. That's definitely
Ooh,
one on the
Ada.
list. So yeah.
Soul. I like
Yeah,
a bit of
soul.
soul as well.
Soul, yeah.
Not bad.
Yeah.
All right. So hopefully
All right.
we've got our next speakers on the way very, very shortly. Danny,
Okay,
thank you so much.
thank you
I
very
just like
much.
to chat about this stuff.
That's
It's
fine.
super interesting.
Thank you. Thank you.
Thanks, Danny.
All right. See you guys. Bye.
Right, we've got our next speaker up here. We please welcome Mohammed Taha from Aquindex, who's going to talk to you about the trader's journey in the global financial markets.
All right. السلام عليكم يعطيكم ألف عافية. معكم محمد طه مدير قسم التطوير في شركة اكيو اندكس للتداول. واليوم احنا راح نحكي عن موضوع كتير مهم اللي هو رحلة المتداول بالأسواق المالية. طبعا لو بدنا نحكي كتير عن هذا الموضوع راح نلاقي انه كل واحد رحلته بتختلف من متداول لمتداول. في البداية لما نبلش المتداول بشكل عام يصير عنده اهتمامات في مجال التداول، أول شيء بفكر فيه اللي هو يبلش يبحث عن الموضوع ويسمع الناس شو بتحكي عن هذا المجال. فأول نقطة بصير يسمع عن الأخبار، يعني عن الأرباح الخيالية بالإضافة للخسائر الكبيرة. الأرباح الخيالية راح يصير يسمعها من خلال الإعلانات، من خلال الأبحاث اللي ممكن يشوفها بأنه هذا المجال ممكن تحقق فيه أحلامك بخلال أيام معدودة. وبنفس الوقت الخسائر الكبيرة اللي لما يصير يشوف الناس كيف يتعرضوا لها بالفترة الماضية من خلال أحداث أو من خلال أزمة كورونا اللي صارت بالفترة الأخيرة. وطبعاً الأرباح اللي إحنا عم نحكي عنها اليوم ما بتيجي بيوم وليلة. يعني لما إحنا اليوم بدنا نحكي على سبيل المثال على وارن بافيت، ولا لما بدنا نحكي عن المتداول المعروف اللي فينا اللي هو اسمه أنا آسف بالخياط، الناس هاي عملت ثروة كبيرة في مجال التداول بس مش بيوم وليلة. كانوا بحاجة لأنهم يتعلموا يأخذوا بالمجال أكثر خبرة، وبعدين لبلشنا نسمع انه وارن بافيت صاحب محفظة كبيرة بالخياط غني عن التعريف ومعروف اكثر بامكانكم تبحثوا عنه. ثاني نوع اللي ممكن تسمع عنه انت اليوم اللي هو اسرار التداول، وهاي مجرد ما انك انت اليوم تكتبها في جوجل بس اسرار التداول راح تلاقي اكثر من 1000 مقال بيقول لك اسرار التداول وابحث عن الطريقة المفيدة لجني الارباح والى اخره. باختصار شديد يا جماعة الخير، اسرار التداول هي عبارة عن المعلومات اللي انت لازم تتعلمها بمجال التداول. لانه للاسف مجال التداول بحر فيه كميه معلومات كثير، لو يعني راح ياخذ منا الوقت كثير وانا بس بشرح لكم عن المعلومات اللي موجوده، ولكن انت لازم تتعلم هاي المهنه حبه حبه لحد ما تتمكن فيها. فاليوم لما انا اجي اقول لك عن اسرار التداول فهو ما في سر. السر هي معلومة، انك تتعلم اكثر، تشوف اصحاب الخبرة تتعلم منهم، لانه غير الخبرة والمعلومات انت ما راح تقدر تكون ناجح بهذا المجال. الشغلة الثالثة اللي اليوم المتداول بسمع عنها كثير اللي هي إدارة الحسابات. حتسمع انه في ناس بتدير حسابات والى اخره وكذا. للاسف على قد ما انه هاي النقطة كثير مفيدة الى انه بتسبب كسل للمتداول. حتقول لي كيف كسل يعني؟ هقول لك لانه باختصار شديد المتداول لما يعرف انه في شخص ثاني ممكن يدير له الحساب مقابل نسبه معينه راح يلاقي بانه هو صابه كسل بانه يتعلم، بانه يعرف اكثر عن الاخبار، بانه يعرف في اليوم شو اللي عم بيصير بالسوق، بانه يصير متمكن. لانه الموضوع مش برجع بعيد مش يوم وليله، بالعكس راح ياخذ منك اشهر بل سنوات. وكل ما زلت انت اليوم بمجال التداول راح تلاقي انه في معلومه انت ما كنت بتعرف فيها قبل. التوصيات المضمونه، وهاي اللي هي راح تلاقي اغلب الناس اللي اليوم خسرت في مجال التداول وتيجي تسالهم تقول لهم انت ليش خسرت؟ حيقول لك والله في فلان اعطاني توصيه. للاسف باخذ التوصيه بس مش عارف يتعامل معها، بالاضافه لانه اليوم التوصيه مع نقص خبره ونقص معلومات والى اخره، هذا الموضوع راح يسبب لك خساره. رقم 5 اليوم اللي هو التداول الآلي. في كثير ناس من اول ما يدخلوا مجال التداول بيجي بقول لك انا سمعت انه في اكسبرت ادفايزر، التداول الآلي بتحطه بالسيستم بيصير يطلع لك فلوس، صح؟ في هاي النوع من انواع البرامج، بل بالعكس في برامج مفيده كثير وماشي على استراتيجيه معينه، ولكن انت اليوم بسوق عالمي فيه آلاف الناس، آلاف الشركات، البنوك المركزيه تشتغل فيه. فهل انت متوقع بانه الاكسبرت يكون اذكى منك؟ لا. الاكسبرت حتى في مراحل من مراحل التداول ما راح يعرف يشتغل صح، ممكن يؤدي لانه يخسر لك حسابك. اذا اليوم انا بدي اقول لك انه الاكسبرت احسن منك في شغله، فهو احسن منك بشغله واحده بس اللي هي العاطفه. انت اليوم لما تشوف حسابك خسران بصيبك العاطفه، هل اسكر الصفقه ولا اخليها؟ بس الاكسبرت ما عنده الاحساس لانه هو اوتو سيستم، فبص بتحمل على خسارته لحد ما توصل الصفقه ربحه والى اخره. عدا عن ذلك هو مش احسن منك الاكسبرت ادفايزر. رقم 6 واللي هو الماركت ميكر. لازم انت كمتداول تكون سمعت عن الماركت ميكر. يعني للاسف بتحس انه اليوم بالابحاث النت ولما تسمع عن بقول لك الماركت ميكر بتحسه احد اعضاء الماتريكس. الماركت ميكر احنا، الماركت ميكر البنوك، الماركت ميكر اللي هو نسبة الشراء في هذا المكان المعين، الفوليوم. احنا اللي بنتحكم بالسوق، فما في جهة معينة قادرة تتحكم بهذا النظام. عشان هيك بتلاقي البنوك المركزية بكل ايام معينة من الاشهر بتنزل خطابات، بتطلع تقارير كذا ليقدر يعالج ويضل محافظ على المستوى المالي بهاي الاسواق. النقطة الأخيرة اللي بسمع عنها المتداول اللي هي التحليل الفني والتحليل الأساسي. وحتلاقيه دائما أول ما يجي يبلش بده يتداول حيصفن، حيقول لك طب أنا أدخل على أي مجال، التحليل الأساسي ولا الفني؟ طب الأساسي على الأخبار، أنا ما بفهم بالسياسة ولا بعرف البنوك، يبقى أفوت على الفني. بدخل على الفني بلاقي مثلا حيلاقي عدة مدارس، ناس بتحلل بالتحليل الفني الأساسي، ناس بتحلل تحليل فوليوم، ناس بتحلل تحليل زوايا سعريه، حتسمع اسماء لمدارس كثير. بس السؤال، هل في منهم تحليل واحد بس هو اللي راح يفيدك بالسوق؟ لا. دام انه انت لسه جديد بهذا المجال ولسه عم تتعلم، مش غلط بانك انت تتعلم التحليل الفني والتحليل الاساسي. ومش ضروري تاخذ لك مدرسه واحده يعني تتعصب لها، لا. خليك رايق، تعلم على هاي المدرسه، اسمع عن الاخبار، حاول تقرا هذا الملف، خذ نظره شامله. طول ما انت لسه في مرحله البدايه، كميه المعلومات اللي راح تاخذها راح تفيدك، راح تعطيك اسس ومبادئ انت راح تستفيد منها لاحقا. لانه بعدين اذا بتدخل وانت لسه مبتدئ وبتتعرض لخساره، النفسيه اللي راح توصل فيها ما راح تخلي استيعابك يكون بنفس الشغف اللي كان عندك يا اول شيء. فدامك بمرحله انك انت عم تتعلم، لا اتعلم كل شيء افضل. للاسف اغلب الناس والمتداولين حيلاقي انه اليوم بدايه الطريق مثل هذا الترند. بفكر المتداول انه اول ما يدخل على السوق يتعلم له تحليل، بلش فتح كم صفقه عمل، فهو ببلش يشوف حاله نفس هذا الترند، انه انا بلشت اليوم بمبلغ صغير، شوي شوي عم بكبر حسابي، شوي شوي انا راح اوصل لفوق او اوصل لاحلامي. هذا انت بتوصل له بالمناسبه، وممكن توصل له، وفي ناس وصلت له، بس ما حدا وصل له بدون ما يتعلم. اتاكد، ما حدا وصل له بدون ما نفس مدى اللي هي الشموع الحمراء اللي هي كخساره. لازم قبل اي صفقه انت بدك تفوتها تكون مهيئ حالك نفسيا بانه لو خسرت قبل ما تقول لو كسبت. لما تتعامل انت مع السوق والحساب بهاي الطريقه نفسيتك بتتغير. انا اليوم لما حتى عم بعلمك كتعليم بالاضافه النفسيه، لانه النفسيه هي اللي بتسبب 90% من اللي انتم بتشوفوه اليوم بالتداول. حتى الزقزاق اللي بتشوفه الحركه هتلاقي انه اوقات مقصدها بانه يوترك فقط لا اكثر. فبتلاقي المتداول بشكل عام هاي متخيلته، بس للاسف اللي بيصير اللي هو هذا هو الطريق الحقيقي. هتلاقيه انه داون ترند، نقص خبره، نقص معلومات، نقص تجارب، كل شيء، بدايه سوق جديد، نقص باداره راس مال، بمدركه اللي هي الخطوره اللي انت فيها. حتلاقي حالك بتفتح اول صفقه بتخسرك، يا دوب اول ما تخسرك بترجع بتفتح شوي صفقه بتلاقيها مشيت معك بترتاح، بتقول بس انا رجعت لبدايه الطريق. بس انت اللي عم بتمر فيه هي مش بدايه الطريق، انت لسه اوريدي حتضلك راح تخسر وراح تخسر وراح تخسر. بس اليوم كيف احنا نتعامل مع السوق؟ قبل ما تقول شو هو السوق العالمي وشو هو التداول وانا ليش ادخل هذا المجال عشان اجني ارباح، كثير ممتاز. طب لما بدي اجني ارباح يبقى انا ناقصني معلومات. طيب السؤال الاهم، انا مين؟ انا مش متداول، انا مجرد ما اني انا دخلت بهذا السوق فانا اعتبر شمعه، كاندل. اللحظه اللي انت بتفوت فيها هذا العالم انت تاسست عندك اول شمعه. كلنا بمجال التداول بنعرف بانه انت في عندك شمعه 5 دقائق وشمعه ساعه وشمعه اسبوع او شهر. انت اللي بتحدد اليوم الشمعه. لما تفتح الشمعه بالبدايه اللي هي المعلومات اللي انت بتاخذها، كل اللي انت بتجمعه، تعلمت، عرفت شو هو الريسك مانجمنت على سبيل المثال، تعلمت باني انا اضبط نفسي، تعلمت باني انا ما اكون طماع، اكتفي بالقدر اللي انا وصلت له من التداول. انت راح تبلش تاسس شمعه خضراء، وهذا اللي راح تشوفه. لانه بشكل عام البورصه لما تاسست ما تاسس السوق عشان يضلوا في هبوط. الاسهم اليوم لما انت اليوم تلاقي في سهم تسلا ولا سهم امازون ولا سهم ابل، هاي الشركات اصبحت مدرجه بالاسواق الماليه مش عشان يكون السوق هابط، لا، هاي الاسهم انعملت عشان يضل السوق في ارتفاع. كيف انت بدك تضلك اليوم بارتفاع؟ بانك انت تاسس حالك باول شمعه. اللحظه اللي انت بتكون بتبلش فيها بهاي الشمعه الحمراء وانت ما عندك هاي المعلومات ولا عم تاخذ التجربه ولا اي خبره عندك، راح تاسس شمعه حمراء. راح تطلع من المجال هذا تقول للسوق هذا خسران، انا خسران فيه، السوق هذا مش منيح. عشان هيك احنا بنلاقي اليوم انه لما نلاقي نسمع عن المخاطر بهذا السوق، مخاطر فيه عاليه بالاضافه لنقص المعرفه بهذا الموضوع. بس السوق كثير ممتاز لو انت اليوم بتشتغل فيه بنسب، تيجي بتقول انا بشتغل بنسبه راس مال معين، هدفي اطلع فيه 10%، 5%، 12%. ما في داعي لنطمع ونحلم دائما بانه نكون دائما دبل او 100%، لانه على ارض الواقع ما في بزنس هيك. حتى لو في، راح تتاكد تماما انك انت لازم تكون واصل يعني للخبير في مجال التداول عشان توصل لهي المرحله. بس تاكد تماما باول سنه ولا بسنتين ولا بثلاثه انت بعدك بتاسس شمعه. انا محمد متداول، حتى كنت وما زلت وراح ابقى بكون شمعتي، بس انا عم بحاول بقدر المستطاع بانه الشمعه اللي انا عم باسسها لحياتي انا هي تكون شمعه خضراء. فانت قرر كيف بدك تكون. شو لازم المتداول يعمل او ماذا يفعل المتداول ليتخذ طريق النجاح؟ ركزوا معي بالشارت. الشارت هذا المقصد منه دائما احنا بنعرف بالسوق في اب ترند، داون ترند، وفي عندك السايد واي اللي هو الاتجاه او السوق الحركه العرضيه. انت اليوم وانت ما زلت بتتعلم في مجال التداول مش مطالب منك تكون ارباح، ولا مطالب منك بانك انت تعمل خسائر. انت مطالب منك بانك تعيش التجربه وتضلك تحافظ على راس مالك وتعمل، حتى لو عملت ارباح تكون معقوله بينما انت عم تتعلم. ويستحسن بانك انت لما تفكر تبدا في مرحله التداول تبدا في مرحله الحساب التجريبي. يا جماعه لما اليوم احنا بنحكي بنقول لك الحساب التجريبي اتدرب فيه عما لا يقل عن 6 اشهر، احنا ما بنحكيها من فراغ.
احنا بنحكيها عشان انت على الاقل تكون جربت نص سنه ماليه في مجال التداول، بتكون سمعت او عرفت او شفت حركه السوق وهي عنيفه، تكون شفت السوق وهو في حركه عرضيه، تكون شفت السوق في حاله لو قدر الله ولو صار في ازمات، تكون عارف انت كيف ممكن تتعامل مع هذا السوق. فابدا بحساب تجريبي. ما يعني ما الشغف اللي عندك لا تطلعه في الارباح اللي انت نفسك فيها، لا، طلعه بالمعلومات اللي انت نفسك تاخذها. ابدا بحساب تجريبي 6 شهور، ما عندك مشاكل. وعندك بعد ما تختار 6 شهور، اليوم حتى لو سوق عملات حتلاقي فيه اكثر من 25 عمله. ركز على العملتين، ركز على العمله، حاول تحفظ حركتها للعمله بشكل عام. اذا تعلمت عليها وتمكنت فيها راح تحفظ حركه سعرها. ساعتها بكره لو السوق طلع ولا نزل راح تكون عارف بانه هو عنده حركه بمقدار يومي كذا، راح تستفيد منها انت. هاي كيف ممكن تحافظ على طرق مستواك وانت عم تتعلم؟ لازم يكون في عندك نهج او استراتيجيه. كثير اليوم لو انت حتبحث على اليوتيوب ولا جوجل ولا باي مكان استراتيجيه تداول، راح تلاقي استراتيجيات كبير بشكل يعني مخيف. شو هي الاستراتيجيه؟ هي طريقه ما انت شفتها في مجال التداول، اكتشفت انه انا لو عملتها انا راح اربح او راح تكون الصفقه اللي انا داخلها ناجحه. فانت الاستراتيجيه هاي لا تفكر انه اي بني ادم عمل الاستراتيجيه فهو يعني انه خبير، لا، انت كيف شايف السوق اليوم؟ في ناس بيعملوا الاستراتيجيات بناء على الموفينج افريجز اللي هي المتوسطات، في ناس بيستخدموا الفيبوناتشي ريتريسمنت، في ناس بيستخدم كثير امور وبدمج لك اياهم. بقول لك انا لما بشوف هاي الاشاره بدخل. حاول تبتكر اشاره لك بالزوج اللي انا قلت لك عليه، مثلا تعلم، راح تلاقي انه هذا الموضوع كثير بفيدك. اداره راس المال يا جماعه، اذا بتعرف اداره راس المال، لو شو ما هبط فيك السوق او ارتفع فيك ارباح انت محافظ على راس مالك. اما اذا ما بتحافظ على راس المال او يكون في عندك خبره، اعرف انه انت نسبه خطورتك في هذا المجال مخيفه شوي. لا تخاطر، المخاطره حلوه، استخدمها بتعرف متى؟ لما توصل لمرحله متقدمه في مجال التداول. عدا عن ذلك انت مش مضطر، لانه في ناس اليوم متداوله بشكل يومي، في متداولين بشكل جزئي اللي هو عنده شغل اساسي ولكن بحب يتداول مثلا على افتتاح السوق الامريكي على سبيل المثال او الى اخره. فانت حدد بالضبط انت على اي سوق بدك تشتغل، وحاول بناء على روتين حياتك تعرف تتداول او تعرف تشوف الاستراتيجيه المناسبه لك باداره راس مال معينه لتقدر تحافظ على الطريقه اللي انت ماشي فيها. الشغله الثالثه والاهم، شغل عقلك. حاول تميز بالضبط شو اللي عم بيصير بالسوق. لا تتبع دائما الاخبار، شوف الاخبار وشوف قارنها بالاحداث الحاليه. اليوم ممكن نسمع عن حركه قويه بالسوق بس بنفس الوقت ممكن ما نلاقي فيه اخبار عن السوق. حاول تعرف بالضبط شو اللي عم بيصير، تعلم. كل المعلومات اللي انا طرحتها وما زلت بقول لك اتعلم. عشان تنجح بهذا المجال لازم تكون متعلم كثير ويكون عندك الخبره. بالختام بحب احكي لكم شكرا كثير لكم. واليوم احنا بشركه اكيو اندكس بنقدم كمان اكاديميه للتعليم، فلو عندك اي استفسار اهلا وسهلا فيك. واليوم احنا كوسيط بنقدم حساب زيرو لايف اكاونت اللي هو زيرو سبريد، زيرو كوميشن، وزيرو ديبوزيت على والويدرول. ولو عندك اي استفسار اهلا وسهلا، احنا ببوث 44. شكرا كثير. Thank you so much. Thank you.
Thank you so much, Mohammed Taha, for that wonderful presentation. And we'll get right on to another one. Our next presentation is all about cash flow with respect to technology using major markets. And from TB Global FX, please welcome Viraj Patel to the stage. Ah, you weren't kidding, were you? Forwards, backwards, and that's a laser pointer if you need it.
Okay, how does it work?
Forwards, backwards,
Okay.
laser pointer.
Hello. So good afternoon. So I see here, like, this is my first time when I'm speaking in Dubai. The speakers are speaking with all the interesting topics and people are not interacting. Are we sleepy? Can we have some interaction, some energy? All right. That makes me feel good. Can we have a round of applause for the previous speaker as well? So you people might be thinking that this guy is so young. What is, should we actually listen to him? So let me tell you a bit about myself. Of course, this is not about myself, but a short introduction. My name is Viraj Patil. I come from India. So I've been in the entrepreneur space for nearly 5 years. I've been working in more than 15 countries. I've been consulting many businesses. So Forex is not just my business. I'm into many businesses. So here again, as I said, that I'm not here to talk about myself, but talk about TP Global and how to make cash flow, with respect to live markets. So am I an expert in Forex? The answer is no. How many people consider themselves as not an expert? Can you raise your hands? All right. And how many people out of that are interested to make money? All right. That's what interests us the most, right? Yes, yes or no? Yes. So what is actually an expert? An expert is someone who has spent over 10,000 hours in the live market. So I've been associated with many experts who have been there in the market for more than 12 plus years. So it's not that I don't know anything about that, but the point is, even if you're not an expert, how you can make money, I'll take you through the process. So there is a simple 3-step process in this, wherein you can read on the screen, like you should, just a minute, I think I double click. Yeah, 3-step process, wherein the first step is like, of course, when you want to participate in the financial market, you should be wise enough to choose the broker. How many people know about the broker? Yeah. So basically, I'm not here to talk about what is there on the website, but what are the basic things that you should know as an individual, even if you're an expert or not, so that you'll be wise enough to choose a broker. I'm not saying that TP Global is perfect, but if you consider this criteria, maybe you might make a wise decision. Number 1, as you see, which is mentioned in the screen, market hierarchy. Many people don't know about this, like market hierarchy. When you deposit the money, your money goes to the liquidity provider and it goes to the big banks. So it is crucial that a broker is following the market hierarchy. If it is not following the market hierarchy, there might be a risk of your money. So broker, if it is following the market hierarchy, in the either case, even if you win the trade or lose the trade, your money is safe. Of course, when we participate in the financial market, the first concern which comes to our mind is our money safe? Am I right? Of course. So this is a crucial pointer which you need to consider. Number 2 is the diversity is available. What are the options available wherein you can participate with? Here with TP Global, we have more than 150 options. All the currency pairs, all the cryptocurrencies, the commodities, derivatives, coffee, soya bean, etc. With all of these options, you get to know about different pairs and you have a lot to participate in. And because the markets are volatile, you can make money from whatever diversities are available. Point number 3, trading platforms which are supported. We support MT4, MT5, and also we are coming up with one more personalized platform which is called as Vertex, wherein you can get a lot of personalized stuff, which I won't be talking in length about. Number 4, customer support. In majority of the cases, why I want to talk about customer support. Customer support is not just the Autobot which is made to respond you. You know, in major cases, it's been like almost 3+ years when I've been working with Forex. I had a lot of Autobots with good brokers. I'm not here to badmouth any other broker, but they just respond to you and give you a technical explanation how your problem won't be solved. Is that what you're looking forward to? Of course, you're here to look for a solution. And here I can tell you one thing, that they are looking forward to give you a genuine solution. Can we have a round of applause for this broker? Pay-in payout solution. This is one of the crucial factors. It doesn't matter that how long, I mean, they're not there for 15, 20 years. But again, when I come from an Asian market, which constitutes of more than 60% population of the world, if there is no pay-in and payout solution available for you, is it easy for you to participate or is it difficult? Of course, it is difficult. So here we cover all the Asian markets, the Latin American markets, the African markets, as well as some parts of Europe. I'll take you to the next slide. When you evaluate all of this and also the regulations, people talk a lot about regulations. I would ask you one question. Forget about the regulations. What conditions, what trading conditions are favorable for you? That matters to you the most. And regulated broker is a good broker. But of course, these people are regulated in Vanuatu, wherein the conditions are favorable for you. I'll explain you about that in the coming slides. So again, when you validate all of these points, you might come to a wise decision how you can go ahead with choosing the broker. As I said, it is a 3-step process. Process number 2 is like you should know the basics. There are some basics, even if you are not an expert, you should know about risk and money management. I see many fancy websites wherein they say that your money will be doubled, quadrupled, tripled. It is not true. If it was a fact, everybody in the world would be doing Forex. Do you agree with me? Hello. So the matter of fact is like only 9% to 8% of the people make money because they know the basics of risk and money management. How much trades you are going to place according to your capital. How much equity you need to have to participate on certain pairs. Number 2, lot sizes. How much lot sizes, how much equity you're putting as per your standard lot, mini lot, micro lot. This is the basic understanding which you need to know as a beginner or even as an expert. Number 3, which is pips. In any industry you work, there is a unit of measurement. So here the unit of measurement of profit or loss is pips. So if you know that, even if you are not an expert, it will be quite easier for you to understand the potential of the market and for you to make your money to work for itself. Spread, swap, commissions. Many people say that the spread, our spread is raw, our spread is good. I don't know. I don't know whether the spread is good. Spread is what? The difference between the ask and bid. So just check in one pair what the, for example, we are taking a pair USD JPY. Check the spread in TP Global, check the spread in some other broker. I feel they have good spreads, decent enough for you to participate, wherein you can save your money. Commission or spread, it is applicable in either of the cases. When I talk about swap, swap is the international broker charge, bank charge when you are holding a trade overnight. So when you're holding a trade overnight, I've come across many brokers wherein, you know, they charge me $38, some other broker is charging me $10, someone is charging me $50. Why is the difference? Again, when I asked to the customer support, they gave me an inland technical information why that money should be deducted. So you should be well aware of these facts which are not mentioned on the website. I'm not here to talk about the facts that are mentioned on the website. You can check it on the website itself. You're here to know something which is not on the website and which is crucial factor for you to know. Do you agree with that? Systems to educate the customer. Here at TP Global, we have daily newsletters wherein you are updated on an email which you're putting while registering in the broker about what are the market conditions, what pairs to participate in, what is the expected high and low as per the technical fundamental analysis, which for a new customer is very easy for them to participate. Last but not the least, market open and close time. When we talk about cryptocurrencies, they also have cryptocurrencies. I've come across many best brokers or big brokers wherein crypto market is supposed to be open 24/7, right? But in Forex brokers, they say that no, this market is open only 24/5. So in Forex, crypto will be closed. That itself says whether the broker is following the market hierarchy or not. But with TP Global, even on Saturday and Sunday, you will find all the crypto pairs also opens and the market working on real time, which gives you the assurity that your money is safe and they are following the market hierarchy. Again, can we have a round of applause for them? Last but not the least, when you have chosen a broker, when you know the basics and you have started to make your money to work for itself, you can leverage from other people's money as well. What do I mean by leverage from other people's money? You can promote the broker and be an individual franchisee owner of the broker, which is called as a introducing broker or maybe an affiliate sort of model which everybody has. So a few pointers which I would like to share about the broker. In the pandemic, when all the businesses were falling, I don't know about the entire broker story because I am not the broker representative. I'm just a business consultant. I myself, when I participated with this broker in 17 months alone, we onboarded 31,000 customers, which shows the pandemic growth percentage. Definitely, the next point which is written is perfect or growing. Is TP Global perfect? My answer is no. Perfect is a word which is just there in the dictionary, but it is improving, which is what I believe. Because whatever concerns you express them as a customer, they actually address you. They actually make sure that they're getting addressed and solved. So it is what you need as a customer. If they are improving, of course, you have the scope to grow as a trader or as an IB or as a promoter whatsoever. Open to provide expansion solutions. Even if you're launching businesses, let's say in some other markets, They're open to your ideas. If they see potential, they give pay in payout solutions, get you all the available logistics which is required for you to get there. Wherein, like, when I started in this industry, when I was not working with them, I had to do all of that. So what would be easier for you? If the broker is providing that logistics, or you have to do all of that? Broker, of course. Last but not the least, campaigns. So all the brokers have some campaigns wherein they incentivize you so that you can participate in them or promote them. So are the campaigns realistic? I see their campaigns realistic, not because I'm speaking for them, of course, but there were many campaigns wherein they say that when you deposit money, you will get bonus. But that actually doesn't get encashed in your account. It's just upon your trading. You do this much lots, then we'll give you that money. And when you do that much lots, your account is blown out. But here, the incentive was positioned in such a way wherein if you trade in a proper way, if you bring in certain amount of volume without having hypothetical targets, you can achieve the Dubai trip, which was the last incentive, which was there. Many people qualified through that also, and which gives us a taste of like what we are working with, what genuine platform we are working with, and they are actually willing to build the incentive. Many people are here from the incentive as well. Last point, as I have got only 15 minutes to talk, so I can't talk in length. Of course, I would like to. So what sort of businesses in pandemic went to the trends? I'll talk about my personal impact. I have many businesses, but in this Forex business, I don't have any office. But I just joined this business looking at the technology and disruption which was happening around the world. When I joined this business 17 months ago as a introducing broker, as an IB, as an affiliate, the support was of such sort and the attraction was of such sort that it made me like $7-figure US earner a year just through this business itself. And that's my story and nobody can take it from me. Time in the market plus growth scenarios. Of course, they're not been in the market for a lot of time, but the growth scenario is good enough wherein you can experience with a growing trend. You can also be a part of them and grow along with them. I don't know what is wise for them. New normal. Again, as I said, the world is changing. Of course, like change is the new normal. If you don't change, your life will be impacted in a negative way. And if you change, I think it can be a positive one and you are the change. Thank you so much. See you at the booth.
Thank you so much, Viraj. And I brought a little fan club with you. I'm loving it. Loving you guys having some energy in here today. Yeah! Finally, you woke up. What happened? Excellent. All right. So up next, we've got a talk on what could the future hold for cryptocurrency from XNest. We're going to welcome up Sharif Khurshid. Sharif, if you'd like to come up, please. Let's give Sharif a nice big warm welcome. Come on, guys. Keep the energy going. We like some energy in the room. It's good. It keeps us all awake. Saves me bringing you all coffee.
This is where is the pose?
Right.
This is the pose.
Forwards, backwards, for your clipper.
Okay. Okay. Thank you. Today I will speak with Arabic, mother language. Anyway, my name is Sharif Sulaiman. اسمي شريف خورشيد. بعمل في مجال أسواق المال منذ أكثر من 22 عام. بمتلك موقع FX بورصة CEO ل FX بورصة. وهتكلم النهارده عن الترند أو الخاص بالعملات الرقمية أو ما يسمى الكريبتو. مما لا شك فيه إن الكريبتو في الوقت الحالي هو الترند في الماركت. ومش هننكر ان الكريبتو سحب جزء من اسواق اخرى زي الستوك ماركت او فوركس وبقى ليه جمهور على ارض الواقع. هنتكلم على العملات الرقميه بين الحاضر والمستقبل. هل اصبحت العملات المشفره هي الملاذ الامن والمفضل؟ ما هي أفضل العملات الاستثمارية على المدى الطويل والقصير؟ ما الأداء المتوقع خلال 2022 للعملات المشفرة؟ العملات الرقميه بين الحاضر والمستقبل. سابقا كان في تشكيك كامل عن العملات الرقميه. ناس كانت بتقول ان هو مجرد فقاعه وهتنتهي. في ناس ما كانتش مقتنعه بيه. ولو فاكرين زمان كان البيتكوين وصل ل 3 دولار 4 دولار في بدايه ما الماركت او في بدايه طرحه. لكن بمرور الوقت اصبح العملات الرقميه واقع افتراضي يجب الاعتراف به، وبقى ليها جمهور وليها متداولين ولها الكثير من المتابعين والتريدر برضه. تمام؟ العملات الرقميه سابقا كانت دول كتير مش معترفه بيها ولا تصرح بيها، وفي بعض الدول كانت بتعتبرها انها نوع من انواع الاحتيال او التدليس او النصب الى اخره. لكن بمرور الوقت العملات الرقميه والمشفره فرضت نفسها على ارض الواقع، لدرجه ان بعض الشركات العامله في مجال اسواق المال بدات تهتم ايضا بالعملات الرقميه لان ليها حصه من السوق. فده يدينا اشاره او يدينا انطباع ان بقت الشركات او الماركت بشكل عام يتوجه الى الاهتمام الى هذا الجمهور وهذا الشريحه من المتداولين. ده لغايه 4-5 سنين فاتوا. بعد 4-5 سنين في الوقت الحالي في بعض الدول اتخذت العملات الرقميه النهارده بقت عمله رسميه. وفي بعض الدول النهارده بتحارب حرب شرسه وشديده ضد العملات الرقميه. زي الصين على سبيل المثال، اول عدو للعملات الرقميه، لان احنا عارفين النظام الصيني نظام يعني له بعض القيود وبعض السياسات الخاصه به. على الجانب الاخر في دول ثانيه زي الولايات المتحده الامريكيه عندها تخوف من العملات الرقميه، لكن في نفس الوقت لسه ما منعتوش، لسه لم تحظره، بدليل انك في اخر احصائيه في الولايات المتحده الامريكيه وجدوا ان في خلال 6 شهور فقط ان في اكثر من 10,000 ماكينه صرف آلي داخل الولايات المتحده الامريكيه. معنى ان يكون في ماكينه ATM او صراف آلي داخل الولايات المتحده الامريكيه تحديدا، فده اعتراف ضمني ان انا بدات اعترف بالعملات الرقميه، حتى لو كانت التصريحات مخالفه للاعتراف بالعملات الرقميه. طيب، اذا الماضي والحاضر والمستقبل اللي انا بقوله دوت في الوقت الحالي ده مش ريكومنديشن عشان اجي اقول لك تشتري او تبيع. انا بوضح لك الصوره، بعمل لك فوكس اكتر على العملات الرقميه بشكل عام. ثانك يو. هل اصبحت العملات المشفره ملاذ امن؟ اصبحت ملاذ امن، بدليل ان شركات كبيره وعملاقه زي شركه تسلا مثلا استثمرت في البيتكوين، ودي شركه مش سهله، او المستثمر فيها راجل مش سهل، مش هيروح يحط عملات او يحط فلوس او يعمل انفست في مكان مش هيعود عليه بالنفع. فده اول اعتراف ضمني انه ممكن يكون العملات الرقميه او البيتكوين او ايا كانت العمله النهارده اصبحت ملاذ امن. فلما تيجي النهارده تبص على الاسواق الماركت بشكل عام كنا بنشاهد او بنراقب الاتي: النفط، الاويل، الجولد، الدولار الامريكي. المثلث الرعب بتاع اي سوق النهارده ما بقاش مثلث، بقى مربع داخل في مين؟ العملات الرقميه. يجب ان تعلم ان في سوق العملات الرقميه الان على اخر احصائيه تقريبا 12,000 عمله رقميه، ماركت كاب 2 تريليون دولار. امر واقع، جيم اوفر، سواء انت وافقت عليه او ما وافقتش موجود. السؤال اللي بتسأله كتير هو ايه افضل عملات ممكن استثمر فيها؟ السؤال ده صعب الاجابه عليه. وانا شخصيا لما احب استثمر مش هستثمر في البيتكوين، جيم اوفر، هو خد الترند وراح وانتهى، واللي هيستثمر الان فيه الريسك بتاعه عالي. لكن مما لا شك فيه ان العملات الرقميه او البيتكوين تحديدا هو القائد العام او الليدر للسوق، بدليل انك بتلاقي البيتكوين طلع بتلاقي كل الماركت معاه طلع. لما بيجي ينزل او بيحصل له هبوط، هو النهارده ما اعرفش عند مستويات ال 43، اخر مستوى عندنا هو ال 38. بعد المستوى ده ممكن لو كسروا ممكن نشوف مستويات ثانيه مخالفه يعني. الاجابه على السؤال ايه افضل العملات المشفره اللي ممكن استثمر فيها، دايما بنصح العملاء وبقول لهم لو سمحت لازم تدرس العمله اللي انت هتشتغل فيها وهتستثمر فيها. هو طبعا معتقد او بيتخيل او عاوز يصدق انه ممكن يكسب مليون 2 3 4 مليون دولار في لحظات، زي ما حصل في البيتكوين كان ب 3 دولار بقينا وصلنا لمستويات 60,000 دولار. هل السيناريو ده ممكن يتكرر تاني؟ انا شخصيا ما اعرفش. طب مع انه عمله برضه ما حدش يعرف، لكن كلها توقعات وتكهنات. لكن لما تيجي تستثمر في العملات الرقميه لازم تبقى عارف العمله دي اللي طالعه في السوق واللي هتطرح في السوق البروجكت بتاعها مربوط بايه؟ يعني الهدف من انشائها ايه؟ اي حد قاعد من في الصاله معانا او في اي حد في مكان في العالم ممكن في خلال 5 دقائق يعمل عمله رقميه لنفسه باسمه. الموضوع اصبح عادي اوبن سورس واعمل اللي انت عاوزه. لكن مين اللي هيشتري؟ واسباب العمله دي النهارده اللي هتيجي تطلع عشان اشتريها ايه الاسباب الدافعه الناس تستثمر فيها؟ طبعا خلي بالك ان في اخبار كتير بتبقى فيك واخبار كتير مزوره عن العملات الرقميه وممكن تقع في فخ انت في غنى عنه. ايه هو الاداء المتوقع ل 2022 للعملات المشفره؟ من وجهه نظري اللي بيحصل الان في الماركت او في السوق في العملات الرقميه او الكريبتو بشكل عام هي مجرد تصحيحات او جني ارباح. في ناس طبعا بتخش على السوشيال ميديا وتيجي تقول لك والله يا فندم موضوع فيك وخلاص جيم اوفر. هو كل ما ينزل كده يعني هتلاقي ناس تبقى من الفريق اللي هو الداعم للنزول وانها عمله فيك وانها بعد ما بيطلع، ودي سيكولوجيه المتداول وده علم بيدرس يعني، ويبتدي السوق يطلع بيفتكر بقى يا ريتني كنت تداولت. طب ما كمل الاول. يعني انت جاي بعد كده وبعد ما طلع عايز تتداول او تستثمر، دي هنا اللي بنسميه جود تشانس يعني او جود فيجن يعني. طيب انا المفروض كان في شريحه ثانيه لكن ما فيش. anyway دي انا اسف جدا على المحاضره انها قصيره، لكن عاوز اقول ان في بعض الهدايا خاصه بالعملات الرقميه خاصه بالكريبتو بشكل عام مقدمه من FX بورصه الموقع الرسمي بتاعي. ممكن حضرتك تحصل على هديتك في البوث رقم 4 نمبر 4 الخاص باكسنس، ويشرفونا فيه ان شاء الله واتمنى ليكم التوفيق. شكرا لوقتكم وميرسي لذوقكم. Thank you.
Okay. Thank you so much, Sharif, for that. And on the way next, very interesting talk that a lot of people are going to be interested in. It's something that's really taking off at the moment. Copy trading, the future of the trading industry. From Infonox Capital, please welcome Tiago Cardoso to the stage. Come on, guys, let's have some energy in here.
Thank you very much.
Backwards, and that's a laser pointer if you need it.
Right. All right. Thank you very much. Good evening, everyone. My name is Tiago Cardoso. I'm the product owner of iXocial. iXocial is a brand new app that Infonox just launched a few months ago. Something that I wouldn't say it's disruptive because a lot of brokers have been doing that in the past, but is indeed something that, in my opinion, and I believe in a lot of you guys' opinion too, it's something that is going to change the game of how a Forex broker or a CFD's broker is going to act in the future. The reason I say this is not only because we need to change the way the traditional Forex market or CFD market works. Nowadays, what we have is we have an MT4, MT5 broker or a broker that develops their own technology, but that's it. We rely on people to make their own decisions. We live in a world where a lot of different aspects of trading are needed to make a trader successful. So today what I'm going to talk about is about social trading, about what it is and why, in my opinion, and in Equinox view, this is going to be the future of trading. But first of all, let's understand what is social trading. Not a difficult concept. I believe all of us here, you all have, accounts on Instagram, on Facebook, LinkedIn, which I believe everyone has posted something these last 2 days on LinkedIn. Social trading is exactly the same, but instead of us sharing pictures and videos of our friends and family, we share something even more interesting, which is trades, which is what we as traders or we as people that are involved in the trading environment want to know more about. Also, with the social trading aspects of trading today, people can interact, people can engage, people can share ideas between all of them. You know, a lot of issues in our markets nowadays, mainly related to the partners side of our business, of a Forex or CFDs broker, is the fact that a lot of misinformation is passed through Telegram to Instagram, and that is done outside of a trading environment. A lot of times we see a lot of people mis-selling our products, mis-selling the way trading should be promoted. And with IX Social, we want to change that. We want to shift the way a lot of people mis-sell Forex or CFDs or trading into a community that that adds everything into just one app. So why do I believe, or why Infinox believes that social trading is the future of trading? To understand that, we have to first understand why social media has been changing the world as we know it. And I say this because I remember 10 years ago, I wasn't old enough to be on these expos, but I'm sure they existed. But nobody was aware of that. Why? Because social media wasn't here. No one could, do a LinkedIn post, do an Instagram story about this. So social media changed the way every single one of us look at the world. Nowadays, and I believe you guys, some of you probably are here in Dubai, you're probably not from here. I'm not from here. And in order for me, for example, to look for restaurants, I do it on Instagram. Or I do it on other social medias with, for example, Google. They have a place where I can review restaurants and make my decision. So obviously, social media changed the way we make decisions, not only on trading, which is what I'm going to talk about, but changed the way we make our decisions in everything. In where I'm going to eat, which restaurants I'm going to take my girlfriend tonight, which hotel I'm going to spend my holidays tomorrow or in the summer. And the fact is, if we look at the data that we have, you see that an average daily social media user spends 145 minutes on social media. 86% of social media users are aged between 18 and 29. Remember, what is, as a Forex broker, what is the age gaps that we want to target? It's people that are going to be our clients in the future, people that are going to be with us for the long term. 96% of users access social media on their mobile devices. You look at our industry, what do you see? You see a lot of brokers developing their own apps, their own software, to desktop, no, to mobile devices, which is where everyone spends their day on. 83% of Instagram users says that they discover new products and services on Instagram, which, going back to what I said before, where a lot of people make decisions based on what they see on social media, makes all the sense, which means that for me, as a trader or someone that is a beginner, I'm gonna make a decision based on what I see on social media. Now imagine if we can gather these around in just one app, and you see the likes of eToro or Naga or Infinox, we all try to develop an app that puts this all together, that creates a win-win-win situation for clients, experts, and brokers. Why? Because a client can earn by copying the best strategies, which means that when they can learn on the go and interact with experts while they can share exactly the same profits as the experts. On another side, the experts can then earn by sharing their strategy, their trading performance, and creating a new revenue stream for their projects. Eventually, I might be a trader that I am profitable. I just don't have the means to, let's say, for example, create an hedge funds. But I do really believe that I have something, I have a talent in myself that I want to share with others, and I want to also make money and create a new revenue line out of it. And also the broker, because what do we want? We want more trading revenue, right? We want more trading activity. We want people to trade more and more and more and to stick with us. And for that, we need to promote a good service to them. We need to make them trade. We need to make them stick with us. And remember, I'm going back to the slide before. 96% of users access social media on their mobile devices. This means that if we can stick our clients, our users, our traders into one app, eventually they will trade more. Eventually they will have access to our product, which is CFDs trading, into our in our app. Now let's look. You know, we can discuss what is the future, what are the trends in these markets, but for us to dig down into that subject, we need to first understand what are the problems we face now and how can we use the social trading aspect of trading to solve those problems. Now, I don't know if any of you has been working in the Forex industry for long. I've been working for more than a decade in financial brokers, in Forex brokers. And I started very young, you know, doing cold calls, like probably many of you. And two of my biggest problems when I was talking with the client, and probably if you are partners or if you have some kind of project related to affiliation, you will also notice this, which is the two biggest objections as a broker or as a partner we face. First of all, what does a client usually say? I don't have time to trade. I don't want to trade. I don't have time. Sorry, don't call me again. Or they'll say that I have no knowledge to trade. I don't want to waste my time learning. But Mr. Client, we can offer you education. Yes, but I don't have time. I'll go back to the other. I don't have time. Sorry. I actually have the risk appetite, but I don't have time. And also, if you look at, so we are in Dubai, for example, I'm from Portugal. A lot of our team in the Infinox is globally divided around the world. And we see that every broker now has exposure to every single part of the world. But we notice that in a lot of countries, there is a huge difficulty for some clients to access trading opportunities, to access, you know, financial products. And I have an example. We brought a partner with us. He came from Botswana, and he was today. We were talking a little bit about this subject, and he was saying, Tiago, it's very difficult for a Botswanan citizen to access the financial markets. It's impossible to go to the bank and say, I want to open an account to buy Apple stock, for example, or to buy an ETF of S&P 500. You can do it, but you will need millions. You will need to open a bank account, then you'll need to fund. It's not cost efficient for that. So on a geosocial point of view, we need to understand that not all clients have the same luck as we do. I'm in Portugal. I have the luck to obviously access the financial markets in a very easy way. If you guys are in Dubai, even easier probably. But a lot of people out there, they don't have the means to access those channels in order to have access to trading solutions. So this is a big problem that we as Infinox, we want to solve. Now, we have to also understand the trends of our markets and not only on our markets, but overall. What are the changes that we are facing nowadays? First of all, we see new users wanting things the easy way, right? I bet a lot of you guys, you didn't take public transportation here. You didn't come by bus or by train. You just simply clicked on a button and you got an Uber. You are in your offices. You don't go downstairs to fetch food. You just get your food out of Uber Eats or any other app. So nowadays, the consumer habits are changing. As a Forex broker, we have to change with that. We have to adapt. Like Bruce Lee said, be water, my friend, right? We have to adapt to the new changes. On the other side, we see the growth of the collaborative economy to stay. And you see the likes of Uber, for example. Why are they making a killing out of it? Airbnb, because of the collaborative economy that exists. If I have a trading strategy, I should be able to allow other people to have access to it, so I can make money